to the post-jobs market reaction. If you strip out Meta, strip out Amazon, was good news truly good news?
How interest rate sensitive really is this market? Meta is in a league of its own.
여러분 안녕하세요. 안녕하세요. 오늘도 뉴스 읽어준 여자입니다. 그리고 오늘도 해외선물 같이 합시다. 주말을 여러분 주말 잘 보내셨어요?
Just a drip feed of further decent information because that wasn't a one-off in terms of an upside surprise. We've had plenty of that over the last few weeks.
전 열심히 쉬고 있었어요. 라고 하고 싶었는데 아니요, 열심히 돈 벌고 있어요.
And then you had other people coming out and saying it actually makes things look worse and more fragile and the potential for a hard
조한 씨 안녕하세요.
Kaiser, good news is good news. He was saying, you know, pop quiz, what do you think it's going to be?
봅시다.
Better, you know, I mean, this you get all sorts of views.
오늘의 나스닥은 네, 엄청 많이 올라갔구나.
Well, Terry Haynes is putting it at 60%, so let's just go with his conviction at the moment, Jonathan. But this
잠깐만,
that the Senate has
17,700원이야?
hearing about for months, trying to see if there's 118
뭐야
billion
이거?
on the top line. Something
왜 이렇게 많이 올라갔어?
60 billion aid for Ukraine, 20 billion for the border.
금요일이 한 17,000.
Now Terry Haynes says it's dead
400-400이었나?
because it's not HR2.
어?
But if they're going to go to
갑자기 왜 이래?
conference and hammer it out, potentially there's something that can get changed in it.
어허.
We talked about it in the previous hour, so let's go back into it. Is this one potentially dead on arrival because it doesn't go far enough, or because the former president wants to run on this issue?
많이 올라갔구나.
Substance versus politics. The issue with the politics that the closer we get to November, Trump will be breathing down these House Republicans next to not do it. NBC poll this weekend: Biden's deficit versus Trump on handling immigration and the border greater than 30 points. This is a huge election issue.
뭐 열심히 여기는 열심히 와리가리 하네.
Look out for that conversation later on Bloomberg Surveillance. Here's the price action for you on the S&P 500. Equity futures negative here by 0.2%, pulling back just a little bit. A lift in the bond market in terms of yield. Treasuries lower, yields up. These are surprising for some, given that we didn't really get new information from Chairman Powell over the weekend, and yet here we are. Yields higher by 7 basis points on a 2-year, up on a 10-year by 6 or 7 basis points.
지수네요. 그러게 말이죠. 그러게 말이죠. 그게 무슨 일일까요?
Certainly after that, the chances were almost de minimis. And then you have a question of, okay, well then what would his response be to concerns that maybe they're getting it a little bit wrong with longer term?
우리는 세상에서 뭐가 벌어지고 있는지 알 필요가 있으니까 잠시만 뉴스 업데이트 하겠습니다.
Alexander Yoakum on fears of another regional banking crisis following last year's stress last spring. Here we go again, maybe.
그리고 사실 오늘 월요일이다 보니까 좀 평범하게 좀 잠잠한 날일 수도 있는데 그래도 어떤 발표가 있는지 한번 봐야겠어요. 왜냐면 조금이라도 영향을 줄 수 있기 때문에 알 필요가 있어요.
Of the S&P 500's capitalization, our forecasts assume that the mega cap 8 will continue to inflate the index's earnings, revenues, profit margin, and valuation. Yardeni joins us now. And let's get straight into it, buddy, and it's great to catch up. The contribution of that handful, those handful of stocks, what has the contribution been so far, Ed, to earnings over the last quarter, the last year?
Well, the mega cap 8, as I like to focus on, accounted for something like 27% currently of the market cap of the S&P 500, 18% of the forward revenues, earnings, earnings, I should say, of the S&P 500, and something in the neighborhood of around 10% of revenues. So they're big.
And the numbers are absolutely huge. Is there any reason to believe this rally broadens out anytime soon?
I think there's lots of reasons to believe that the economy is doing quite well.
준비해봤습니다.
Clearly signaled they're done
보시고 참고하시면 돼요.
And so and of course they're extremely cheap. The S&P 400 and 600 are something like 14, 15 on a forward PE basis. The S&P 500 is 17 and the mega cap 8 are close to 30.
Lori Cavacino is saying when she's got about 60% conviction with all of her calls, increasing her forecast to 5,500 for year-end. On the S&P 500, do you have more conviction
저는
with your calls?
오늘 어떤 포지션을 잡아야 될지는 이 그래프 자체 보니까 좀 아직 너무 많이 애매하고 좀 조금이라도 봐야 될 것 같고 기다려야 되죠.
I don't think I have to at this point. I think I've been an outlier with 400 for this year, and I think I'm still an outlier. I don't know that too many people are talking about next year, but I've certainly signaled that I'm remain bullish through next year.
오늘은 10시 45분에 아니요. 이건 중국 서비스 업체 PMI 발표? 그럼 10시 45분에 맞나요?
I think the pessimists have really been missing one important variable, and that's
아직까요?
productivity numbers during the last 3
11시 45분에 미국 1월 서비스업 PMI 발표가 있네요. 오케이. 11시 15분. 오케이. 11시 15분에 발표가 있으니까 그때쯤 주의하게 해야 되겠죠?
Payroll employment, and when you add in that wages were up 0.6, in nominal terms, wages and salaries seem to be on course to be up only 0.2% during last month. So the number wasn't quite as strong as people thought.
Yeah, and there was plenty of research over the weekend really diving in and questioning just how much the revisions and seasonalities would perhaps.
저 사실은 지난번 주에 지난번 주부터 운빨이 다 떨어졌어요. 운빨이 다 떨어졌고 그리고 한 일주 동안 제가 얼마나 벌었나 한 40만 원? 40만 원 넘기도 40만 원? 더 안 됐을걸? 정확히 기억이 안 나지만 제 말은 지난번에 진짜 고생 많았어요. 고생 많았고 바닥도 봤고 바닥보다는 지옥의 맛을 보고 와 아무튼 지난번에 네 그냥 그만할까? 해외선물 그만할까? 생각 중이었는데 그래도 여러분 아시죠? 해외선물은 되게 위험한 거예요. 왜냐면 중독성이 엄청 많아요. 엄청 크고 12시에 미국 1월 ISM 비제조 PMI 발표 그러니까 총 11시 45분에 그리고 12시 발표가 있으니까 여러분 그때 주의해 주시고
Neil Dutta agrees with you, and I'm sure you've seen his research over at RunMag. This is what he wrote. I see weak growth in total hours worked, but continued solid growth in the economy.
여기 매수로 좀 들어갔어도 괜찮을 텐데 조금이라도 이제 오래 못 갈 것 같은데 계속 이런 바드로 될 듯. 저는 역시 초보자로서 그냥 제 운만 믿고 가려고 했는데 역시 이것만 안 되죠. 공부 열심히 해야죠. 공부 열심히 하고 차트 분석 조금이라도 좀 배워야 될 것 같아요.
Remain above that through the end of the decade. And as you said, unit labor costs have come down. They're down right around 2%, which is highly correlated with the CPI. So things are going really well for the economy.
Going really well for you as well, sir. Appreciate the update, as always. Thank you. Ejiardeni of Yardeni Research, Bramo, S&P 500 price target 5,400 year end, 6,000 year end 25.
He also is talking about the Magnificent Eight or the Mega Cap 8. And what I'm curious about is if his prognostication comes to pass, that it will continue to account for about 25 to 30% of the overall weighting of the index. That alone could drive some of these returns. That, I think, is a controversial thesis
오늘
at a time
시원하게
of lofty valuations, but something that people are considering.
The earnings contribution
시원하게
of those names has been
가볼까요?
phenomenal.
Totally.
Just absolutely
시원하게
phenomenal. Equity futures right now
하늘로
negative by
아니면
0.2%
지옥으로
on the S&P 500.
한
Let's get you an
제대로
update on stories
가볼까요?
elsewhere this morning. Here's your Bloomberg brief with Yahara Hackers. Hey, Yahara.
네, 문제는 제가 너무 위로 하늘로 올라가면 너무 흥분해가지고 마지막에 타이밍을 안 보고 그냥 봅니다 이런 거 하는데 근데 추억을 맛을 볼 때는 그때 기운이 없고 그냥 아무것도 하고 싶지 않고 그냥 이 마이너스 늘어나는 거 그냥 보기만 해요. 그냥 멍 때리고 그냥 마이너스 40만원 마이너스 60만원 재밌네 이런 거 뜨는 건데 밸런스를 좀 잡아야겠다.
Perceived stance on the conflict, as well as its status as one of the most recognized American brands. Fans in Hong Kong expressed disappointment after superstar Lionel Messi was left on the bench for the entirety of the
욕심을
Miami's
내가
4-1
참
friendly win over a Hong Kong team.
이상보다 애매한 타이밍에 라이브를 껴가지고 지금 하기엔 뭐 별 의미가 없을 것 같고 좀 뉴스를 봐야 될 것 같습니다.
Right, but can you imagine paying up big time for those tickets?
I mean, honestly, this seems to be the way that things are going. How long until we get economic reports about, inflation from some of this stuff? I'm just saying.
Didn't we get that with Taylor Swift?
I just think we're going to get it again.
You think we get that from the Super Bowl?
I think that we're going to get that, and I think we're going to get that from the World Cup. Hong Kong officials, the government requested to see him and asked why was he on the bench. This isn't just the fans. You have officials weighing in, being like, what's going on here?
You're blaming the outlook for 2026 CPI on the World Cup.
100%.
Okay, I mean, I don't think you're wrong.
여러분, 오늘 저녁에 뭐
Generate a
먹을까요?
lot of economic activity, inflation on all goods,
In
hotel
New Jersey,
prices.
specifically.
Well, or
왠지
Up next on
생각이
the
없어요.
program, Powell throwing cold water
먹어야
on the March rate
되는지
cut.
뭘 먹고 싶은 건 몰라요. 여자는 다 그렇지 않을까요? 난 몰라요. 그냥 대충 먹어.
Conversation is coming up next.
근데
Live
이거
from New York
어때?
City
뭐
this
피자 어때? 피자는 좀 알았어 뭐 떡볶이 어때? 떡볶이 살쪄. 저도 비슷해요. 저도 그렇게 행동하는 거 좀 자주 했어요. 네. 뉴스 봅시다. 한승 코스피와 지금 떨어지고 있고 니키는 계속 올라가고 있고 니키는 아니겠죠? 나머지 주식 다 올라가고 있고 근데 문제는 나스닥이죠. 나스닥 뭐 계속 올라가고 있죠. 오, 생각보다 많이 올라가네. 금방 떨어질 줄 알았는데. 예스, 나스닥은 1.74% 정도 올라가고 있습니다.
In a multi-trillion-dollar industry, there's a lot of ground to cover. We indeed have a rally. We're talking a lot of dividends. We're talking.
일본 지수는 올라가고 있죠. 엥? 진짜요? 이거는 몰랐는데.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets.
네?
You can answer phrases or ask questions. What do
니키.
you want to know today? Ask a question or
준씨.
visit Search Go to find answers now.
보니까 주원씨 지금도 방송을 좀 늦게 보고 계시는 것 같은데요. 링크를 업데이트 해주세요.
From New York City, equity futures on the S&P 500, just a little bit softer on the S&P. We're down by 0.16%. Yields are higher by 7 basis points, almost 4.1% on a US 10-year. The dollar stronger, the euro 107.52 on that currency pair, negative by 0.3%. Under surveillance this morning, Powell throwing cold water on a March rate cut.
I think it's not likely that this committee will reach that level of confidence in time for the March meeting, which is in 7 weeks. Almost all of the 19 participants who sit around this table believe that it will be appropriate in their most likely case for us to cut the federal funds rate this year. We just want to see more good data along those lines. It doesn't need to be better than what we've seen or even as good. It just needs to be good. And so we do expect to see that.
Here's the latest this morning. Fed Chair Jay Powell saying he doesn't expect to drastically change the central bank's 2024 rate forecast. Fed speak picking up this week with Bostic and Goolsbee today, followed by Mester, Kashgari, Collins and Harker tomorrow. Is that enough for you? Joining us around the table, Sally Krawcheck, the CEO and co-founder of Alavest, a digital financial advisor, joins us now. Hello, Sally. Good to see you.
Good morning.
Let's get into your personal view first. You are bullish, constructive, optimistic almost.
My personal view. So first of all, Alavest Digital
계속
Advisor,
올라가고
yes, wealth management company
있네.
also,
Cool.
funded by,
아,
founded by,
여기서
built by,
매수로
built for
들어갔었으면
investing
딱
for
좋았었을
women. So I'm going to
텐데.
bring the woman's point of view here today.
누가
Yes, I am personally
알았겠어.
bullish. Doesn't particularly matter. But I do think
해외선물
what we
원래
learned, by the way, I
그런
thought
거죠,
watching
뭐.
Jerome Powell last night,
그쵸?
it's hard not to watch that individual and say, boy, I have confidence in him. And yes, maybe it's not March, maybe it's June, maybe it's a little later. But my personal bullishness, I seem to learn again and again, don't fight the Fed. Don't fight the Fed, right? The Fed took on the subprime crisis and won, took on the pandemic and won, took on Silicon Valley Bank and won, tightened last year, 2 years ago.
느낌대로 오는 것이죠. 근데 느낌이 없는데요. 어떻게 하면 좋을까요? 허허.
Okay, so let's talk about that. Is there sort of the similar kind of bullishness underpinning certainly your clients' views, but also some of the asset allocations that you have currently?
Well, when we do our asset allocation, we look at long-term returns that we're expecting, and they're terrific, right? The equity markets, if you go back to the early 1900s, tend to go up about 9.5%, 10% a year. Balanced portfolio of 6%.
계속 합범이 나오네.
It compounds.
너무 추워서 그런가? 아니면 집에 환기 좀 해야겠나? 해야 될 것 같은데.
But the great thing about these women is they also stay the course. We've seen the research, and we now are seeing it proven at Alavest that they don't freak out when markets are tough. They really stay the course, and as a result, women outperform men when they invest. And that's true at the professional level as well as at the individual level.
Just dealing with the next sort of year before we get to the long-term view and some of what you're talking about, as someone who has been very powerful in a number of banks, I'm wondering how concerned you are just about credit creation.
이불이 있으니까.
Rates are going to come down. But there's a real question, especially with certain constraints on bank balance sheets, commercial real estate, how much some of these firms can keep lending. Does that sort of keep you up at night at all?
Well,
이것도 컨셉일 수도 있어요. 그냥 라이브 끼고 자는 거.
The shoe that dropped, that the impact of rising interest rates on these banks, and particularly the regional banks, has been felt.
오, 왠지 들어질 것 같은데. 어떻게 생각하세요?
Certainly every day that passes and something doesn't happen is a bullish signal.
As somebody though has understood just the long and variable lags,
조금 기다리다가 괜찮다 싶으면 매도로 가도 될 것 같아요.
We're not. I mean, again, at Alavest, we invest for the longer term, not for these shifts and tactical changes. So we look at
아니야, 또 올라가네. 오늘도 내 말 반대로 하네. 와, 근데 칸이 계속 올라가고 있네.
All of them. All of them. I mean, think about it. You know, when you're
으이구
investing in
다스닥,
the market, you're
으이구
investing
개구쟁이,
in
진짜.
And what these economies have shown is over reasonable periods of time, they tend towards growth, right? And so, you know, we have a diversified portfolio that has access to all of them. Again, what we're seeing that may be different from more typical investing firm is our women tend to be looking for impact. They tend to understand that we are all impact investors, and every dollar we invest or every dollar we spend. And by the way, women are responsible for 80 to 85% of consumer spending. So if we're going to talk about are we going into a recession, it's going to be the women who put us into a recession who keep us out. But what they recognize is their dollar has meaning and their dollar has impact.
그러니까요, 이제 머피녀 돼버렸어. 그러니까 제가 여러분 매도합시다 라고 하면 무조건 매수하세요.
What do you define impact as?
Oh, so many ways we can go at this, right? Whether it's ESG, impact investing, whether it's gender lens investing. You know, what is the dollar not being invested in and what is it being invested in, right? Is it being invested for environmental reasons, whether that's, you know, I want to be out of companies that are going to suffer from global warming, or I want to be in companies that are actually having a positive role in fighting global warming. But it can also be gender lens, right? Is, you know, am I investing in diverse leadership teams? Our women tend to care about that.
와, 쭉쭉쭉 굴러가네.
Political silly season. We're going toward the election, and a lot of some of the impact investing has been highly politicized. How are you feeling? How is that playing out in terms of what counts as impact and sort of how you define some of these things?
Well, you see in New Hampshire, there are folks there who are trying to make impact investing, ESG investing, illegal. And not a little bit illegal, felony illegal, go to jail illegal. Which, you know, hello, I'm not supposed to, as an investor, take governance into account when I'm making an investment. I'm not supposed to take diversity of the leadership team into account. By the way, when the research has shown that diversity in the leadership team can drive superior performance, that there are very few things that you can say, oh, this correlates to a great leadership team for a company, but diversity is one of them. And I'm not supposed to take that into account. So we are indeed heading into sort of a funky moment. But let me tell you, as money goes more and more to women, because we should talk about the great wealth transfer, which is beginning to happen, and women want to invest more for impact, that can be a fundamental shift and a fundamental change.
Have you felt more dissent within the ranks, sort of along political lines?
No, we have not. We hear it from others. Oh my gosh, over here at XYZ investing company, we're getting some backlash against ESG. For us, where, the majority of our clients are women, we are not hearing backlash.
설마 올라가나요?
I don't want to give up the financial return, but I also don't want to give up the impact.
올라가나요?
Sally, it's great to have you with us. Going to stick with us and pleased to say thank you. Sally Krawczyk, sticking with us. If you are just joining us, your equity market looks like this on the S&P 500, negative by 0.1%. Treasury yields are a little bit higher through the curve. The 2-year out to the 30-year. The 10-year right now is high by 6 or 7 basis points.
아이고야, 또 올라가네.
On message, Elisa. A repeat of the message from
아이고야, 매수로 들어가야겠다.
after the payrolls Friday story.
Especially because some people had sort of dismissed it as an off-the-cuff, response to a reporter saying, yeah, March doesn't seem likely, rather than something that was in the statement. Something else that he said, it was a pretty wide-ranging conversation, including the deficit. And he was saying it was not sustainable, and he was talking about that. I thought he was very sort of political without being political.
Did he comment on European politics in the same way that the ECB president commented on US politics, no?
Extensive discussion of Olaf Scholz. No, he didn't do that.
I sensed he might not go there. Coming up in just a moment, the brilliant Subhadra Jaffa, the head of US rate strategy at SocGen, on the Fed's rate cut path from here. It feels like we got a dose of ice-cold water from Chairman Powell on the
매도록 가볼게요.
And based on what we've heard, Lisa, so far from Bank of America, was it Goldman too, and Barclays, all three who are looking for March rate cuts, has to push back those calls deeper into the year.
발표 시작하기 전에 좀 모아야겠다.
18% chance of a March rate cut, which I guess is only 18% chance just in case something
설마 오늘도 먹비녀냐? 먹비녀냐? 이게 뭐야? 먹비녀냐? 무슨 단어가 이래? 근데 귀여운데? 먹비녀냐?
What would it take to get the rate hike calls going again? I imagine a few more prints like the one we...
Discover the best gift of the year.
봅시다. 반대로 할 건지, 제대로 할 건지. 뭐가 망가져? 뭐가 망가져? 멘탈? 네. 멘탈이 좀 나갔죠. 멘탈이 오래전부터 망가졌네요. 좀 나쁘지 않은 듯. 분위기가 망가지는 법이냐. 이 분위기, 이 이미지 좀 망가졌으면 좋겠는 하는데, 근데 오래 못 갈 것 같은데. 조금 기다리다가 빼야 될 것 같아. 어메. 아이고, 무서워라. 안 뺄게. 어디 가나?
Sports networks. There's a lot of the business that seems to be collapsing. Leagues have sort of toyed around with, we do something ourselves. Some teams are doing like local TV streaming. How do you see that shape?
이 녀석 봐라. 내 말 안 들어가네.
My instincts keep telling me this is what's going to happen. Because do you remember the WWE? They launched their own network that had their own content, had their own pay-per-views, and it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to Peacock. And that was really smart too because they were able to leverage that number as high as possible. So they always act where the money was and the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that for themselves.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
The technology.
기다려.
Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
나갈.
From New York City, kicking off a brand new
일단
trading week.
소심하게
Market pulling
팔까요?
back just a little bit on the S&P 500, down a touch by 0.16% after 4 weeks of gains on the S&P. And Lisa, after closing at all-time highs on Friday.
소심하게.
Narrow leadership with one leadership, one name, Meta, which accounted
조금
for a
있다가 다시
significant portion of the
기다려보고.
overall gain. And that's all I can say is that at a certain point we have to look at the broadening out, or do we? Or can this sort of be sustainable for the longer term?
This goes back to what you and I have talked about all morning. Did that distort the story around good news being good news for the equity market? You strip it all out and look at the Russell, the small caps, not so good.
73% down on the day, so it doesn't seem like it's necessarily, lifting tides lift all boats, considering the fact that these smaller boats are not being lifted. When does that change? I don't know. Honestly, anyone who's coming with conviction, I don't know, they should check with Lori Calvasina. She'll say you should put 60% on that.
Laurie's one of the best. Let's switch up the board and get to the bond market. 2-year, 10-year, 30-year. Treasuries look like this. How much conviction have you got on this right now? Yields up by 7 basis points. 4.46 on a 2-year.
또 떨어지네.
4% again, up 6 or 7 basis points.
역시.
4.0886% on a 10-year. If you push this
먹히냐?
through foreign exchange, you do have a move in the FX market. The dollar's stronger. The euro's weaker here. The euro, 107.57. Lisa, that's a break of 108 in the last couple of sessions.
I mean, what we're talking about here is divergence, ongoing divergence with the U.S. economy being stronger and the European region being weaker. But now there's a real question of whether the ECB will have to cut rates before the Fed. We were discounting that before. It's kind of coming back to the fore.
Yeah, the jobs data in Europe does not look like the jobs data in America, based on what we saw on Friday. That's the price action. Under surveillance this morning, Iranian-backed Houthi rebels vowing to respond to US and British-led airstrikes over the weekend.
그러니까
The strikes targeting 13 locations in Yemen were part of an effort to end the military
그래도 마이너스
attacks on commercial
아니에요.
ships at the Red Sea. It was the biggest barrage since the original Allied attacks on January 11th. MH, what is different about these attacks and what does it change?
Well, there's more of them, and as we spoke to Norman Rule about, it's the fact that they're trying to degrade Iranian proxies' ability. But I was struck by Jake Sullivan's tone over the weekend. In one way, he said there's going to be this sustained response, but at the same time, it's not going to be an open-ended military campaign. So the White House is really trying to walk this line of responding, although Norm Rule said it was more of a defense, but they want to respond, but they don't want the conflict to spread.
The surprise for all of us around the table is waking up again on a Monday morning after strikes over the weekend, looking at crude and seeing it down. WTI and Brent this morning.
Again, I continue to wonder where oil prices would be if there was no hostilities right now in the Middle East. How low would oil prices actually be? Because you know some investors are obviously pricing in risk, given how important the Gulf of Aden and the Red Sea is.
Elisa, it's kind of amazing. 72 on WTI. Brent crude, 77. This has been going on now for more than 3 months.
Okay, not to quote you, but to quote you, does price sort of determine narrative? And that's what I keep wondering, because how many stories have we been reading about how actually OPEC Plus is supplying more oil than previously thought, demand isn't quite as great, the U.S. is pumping more, it's just the supply-driven story. All of a sudden we get a little more conflict, all of a sudden it's going to be a real issue. So I do wonder how much it's just people not betting on something that hasn't played out every time there's geopolitical risk. Also, Saudi Arabia has a capacity for 12 million barrels a day. They're at 9. So if something were to happen, the market knows they're ready to turn on the taps, and they actually can. They're not like some countries that it takes a while to ramp up. Saudi Arabia wants to turn on the taps, they can do it pretty quickly.
There's a big cushion there. Let's turn to the next story. Anne-Marie, busy weekend on Capitol Hill. On Saturday, the House unveiling a standalone $17 billion Israel aid package without any support for Ukraine. Speaker Mike Johnson saying the US needs to get aid to Israel quickly, and there is no time to consider a package combining aid to Ukraine and Israel with US border security provisions. The Senate, however, reaching a $118 billion bipartisan deal on Ukraine, and that includes $20 billion for border security. Each chamber expecting to vote on their bill this week. Anne-Marie, what goes through, what doesn't, and what is dead on arrival?
I think a lot of this doesn't go through as is. So put the Israel standalone bill to one side. First off, the House Freedom Caucus comes out and says it's not paid for, so we don't want it. Democrats are going to say we likely want something more encompassing. Look what the Senate's doing. But I go back to what Terry Haynes says, 60% chance you have this broader supplemental that goes through. And when you say to him, but Speaker Johnson says this is dead on arrival, he says that current bill is dead on arrival because the House want to flex their HR 2. They want remain in Mexico. But at some point, this is going to go down to a conference, and there is potential. But of course, we know potentially the politics make it a little bit more complicated.
That's the latest in Washington. If you're flying this morning, turn down the volume. You done that? Okay. Boeing shares falling in the pre-market. The company
좀
announcing it
벌었어요.
found more mistakes
3만원?
with holes drilled in the fuselage
친구한테도
of its 737
사야겠다.
Max jet.
커피.
It's the latest in a string of
괜찮네.
manufacturing lapses at Boeing, including the panel blowout on an Alaska
지타임
Airlines 737
가시죠.
Max last month.
지타임
The FAA
엄청
has stepped up
좋아요.
scrutiny of Boeing's
지금
manufacturing and supply
9시
systems. FAA
35분이니까 한
Michael Whitaker is
5분,
scheduled to testify on
50분,
Capitol Hill on the
55분쯤
Boeing
다시
blowout
올게요.
tomorrow. Lisa, how many times have
여러분
we said
제가
this? The more
없는
information you get
동안
about what's
계속
going on with
자태
Boeing,
열심히
the more disturbing it
보시고
becomes.
네,
We don't want to
혹시
hear about bolts.
지금이다 다이민이 괜찮으면 저한테 알려주세요. 저 바로 들어갈게요. 이따 뵐게요.
You don't want to hear anything about it. Boeing shares are are down 20% so far this year. Just to give you a sense, it's brutal, and it hasn't been good in the previous couple of years either.
And the stock in the pre-market not doing great either. Let's finish on this story. Futures pricing in 5 Fed rate cuts this year on the heels of the stronger than expected January payrolls report and Powell's cautious outlook. Subhadra Rajappa of SocGen weighing in, writing this. Our call is still a first rate cut at the May meeting and 150 basis points of cuts for the year. Given the strength in the economy coming into this year, we question the magnitude of cuts priced in. Subhadra, I'm pleased to say, joins us now. Subhadra, good morning.
Good morning.
It's good to see you. What a blowout report on Friday.
Yes.
What did that change for you, if anything at all?
Not a whole lot. I mean, I think that the employment figures tend to be lagging. What I'm looking at is Thursday's initial jobless claims rising ever so slightly, continuing claims going up. So to me, the forward indicators are a lot more important than what happened last year. I mean, of course, everybody knows that we've created 250,000 jobs on average every month last year. The question is about what comes in the data that's coming forth.
Would you put more weight on claims then than on that report on Friday? And how controversial is that, speaking to clients at the moment?
I can't say that I weigh one more than the other. You have to kind of look at the data in aggregate. But to me, the claims data tends to be a leading indicator. So the focus will shift from the headline employment figures to the claims figures going forward.
How much are you going to be listening to Fed speak, and how much did you really pay attention to Powell last night?
I did. I mean, he didn't say anything new that we didn't already know after the press conference. It looks like he's leaning towards a June rate cut as opposed to a May rate cut, which is our call. But the economy's been extraordinarily strong, so they have the luxury of waiting before they start cutting rates. So there's really no rush for the Fed to come in and cut rates soon. But, you know, the risks, especially late in the cycle, are always biased towards cutting sooner rather than later. I mean, we had these headlines last week on the NYCB Bank. So the focus is going to be on what is the next shoe to drop. And under the circumstances, I feel like the Fed is locked and loaded to cut rates if needed.
I feel like Ed Yardeni and Subhadra Rajappa are looking at two completely different economies. We've got Ed Yardeni saying that you're kind of at early cycle. We heard the same thing from Lori Calvasina, and you were saying we're kind of late cycle. Which is it?
You know, there are no clear signs as it stands that a recession is imminent. The data, generally speaking, has been extraordinarily positive. We are not seeing the kinds of circumstances that you would generally see for a rate cut. But, you know, things could change very soon. And that's really what we're looking at, is we could potentially see the Fed coming in and cutting rates even to orchestrate a soft landing. So, you know, it's not an environment where the Fed won't cut rates. It's a question of magnitude. And perhaps the market is overpricing the number of cuts for this year. So maybe they don't deliver 150 basis points of cuts. A 90s-style environment where they cut a few times, but not really a full-fledged rate cut cycle, is an underpriced risk.
There is also a question about the longer-term inflation outlook and whether this is a Federal Reserve more accepting of higher inflation for longer. How much are you starting to bake that into your expectations for yields of the longer term?
So the yields for the longer term, you know, at least in my view, are not so much at this point led by our views on inflation, but led mostly by the supply-demand outlook. And that's really where I think it gets a little bit interesting, because once we get past the middle of the year, I mean, the debt and deficits picture is still here to stay. If the Fed does cut rates, I think that there's a potential for the yield curve to steepen and for 10-year yields to actually start experiencing a little bit of pressure and term premium starting to build up. Because, you know, as you guys were talking about, I mean, there's more issuance to come down the pike. There's not really much willingness on either party to reduce the amount of work on deficits or deficit reduction or spending cuts. So in that sort of circumstance, I see that the supply is going to continue to weigh on the long end of the Treasury yield curve.
Sally, I'm curious from your perspective how you're factoring that into some of your calls longer term. If inflation or even if term premia are higher, how that changes the balance and what diversification means.
Yeah. You know, we believe in diversification regardless of, you know, if there's inflation, we tend to be more in the equities. The equities can tend to do well when you've got inflation. which, you know, when we're looking out to investing for our clients 10 years, 20 years, 30 years, you know, getting them to the, you know, where they need to be on retirement, where, you know, we feel good about it.
So at this point, are you sort of mapping out longer term that it's going to be inflation, or that it's going to be, as Subhadra was saying, risk premia as a result of what we see with the deficit?
We tend to go more to the risk premia side as opposed to the inflation side. And in fact, you know, inflation is not down to the 2% yet, but it's on its way, you know, and I think there can be a call that, you know, we can look back at this from next year and say, yeah, inflation actually was a little transitory, wasn't it, as it turned out. And I think, I don't know how you feel, I feel like the Fed has been doing a pretty terrific job navigating through this.
Yeah, I mean, this has been an extraordinary year or two, and I think that the Fed's done an exceptional job. And now it's time to pull back on accommodation, and I think that they're ready to do that as well.
Yeah. Subhadra, what do you make of what happened with the banks last week? Should that be on our radar, or can we discount that? Can we ignore that based on how it was dealt with last year?
Yeah, I think we should not pay nearly as much attention, but I'm always looking for the next shoe to drop this late in the cycle, right? So it is one of the many metrics that we look at. I mean, commercial real estate has been coming under a lot of pressure, and the sooner the Fed moves rates lower, I think it's better for bank portfolios, broadly speaking, because of unrealized losses.
Yeah. So what I would say, I think the Fed has done a terrific job with interest rates. Where they did drop the ball for a period of time was around bank regulation, bank supervision with SVB. And it now feels like it's in the background, and whew, that was scary for a second. But they've admitted dropping the ball, and I think now I think we can take some comfort that they should be and are all over the banks with regards to this. But, you know, things you don't love are the words bank and bear market.
Yeah.
In the same sentence. And we know we're going to be fine when rates are higher. It's not when rates are high, it's the getting from, you know, low rates to high rates that really have killed them.
Well said. Sally, it's good to see you. Thanks for being with us. Sally Krawcheck there of Alivest, together with the brilliant Subhadra Japa of SocGen.
I didn't get brilliant?
You can give a brilliant as well. On a brilliant.
By the way,
sort of smart.
Let's
Everyone
rewind.
who does this and he gives one guest a brilliant.
Mohammed Al-Arian got jealous about that, didn't he?
Mohammed so you're in good
sore
company.
about that too. We'll do it again. The brilliant Sally Krawcheck, the brilliant Subhadra Japa. Better? Good. All right, let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hi, John. Shares of Estee Lauder surging this morning after the company announced plans to lay off as much as 5% of its workforce. Sales and profits at the company have declined in the past year due to plummeting sales at duty-free shops and airports and softening demand out of Asia. The company also cut its adjusted earnings per share outlook for the year ahead. Shares of Caterpillar on the rise after the company reported higher sales in its energy and transportation business last quarter that helped the company post profit that beat estimates. The machinery maker is seen as an economic bellwether. Its better than expected earnings providing further evidence of the resilient U.S. economy. Chipotle is getting ready for its so-called burrito season. The company announced it will hire 19,000 workers over the next month in preparation for an annual surge of burrito consumption. March through May is Chipotle's busiest time of the year, with a nearly 20% increase in burrito sales. That's your Bloomberg Brief. John?
Yahara, thank you. Thank you very much. Up next on the program, regional banks in the spotlight.
I certainly think there are other smaller regional banks that are also probably under-reserved. So this is probably not the first piece of bad news that we could get, on the regional banking sector.
That's coming up next, live from New York City. You're watching Bloomberg TV.
Have you thought maybe I should go do something else? I can't do anything better than I'm already doing. I already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep winning World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
0.13% on the S&P 500, yields higher by 8 basis points, inching towards, and there it is, 4.1% on a US 10-year. Under surveillance this morning, regional banks back in the spotlight.
I certainly think there are other smaller regional banks that are also probably under-reserved. So this is probably not the first piece of bad news that we could get. On the regional banking sector. I mean, so I think you have to be cognizant of those kind of risks. We know that there's a recession happening within the CRE market, within the office market, but it's just the question of the kind of broader spillovers into the economy, which we think will be manageable.
Here's the latest this morning. Concerns about another regional bank crisis looming after New York Community Bank Corp reported a loss tied to deteriorating credit quality. Alexander Yoakum, Senior Equity Research Analyst at CFRA, writing this. This collapse was relatively unique to NYCB. However, we still expect the regional bank group to feel the fallout of NYCB's tough quarter, and we expect banks to respond with continued reserve builds. Alexander, I'm pleased to say, joins us for more. Alex, good morning to you. Let's start with the uniqueness of this institution first and build from there. How unique and, dare I say, idiosyncratic are the issues that this particular bank faced in the last quarter?
Yeah, thank you for having me on. I just want to set the stage first. If you think about last year, it was definitely the deposit story, right? Yeah. It was all about which banks have uninsured deposits, right? Are they leaving the bank? Can banks sort of maintain deposit funding costs, that type of deal? We think this year, 2024, will be the year of credit quality. Right? And with NYCB, they have 60% of their loans in commercial real estate / multifamily versus a typical regional bank about 30%. And then the top 10, it's much less than that. Right? So definitely unique in terms of their exposure to commercial real estate. They were also far less reserved. Right? So the amount of money they had set aside for bad loans was far less than the typical bank. Right? We're talking like 50% less. Now, I'm sure they would have argued that that's because their credit quality was better. But then the fourth quarter, when we saw the credit quality get a lot worse, all of a sudden, you start asking questions, right? So that was bad as well. And then in terms of capital levels, they were actually the least capital. They had the lowest capital levels in our entire portfolio. So under-reserved, undercapitalized, and their credit quality just got worse with extra commercial real estate exposures.
When we speak to individual banks, and we spoke to a couple of CEOs last week, the response that we got was basically, our book is okay, don't know about everybody else. That seems to be the response we get all the time to commercial real estate. Is there something specific about the regions some of these regional banks are in? Are some regions worse than others?
Yes, but it's worth pointing out that they really only had 2 loans go bad, right? So if you have 1 or 2 loans get bad, all of a sudden you can start freaking out when it's like, well, maybe that was just a one-off, maybe it wasn't. So, what we think is even banks that have strong credit quality, they'll probably still be pressured to raise reserves just in case something happens, right? So NYCB would have argued, we had basically no charge-offs for 4 straight years, right? That's throughout the pandemic, last year, this year, everything was fine, and then all of a sudden, 1 quarter is bad, right? So even banks that are in good position, even banks that maybe, are in better markets than, potentially New York or San Francisco, even those banks we think might face some pressure to raise those reserves.
So let's talk about what actually is happening under the hood. Jay Powell yesterday in the CBS 60 Minutes interview came out and said there's some smaller and regional banks that have concentrated exposures in these areas, namely commercial real estate, that are challenged. We're working with them, he said. This is something we've been aware of, and we're trying to figure out how to maneuver through what he said is expected losses. How do you think that they're working with these banks right now?
Well, I mean, we did see with NYCB, I mean, they were increasing their reserves, slowly, but all of a sudden they increased it substantially, right? And I mean, even multifamily, right? They basically doubled their reserves in a quarter. I mean, you can say, the credit quality is fine, but if you're doubling the reserves, you're either pressured to do that or, you feel like you could have some potential losses down the road.
Can you give us a sense of what number of banks that really could be pressured that you foresee, right? Is this one more? Is this two more? Is this really like going to be 50? Where suddenly we're talking about a whole swath getting kind of excised or merged?
Yeah, so we analyzed the top 30 banks, and basically what you see is any bank above $100 billion in assets outside of NYCB is generally better capitalized, better reserved, and generally has less commercial real estate exposure. So we would expect the pressure to be below that $100 billion in assets, and there might be a little bit of additional pressure with names like Zion, Comerica, First Horizon, as they're the banks that are closest to $100 billion. So now there's talks, if they're going to pass that $100 billion, how would they fare, right? So Zion is a little bit low on reserves, right? Comerica has had securities issues. First Horizon had a deal fall through last year. They were going to get acquired. Right, so all three of these banks have had some issues in the last year and, potentially could face increased scrutiny, and they have high commercial real estate exposure.
So it seems like a great recipe. Here's a question. There's an issue of whether this is systemic risk and something that's going to be potentially torpedoing the global economy or the local economy. And then there's just the issue of valuation. Do you think that valuations have already accounted for what the weakness is that you foresee?
Well, they will unless you get those unexpected charge-offs, right? So generally speaking, the valuations, are depressed, and, banks that don't see increased net charge-offs will probably be good buys, right? We think the regional banks are not all the same. There's a big difference between the strong ones and the weak ones, right? So, the banks that do see unexpected losses, there's going to be issues there. But some of the banks that have high commercial real estate exposure, they've reserved. They have high capital levels, right? It's not all of them, right? So there's definitely a dichotomy there, and there's differences.
Elisa touched on this a little bit. I'll ask this question on behalf of the economists listening to the programme today. Does this hinder the ability of regional banks to finance the economy? Do you see them pulling back on lending, tightening lending standards? Is that happening?
Yeah, unfortunately, it is. Banks that are struggling are talking about cutting loan exposure, right? So they're not even going to grow with inflation. They're actually going to have loan balances that fall, right? That includes NYCB. Another name like KeyCorp that struggled. We wouldn't be surprised if their loans went negative last year in terms of growth rates. So it does hinder them, and especially if you're asked to increase capital, right? It's a difficult time to be kind of increasing those loans.
Is this where these issues can become somewhat self-fulfilling? Because that starts to hurt the economy starts to roll over, that starts to hurt valuations, and then the loans don't get repaid in quite the same way. People can't acquire new property, you don't get that demand, then you start to get prices hit again. Does this become self-fulfilling? Are we starting that process?
Yeah, it can be. I mean, definitely with banks, there's more self-fulfilling prophecy, right? With a different type of company, if the price falls, that's usually like a good buying opportunity, right? As long as the fundamentals hold up. But with banks, it's all about the trust, and, people are just less likely to want to deal with these banks. I mean, they've talked about, potentially, being, more cautious. And yeah, I would agree.
I made that sound really gloomy, and I didn't mean to. Alexander, thank you. Alexander Yoakum of CFRA.
I was thinking that.
Starting to sound like Bramo. Sorry. Lisa, go.
I was kind of getting excited. You're talking about this sort of doom loop. After all these people talking about the roaring 20s.
This was the worry of last spring, though, right?
I know, which is sort of shocking that people aren't worried about it, because now they think either it's baked in or accounted for, and some of the other credit creation will overcome it. I think that's an open question. I mean, really, if you think about this financing the bulk of small businesses, maybe that explains why the Russell 2000 is lagging behind so much.
And I go back what Barry Sternlicht said, 1.2 trillion of these assets are tied up somewhere that they're going to come home to roost.
And everyone says it's not our problem, it's theirs. You hear that on repeat, don't you?
Yeah, and so the question is, who is it? And I keep going back. Jay Powell really addressed this, and he really acknowledged the fact there are going to be losses. This is yesterday, and saying they're working with them. how are they working with them? Are they overseeing them? Are you just saying, you know, how do you just adjust some of the regulation to hide some of the problems long enough to work through them?
Well, was last year a failure of regulation or oversight? I think a lot of people would say it was oversight and not regulation, right?
That's what a lot of people will say.
Which is why in Washington, D.C., you see a lot of people pushing back on these regulations, and the bank CEOs are coming in and saying, we expect them to be watered down.
It's kind of an odd situation, isn't it? You're going to get the small banks, the regional banks pulling back on lending, tightening lending standards at a time we're talking about an economy that's not going into recession and the Fed has to stay on hold for longer. This is why some people say, you know, Andrew Hollenhorst of Citi asking a question after the payrolls report came out on Friday, soft landing, what soft landing? The more this stuff becomes delayed, ultimately, the harder it becomes to land that plane softly. This economy with no recession in the next year.
If you don't have recession, can you get ongoing disinflation?
Right.
And that is still the underlying question.
뭐
And I will just say this,
역시
even with regional
여러분
banks having those issues,
제가 없는
shadow
동안
bankers can come to
그다지
the
재밌는
equation,
거
right?
별로
And thinking about
없었어요.
commercial, some of the auto
되게
loans and others that have
잔잔한 바도
migrated. I
같아요.
mean, it's not like it's going to be a complete removal of credit altogether.
Plenty of questions for the next hour on Bloomberg
어,
TV.
여보,
Coming up,
여기
Bank of America's Savita
들어갔어도
Subramanian,
한
Henrietta Trays of Veda
만 원?
Partners,
2만 원?
Life's Francis Donald,
벌었을걸?
and Nadia Martin-Wigan of Svelland Capital. All of that and a whole lot more in your equity market right now. Pulling back just a touch, we're down 0.1% on the S&P 500.
역시 월요일인
Yields a whole lot higher by 8 basis points
월요일이다.
on the 10-year, 4.1% from New York City this
거죠.
morning. Good morning.
Part of the baby boomer generation, and this generation is
그러니까
now
오늘
increasingly dealing with problems related
뉴스에
to
그
Alzheimer's,
인수에
dementia, and so
대한
forth.
뉴스가 좀
Not particularly
많아요.
my age, but maybe some people my age, even younger. But obviously, in their late 70s, 80s, and 90s, more and more we're reading about Alzheimer's. Is this an epidemic that you can't really do anything about, or is it something we can deal with in some way?
브라보 에버브리지의 15억 달러 인수. 아, 이런 돈이 어떻게 벌을까 진짜. 해외 선물로 안 될걸? 다른 방법을 좀 찾아봐야겠다.
Studying dementia to not just Alzheimer's but other forms of dementia to understand what's driving it. But very interestingly, there's also some research that's taking place, lifestyle research, if you will.
제가 항상 얘기하듯이 해외 선물은 저한테는 그냥 뭐 사소한 취미? 저 지금 취미 생활 하고 있어요. 물론 좀 독특한 취미 보일 수도 있지만 어쩔 수 없어요.
What happened was you were offered a money-losing women's basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah, you know, you got to be smart about this.
와, 사실 진짜 미쳤다. 가격이 너무 많이 올라왔다.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
왠지
Because I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
발표 이후로인가 아니면 시장이 열 때쯤 왠지 매도로 들어가야 될 것 같은데 왜냐면 엄청 많이 올라왔어. 지금 뭐 여기 뭐 불고 있긴 하지만 뭐 사실 이제는 제 말 믿을 필요가 없죠. 왜냐면 제 감은 이제 다 틀렸어요. 그래도 이거 어느 정도 베팅이라고 생각하면 되고 저는 오늘 all in black이에요. 아니요, all in red입니다.
Parliament has to stick to this and has to comply with the debt brake. The debt brake is really a good
좀 재밌는 포지션 같은데? 좀 매도로 한번 들어가 볼까?
Bloomberg, context changes everything.
약간 이전 때까지 좀 떨어지려나?
This is Bloomberg.
아니네. 오히려 더 이길 수 있을 텐데. 오. 허허, 이 녀석 봐라. 아, 아니다. 잘못 들어왔어. 여기 계속 머물고 있을 것 같아.
This means margins off the table. It also means that you are more likely to get the 3 cuts.
어메, 아이씨. 아이씨, 이거 진짜 뭐야? 아니, 여기 계속 머물고 있다가 계속 이렇게 올라가면 어떡해? 아이, 어이가 없어. 아, 진짜. 아니, 진짜. 이게 뭐야? 아, 진짜 어이가 없어. 아, 진짜 빼야겠다, 진짜.
is not too tight, and based on payrolls on Friday, policy is not too tight.
Well, and basically saying that the neutral
rate may have
increased, and this is really one of the key questions of whether maybe we are running at a new normal.
안 할래. 저 이거 빼고 기다릴게요, 그냥.
To keep growing at this pace, even with 5% rate.
야야야야야야. 놓쳤어. 타이밍 놓쳤어. 아이씨.
The timing of the Fed going forward. It still is going to be a matter of assessing the data to get the right mix of when to cut rates.
Are we sufficiently restrictive? At the moment, the Federal Reserve seems to have this risk-friendly start, which is if the economy is doing well, we don't have to hike more. But if it starts to underperform, we can cut.
이상한 녀석이네. 아니야, 안 할게.
Payrolls report, though, if you get a few more like that, just
좀 마이너스 되네. 좀 마이너스 됐네. 진짜 이게 뭔 말이야, 진짜 이거 뭐야?
He is concerned about inflation maybe running hotter than they previously realized, and they've gotten this wrong before. So this really is a sort of question mark. That said, a lot of people looking at the forward-looking kind of claims and things of that nature would show a different picture.
And then you start to get closer and closer to the election.
아니 분명히 약간 좀 떨어질 타이밍이었었는데 갑자기 올라가면 어떡해. 안해 기다릴게요. 괜찮은 타이밍까지 기다릴게요. 이건 지금 너무 애매해요.
If you do get a change from President Biden to President Trump, and President Trump goes into the White House talking about 60% plus tariffs on China, whether you have to really start to recalibrate your outlook for inflation for 25 and beyond.
You absolutely have to recalibrate not just the 60% potential blanket tariffs on China goods, but also this tariff wall the Trump administration 2.0 potentially is talking about of all imported goods. And what does that mean for consumer prices? Well, they're going to skyrocket.
You can't separate this conversation from the price action in Chinese markets right now. I really don't think you can. You're seeing wild swings in Chinese equities, and no doubt that is a big, big issue to anyone investing there.
And let's be clear, it's not because people are gaming out exactly what 60% tariffs would do. It's because uncertainty and ratcheting up of the tensions, which will only increase going into the election. How do you have any conviction in a business plan in China? How do you have any kind of investment plan in Chinese equities? And this, we hear again and again from guest after guest. Is it even what ends up getting put into place, or is it just the suggestion of volatility in policy?
Right. Is this just leverage going into potentially becoming a president and wadding that leverage at the negotiating table? But Goldman Sachs, to your point, Jonathan, is saying that what Trump is talking about is starting to unnerve onshore clients. And they put out a note saying they're very worried about what this might mean.
The number one question right now, so Chinese equities, multi-year lows, US equities, all-time highs. Equity futures on the S&P just pulling back a little bit from those levels. We're down 0.1% on the S&P. Yields are higher by 9 basis points now. Lisa, 4.1136 on a 10-year.
Climbing as people assess the data and the fact that Jay Powell was taking March not off the table, but kind of off the table, even before getting the data on Friday. That's really telling in terms of where the bias is.
2-year, 4.44 51, up 8 basis points at the very front end of the curve. Coming up this hour, here's the lineup for you. Savita Subramaniam of Bank of America weighing in on the Magnificent Seven euphoria. Henrietta Trey's of Vader Partners on the Biden-Trump rematch. And Manulife's Francis Donald on Share Power's great
봐요. 떨어지네. 떨어지는데 타이밍이 좀 왜 그러는 거야?
Head of US equity strategy at B of A.
나 지금 안 들어갈게요.
The idiosyncratic versus
지금 안
macro risk is
들어가고
high. And the Magnificent Seven
또
is not a
이상한 게
monolith. In
꼬일
fact,
수도
this
있으니까.
reductive moniker obscures the companies are behaving very differently from one another. Euphoria is evident for the Magnificent Seven, but nothing else. Savita, I'm pleased to say, joins us around the table. Savita, good morning.
Good morning.
Let's get to that monolith, and thanks for being with us. How different is the performance now in those 7 stocks?
So it's interesting because I feel like even though we all think of the market as being just this one direction, 7 companies leading the charge, the stocks themselves are acting very differently. And if you just measure idiosyncratic risk as like kind of non-market specific risk, we've actually seen a surprising increase in stock-specific risk. So what this means in English is that you can actually make more money picking stocks than just buying the index outright. And that's been our call for a while. I mean, I think what's been a little bit unnerving about this year and the last few months is that we haven't necessarily seen a broadening pattern emerge in the market. We're still seeing leadership pretty decisively in this cohort. But look at what happened after earnings for some of these companies. I mean, these stocks are priced for perfection. Everybody owns them. They're pretty expensive, maybe not as expensive as prior tech bubble levels, but they're relatively healthy in terms of valuations. And I think that what happens from here is a broadening to other areas of the market that aren't necessarily as risky as we think.
We say they're priced to perfection, then they rally another 20% in a single day. It's scratching my head. I just wonder what the takeaway from Friday's price action is.
So you know what I think was interesting is that one of the drivers for that big bump was initiating a dividend. A big growth company initiating a dividend. And I think that's a really important signal because our call is that we're at a point where the next leg higher in equities is likely to be retirees maybe moving out of cash back into riskier sources of yield. Of course, this was predicated on the idea that the Fed was going to start cutting interest rates, which obviously is a bigger question today when that happens, how much, how soon. But I do think that the idea of this wall of cash sitting there in money market and short duration bonds that's earning 5%, if that starts to come down, or if you start to see equity yields come up like we are in certain parts of the market, I think that could be the value proposition for equities again. It's kind of like TINA 2.0.
TINA 2.0 happens when rates start getting cut.
Yeah.
And the economy keeps chugging along.
Exactly.
How much does it shift your thesis if the rate cuts don't happen as soon as deeply as the market's currently expecting?
Yeah, so I mean, I think this is a slow evolution, but I mean, I guess I don't think you have to wait for the Fed to actually cut interest rates to think about equity yield. Because think about what's happening right now. The reason that the Fed might not cut is because of inflation.
여기서 안 올라갈 것 같은데?
How do you want to protect against inflation?
왜냐면 지금 정도면 가격이 너무 높지 않을까요? 거의
So that I think it becomes the name of the game again. And
제가 나스닥 하는 건 거의 최고 금액이 아닐까? 그 정도예요.
High dividend yielding stocks were one of the best places to be in 2023's bear market.
So why is it not working yet?
Or 2022.
저도 왠지 떨어질 것 같은데 타이밍을 몰라요. 타이밍을 몰라서
It is diversification now away from the Magnificent Seven to the Magnificent Two in Meta and Nvidia, basically, this year. I mean, how much do you start to question the thesis if it's not being borne out now?
Well, I mean, I think that the reaction to, typically if you think about a big growth company initiating a dividend, a tech company initiating a dividend, that would be anathema. But I think investors want that. They want to see companies have capital discipline. They want to see companies returning cash. They want to see these big growth behemoths actually give us back a little bit of money.
Financials. You were overweight financials. You still overweight the banks.
Still overweight the banks, yes.
What is it you like about that sector?
I think that there's still this underappreciated aspect with large cap banks that has yet to be recognized by the market. And that's the idea that when you look at the underlying earnings trends of large regulated companies, they're actually relatively healthy. These are well-capitalized companies. Dividend preservation is not necessarily at risk like it is for some of the regionals. I think we're at a point where the regulatory environment is likely to flatline from here, not get any worse for at least the big guys, and I think that that's a positive. I mean, if you think about inflation-protected yield, again, I think of financials as a good source of it.
The emphasis was on the big guys.
Yeah,
I think we all noticed that.
Small.
What's going on with the smaller guys?
So I think it's too soon, especially if we're not in an all clear.
중요한 건 사람의 심리인데, 근데 왠지 다들 나랑 똑같은 생각하고 있어서 제가 지금 좀 반대할까? 그렇게 생각하는 사람들이 엄청 많아요. 이런 심리 게임에서 이길 수 있는 확률이 별로 없어요.
A lot of that attrition and that sort of pain is happening in the smaller benchmark rather than the larger benchmark.
Energy. We heard from Lori Calvasino as a hedge against inflation. Is it still a hedge against inflation, or does it just hold a whole host of other risks?
I think energy is an interesting sector, and from the risk perspective, my sense is that a lot of those risks are priced in at this point. If you think about it, these companies are no longer just extracting oil from the ground, you know, at the least provocation of a price hike in oil prices. They've got discipline around production, which means the supply is going to be constrained, which means earnings are going to be less volatile. I think this is a sector that plays a role in getting to net zero if we ever do. And it also is a source of really healthy yield. And the companies have told us they are laser focused on preserving cash return rather than, you know, production targets. I think that's the big sea change in the energy sector, is that these companies now have discipline. It's very different from prior to 2017.
It's been a massive change. 72 on WTI, by the way. Brent crude at 77.21. Savita is going to be sticking with us, I'm pleased to say. Not to talk about US politics, but a bit of US policy in a mix. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hi, John. China is trying to fight a deepening stock market plunge by tightening trading restrictions on domestic institutional investors and some offshore units, according to Bloomberg sources. The country is trying to stabilize markets after shares sank to a 5-year low in trading on Friday, with the CSI 300 index down 4% since the start of last week. And Boeing lower in pre-market trading after the aircraft maker revealed it found more issues with holes drilled in the fuselage of its 737 MAX jets. The latest problem originated with a supplier. It will require repairs on about 50 undelivered jets and may delay plane deliveries in the near term. The defect follows a string of manufacturing issues at Boeing, prompting the FAA to step up scrutiny of the company. McDonald's fourth quarter sales missed investor estimates as growth slowed, hurt in part by the war in the Middle East. Same-store sales rose 3.4% in the period, marking the slowest rate since 2020. McDonald's became a target for boycotts after the war between Israel and Hamas broke out over its perceived stance on the conflict,
점점 떨어지고 있는데 이게 도대체 뭘까요? 여러분 어디 들어가야 되나요?
The more I think about it, the more nuts it is.
It's absolutely nuts that a $50 billion set aside for additional dividend added $200 billion in one day to the market capitalization of the company.
And that dividend too, as Savita pointed out, important stuff. Equity futures more broadly down about 0.1% on the S&P this morning. Up next, President Biden hitting the campaign trail.
This is not just a campaign. This is more of a mission. We cannot lose this campaign for the good of the country. And I mean that from the bottom of my heart.
That's coming up next on the program, live from New York.
네, 기다려야죠. 오호, 좀 올라가네.
On the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
A little more than 1 hour away from the opening bell. Monday morning, good morning to you. Equity futures on the S&P 500 negative by 0.15%. Yields up by 9 basis points. Do I seem over it already? Is that why you were laughing?
Yes, because you just sighed it out.
Monday?
It's Monday again. Here we are.
Here we go again.
Gonna do this again?
At the surveillance this morning, President Biden hitting the campaign trail.
The guy we're running against, he's not for anything. He's against everything.
아니면 사실 반복 이런 반복일 수도 있어요. 그냥 숏으로 들어가고 그냥 쭉 기다리는 거. 왜냐면 왠지
Biden feels the same way.
왠지 계속 떨어질 것 같은데 일단
Donald Trump by over 20 points on major policy issues, including the economy. Henrietta Trey's Aveda partners saying the president can make a comeback, writing this: Biden's low standing will rise as Democrats and independent leading Democrats acknowledge he will be the nominee. Voter sentiment on the state of the economy will begin to improve, which may provide a double benefit for Biden as the incumbent president. Henrietta, I'm pleased to say, joins us now for more. Henrietta, let's get into your base case first, and as always, fantastic to catch up with you. You've got Biden winning the White House, and I believe you've got the GOP winning the Senate. So the first thing we were going to last week is the swing state polling we did at Bloomberg here with
근데 신기한 거는
and the president's behind Trump in all 7 key swing states.
다른 유튜버 분들이 나랑 완전 반대인데 거의 다 대부분 지금 매수 하고 있는데
You want to skate to where the puck is going with polling data, and your poll out of the 7 swing states was phenomenally informative in that you're starting to see voters come off the bench
아직까진 제 느낌을 믿을게요. 아직까지는 신뢰를 다 잃어버리지 않았기 때문에 조금이라도 제 감을 믿어볼게요. 그러니까 일단은 숏으로 들어가고 쭉 이 포지션을 유지하려고요. 궁금하시면 결과를 이따가 보시죠.
Because it's not predictive before Super Tuesday. On Super Tuesday, it starts to get about a third more predictive, and then that increases by a third again in June, July, and then that final third in October. And so what you saw from the Democratic Party over the weekend was a substantial ad buy that I think lends credence to my thesis here, that there's going to be a tremendous amount of campaigning and activity to get those final sway voters in the August, September, October period, which is when they bought, I want to say, something like $200 million worth of ads
for that period in the swing states. So your polling and many others suggest that there is a tremendous amount of not apprehension so much as just unwillingness for Democrats to say, okay, Biden is our candidate. Now, we do have the conflicting data set of South Carolina yesterday, which went 96% for Biden. That's not confusing.
네, 감사합니다.
There's no lack of clarity there. That's a resounding victory, as his competitors pointed out themselves. So I think what the polling is showing us right now is that there is a segment of the population that's larger for Democrats and independents, that's undecided, and most of the room to gain stands with Biden, as a lot of the Republican voters
지금처럼 이렇게 조금 올라가는 거 괜찮은 것
Henrietta, a lot of
같아.
the polling also shows that this is just a rematch Americans do not want to see. What do you make of some of these third-party
큰 그림을
candidates?
봤을
Look
때
at Gallup polling, and RFK has a
벌어질
50%
듯.
favorability. Where does he draw from? Trump voters or Biden voters?
Well, I think some of that you'll see from the age demographics and the white versus black versus other minorities makeup. Those voters, I think, are also trying to send a message, which is very much akin to what we saw, I think, almost with Bernie Sanders. Not that the two of them are the same kind of candidate, but there's a holdout vote that's saying, look, I want to push the party in a different direction. Whether that's Republicans trying to muddle the field for Biden, or Democrats saying, hey, look, I want a more progressive candidate. Joe Biden has tacked more towards the middle recently, and there was profound resentment with things like the Bipartisan Infrastructure Act. If you'll remember that from 2 years back, when you had sort of a standoff between progressives and the establishment of the Democratic Party. So I see a tremendous amount of corollary between the 2020 election and this one. And in fact, if you layer on top of that any amalgamation of data from 6 months of polling, you'll see that that same skew of voters who is hoping for someone else and isn't willing yet to come home to Biden are saying that they go for RFK, Marianne Williamson, Dean Phillips, those other candidates. And eventually what happens is they realize that there is one party nominee. We are, for better or worse, a two-party system in America. There is no scenario where a third-party late entrant or unicorn candidate comes into this race. And I think a lot of the polling is still suggesting that that's possible, which is fine. And that's within Americans' rights to say they want to wait. But usually that starts to diminish on Super Tuesday, which is March 5th.
Our polling shows that as the economy is getting better, immigration is becoming more of an important issue. Of course, you know that the Senate last night finally released the text of the supplemental. Do you think that there will be a chance that this deal will actually be reached? Terry Haynes is putting it at 60% probability. I'd love to know your percentage.
No, with all due respect to Terry Haynes, I think 60% is inordinately high. I do think that you could get piecemeal buckets of spending on Ukraine and Israel as we have the continuing resolutions and the risks of government shutdowns for the next couple of months. But there is a tremendous amount of disconnect on the street right now about this bill and also the tax bill that I would just reference briefly. That's a $78 billion tax package that I think has a lot of political similarities to the border and Ukraine aid package. It's something that is absolutely a win for every sitting member of Congress. All of them on the House side are up, and
방향성이 맞는 것
Democrats are up in
같기도
the Senate.
하고
And the reality is I don't think you're going to see either of those bills. Definitely not the tax bill. It's just a huge political
갑자기
boon
올라갈
to
수도
the
있으니까
incumbent for both of these projects. And that's
방심하면
why
안 돼.
former President Donald Trump has come out so forcefully against it. And the Republican candidates in the House, the Republican members are lambasting it really before they even saw text. There's misinformation out there. You know, I don't see this bill passing the House.
We spend so much time talking about these things that just never get done.
So exciting.
Lisa, every single time. Henrietta, thank you. Just awesome as always. Henrietta Trace there, Aveda Partners.
But exactly to that point, how do you strip out the noise from the signal, especially from a market's perspective? And Savita, I do want to get your thought on that. What do you pay attention to that's actually market moving versus just what we always get, which is the reason why everyone tunes it out?
Right, the narrative. So, I mean, I think what's interesting is if you look at the data, there is one unequivocal statement I can make with total confidence. Nobody is betting on a cyclical recovery when it comes to professional investors. And when you look at the average hedge fund, mutual fund, even the average individual investor, what do we own? We don't own energy or financials or high beta.
아, 가격이 좀 풀어줘야 되는데 이제
the
중마.
lowest level we've seen since the financial crisis. I mean, I think that's what's interesting is that despite the fact that the economy seems to be running maybe too hot, there is no bid on that theory.
I remember all of our conversations, and I remember the one coming out of 22 into 23, and you said the biggest risk was upside risk to equities.
Yeah.
Let's put price targets to one side. Let's talk about risks right now. What is the biggest risk there?
So I think the biggest risk to the S&P 500
산타클로스인 줄 호호호호 올라가고 있네. 호호호.
is probably too low in the near term, but I do think that
아니야,
the reason
기다려,
we're not
기다려.
as optimistic on stocks today is that we
강아지
have seen this
기다려.
percolating positive sentiment, especially around the Magnificent Seven, which is the area of abject euphoria. So I think that area of the market is at risk, but I do see this lack of real conviction in stocks outperforming bonds. I still think that stocks, then cash, then bonds. That's the lineup you want to have.
That's the hierarchy. Interesting. Savita, good to see you, as always.
Great to see you.
Great to see you here in the studio. Savita Subramaniam there, Bank of America. This from Goldman just moments ago. We published our forecast of the first rate cut back to May, pushed it back after Chair Powell said a March cut is not the base case. They did have March. This is what they've got now, Lisa. We see a risk that it could come later after these 60 minutes interview.
The fact, again, that Jay Powell was not talking about March and said it wasn't likely before seeing the jobs report, and that, oh yeah, it wasn't just an accidental slip in response to a reporter. This was a deliberate, thought-through point of view. That's a game changer.
It took on new meaning after payrolls on Friday. Coming up, that discussion, Francis Donald of Manulife Investment Management on why March and May are too early for the Fed to cut rates. That conversation up next, live from New York City, about an hour and 4 minutes away from the opening bell. Equity futures on the S&P 500, just slightly negative.
It's taken my family generations to perfect the perfect curry. Patax makes perfect.
일단 괜찮게 들어왔던 것 같아.
One of the ones we're working on at the moment is how do we charge back into Ukraine as soon as the European authorities say it's safe to fly in Ukraine again. Now, nobody knows when that is going to be. But we were Ukraine's second largest airline when the Russians invaded on the 24th of February last year. We would be Ukraine's biggest airline the week after they tell us it's safe to go back in there, because we're going to charge back in there. Initially, we have a plan to open up about 30 routes from 4 Ukrainian airports back into the European Union. And then we want to, I think within 6 to 12 months, open up 3 or 4 large bases in Ukraine. And we're talking to the Ukrainian authorities about creating an environment cost agreement.
Oh yeah, 계속 떨어지고 있네.
Of air travel
좋았어.
more Ukrainian recovery.
월요일은 좀 괜찮은 것 같다.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it.
Now, you can simply type phrases in everyday English in the command line.
근데 이렇게 많이 내려가고 바로 올라가지 않겠죠? 일단 취업까지 가자.
Or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
저 이번 주라도 좀 대박을 내야 되는데 아니야 올라가지마 지금 아니다.
On Wednesday, Lisa, equity's doing okay.
And really it comes from the earnings. We have to just keep emphasizing that the earnings of Meta, the earnings of Amazon really highlighted how the big tech names have really driven this through the cash that they generate, not just through hype.
Quite a sell-off in the Treasury market if you switch on the board and turn to Treasuries, 2-year, 10-year, 30-year. 10-year yield up by almost 10 basis points now, 4.11 on a 10-year, on a 2-year up 7, 4.43. I mentioned the Goldman Sachs note before the commercial break. Let's bring it up again, Lisa, and talk about it. They had a March rate cut call after Chairman Powell pushed back to May. After the 60 Minutes interview, they're basically saying the risk now, and not the base case, but the risk is now it gets pushed out even further. You breathed some life into this conversation a little bit earlier. The importance of that. For me, it just sounded like what he said on Wednesday. Why was it so important to you and to others too?
There was speculation that he was just throwing out March there in sort of an off-the-cuff way in response to a reporter saying, you know, it seems like it's not our base case for it to be March. It was almost like just bubbled out. It wasn't a statement. It felt very much that way. The fact that he laid out the case and why he is not interested in cutting rates in March in this 60 Minutes interview that was taped before we got the Friday data, to me, was a game changer because it highlighted that their bias is toward waiting to making sure they have the accurate data.
Yeah, I thought the timing was so interesting. He doubled down on not cutting in March before the U.S. jobs data. What would have he had said if this was taped Saturday morning?
That's why the Fed speak a little bit later this morning. It's going to be interesting. I believe that Mike McKee is catching up with Mr. Goolsbee of Chicago, so look out for that conversation later on this morning. Under surveillance this morning, Chinese stocks seeing another volatile session as investors mull the latest pledges by policymakers to stabilise the slumping equity market. Shares rebounding in afternoon trading after the securities regulator said it would take steps to prevent risks from share pledges without providing many details. Margin calls and forced liquidations are emerging as the key risks facing investors in China. So they're pledging to do a whole lot more to support stocks, Bramo, without telling us what they'll do to support stocks. At the same time, we've got these vows from the former President Donald Trump that if he gets back into power, he's going to slap China around the head with a 60% plus import tariff, which is really out there.
How do they revive confidence at a time where international investors are really reflecting the policy uncertainty? I mean, again, whether or not he gets 60% tariffs put into place, either way, this is going to be a political football. And it's going to be really ramping up in C-suites when you have executives. If you're a CEO, are you going to be like, I am going there. I'm going to expand my manufacturing there when you're not getting confidence from the Communist Party and you're not getting confidence from the U.S. administration that there's going to be any kind of policy certainty? I don't think so.
I think the surprise if you talked about this maybe in 2018 when this all kicked off. How would a Democratic president handle this differently? I remember everyone banging the table saying this isn't the right thing for a president to do, it's not the right thing to do. Here we are with the same tariffs today. President Biden has not removed them, he's stuck with them. There was some talk at one point, Anne-Marie, that maybe he would take back those tariffs. He hasn't done that at all.
There was talk when inflation was running very hot and you had the administration trying to pull every single lever. Remember, every time Biden came out, he said, we're going to look at every tool in the toolbox. But at the end of the day, at least the way I read it, it felt like Treasury Secretary Janet Yellen lost that argument and National Security Advisor Jake Sullivan won that argument because it became more of a national security concern, maybe even a political concern, and less of a Treasury concern in terms of what this has mean for inflation.
I'm taking us into the realm of speculation here. As you get deeper into election season and President Trump, former President Trump, starts beating the drum on this a little bit harder, where does President Biden go? What does he do? Hold the ground, or does he have to lean into the same conversation?
I'm not sure you're going to see the Biden camp lean into 60% blanket tariffs on China. The tariffs imposed by the Trump administration prior according to the Tax Foundation, says this amount to an $80 billion tax increase on $380 billion worth of imports. So take potentially some of that, model it out. What kind of tax increase are we seeing? But to your point, Jonathan, Biden campaign saying all the economists say this is just a tax on American consumers. Yet they kept them in place.
That's the latest on China. Let's turn to our next story on the Middle East. Iranian-backed Houthi rebels vowing to respond to US and British-led airstrikes over the weekend. The strikes targeting 13 locations in Yemen were part of an effort to end the militant group's attacks on commercial ships in the Red Sea. It was the biggest barrage since the original Allied attacks on January 11th. And based on what we've heard from Jake Sullivan, the National Security Advisor, Amory, there could be more to come.
Yep, and I think we need to also remember there's almost two different tracks here. The United States wants to respond for those 3 American service members that were killed in Jordan, and then there's also the Houthis that are causing chaos, frankly, in the Red Sea. I was struck this weekend about how much the administration is really tied to walking this line. It's going to be a sustained response, yet it's not going to be an open-ended military campaign.
Where is Saudi in all of this? So we brought this up a little bit earlier. So back in 2019, Houthi militants took out a big chunk of Saudi production by causing absolute chaos in that region. Saudi Arabia seems to be sitting back as this plays out between Houthi militants and US and UK allied forces trying to do something about it. Where is the kingdom on this situation?
Well, the kingdom has been trying to hold on to this very fractious peace agreement in Yemen. And I think for them, it's much easier to let the United States and the United Kingdom take on this role of going after Houthi militants.
If you're waking up late and wondering where crude is, crude's down on the session, which is just unbelievable. Again, Lisa, we're down a third of 1%, WTI $72, Brent crude $77.26.
Which is the reason why nobody really wants to bet on geopolitics right now, because if that's your sort of knee-jerk response to buy oil, it's been Widowmaker.
Down on WTI and basically unchanged on Brent crude. Let's finish on this story. Lisa and I were talking about it just briefly. Let's talk about it some more. Fed Chair Jay Powell saying the central bank will look for more economic data to confirm that inflation is headed back to 2%. In an interview in 60 Minutes, Powell reiterating his stance that a March rate cut is unlikely, saying, quote, the danger of moving too soon is that the job's not quite done, and that the really good readings we've had for the last 6 months somehow turn out not to be a true indicator of where inflation is heading. He seemed uncomfortable on Wednesday to commit to this idea we were going back towards 2%. For good reason. And then you get Friday's payrolls report with that wage growth in the mix, and I think you just double down on those comments again, don't you?
People were saying that his bias is to cut rates sooner, and that he was trying to joggle the market into thinking that they have a hawkish kind of tone when they're actually incredibly dovish. There was that sort of suspicion underpinning some of his comments, that he was trying to soothe the market. This, I think, took that away. This basically said, no, he actually meant it. You have to count on that. And then this morning, Kashkari talking about a higher neutral rate and, you know, really leaning into that only edifies this idea.
Neil Kashkari is not willing to cut interest rates anytime soon. Have you noticed that Chairman Powell keeps saying nearly all members think we'll be cutting interest rates this year? There's someone on that committee that he seems to think is not part of that club.
You think it's Neil Kashkari?
No, I'm not saying that. I'm just saying
he's keeps saying the realm of speculation.
Nearly all. That would be one of the candidates, would you imagine?
I think probably.
Based on what we've heard?
Probably,
Nikki Bowman, another one, Governor Bowman?
Yeah, I think also Neil Kashkari likes to be a contrarian, which I kind of appreciate. He likes to be the one that leans
the group thing on the FOMC.
Exactly.
We're on the same page.
He's the person who always leans the other way.
Francis Donald of Manulife Investment Management doesn't think the Fed's going to cut rates in March or May. This is her quote. Pick your poison. Either the data accelerates and we lose the embedded rate cuts in the market, or the data worsen and we have to reevaluate the embedded soft landing narrative in markets. You don't get to have your cake and eat it too. Francis joins us now for more. Francis, we have got a lot to catch up on. Let's get straight to it. Chairman Powell, 60 Minutes, Chairman Powell and the presser, throw in payrolls. What's the base case now?
We've been June. We've been June for a while, and that may surprise some because we do have a recession in our outlook, and we think they're going to have to cut a lot more than what is currently priced. But the data is just not going to turn in a meaningful way before the June meeting. That's, we think, the earliest they can go. So the balance of risks for us is later but faster, and depending on what kind of investor you are, there might be a trade there in the near term. You can get a little bit more concerned in the near term, or you can play the curve, but it's later and probably more and faster. We have some time to go.
Does that mean, Francis, that the soft landing thesis is more likely or less likely?
Well, the soft landing thesis is what's currently embedded in markets. So you have to pick the balance of risks. That is the game as an asset manager. Are you going to say the balance of risks is actually for a better economic environment than what's currently priced, or for worse? And the challenge, Lisa, is that if you stick to the data, and I know we've been saying this for too long, the data is not pointing up. There is some improvement in manufacturing activity, but it is 2 years from the first rate hike to the impact on the economy, and we are just now on that precipice. So when you lose conviction right on the precipice of when you would see the market reaction or the economic reaction, I get a little bit worried about that. And I think this is where some of the Fed's willingness to wait is going to come from. If interest rates do impact your economy, and maybe they don't, maybe the interest rate sensitivity in the US economy is far less, it will be in the next 3 to 6 months. And if the relationship is broken, we got to throw out our textbooks in their entirety. Leading indicators don't work at all anymore. We will know in the next 3 to 6 months. It is much harder to reverse a rate cut than it is to go faster. Remember, they don't even have to cut on a schedule. They could cut one night when I'm really busy and my kids have a fever. They could do it anytime they want. We have to be mindful of the balance of risks for them and for the economy.
Trying just to lift your spirits a little bit on that time when you're dealing with a sick kid. I am just wondering, you said we're going to know in the next 3 to 6 months. What indicators do you expect to turn first? What are you watching to see whether your thesis still holds water?
Well, the big challenge last year was that manufacturing data fell into a recession. We've seen one of the worst manufacturing recessions in modern economic history, and we did not see that bleed into services. So one of the big challenges that we're dealing with is actually disaggregating those two sectors, manufacturing and services, and not believing as we have historically that one would bleed into the other. So the really key component of the US outlook going into 2024 is due to services decline, and that will lead on jobs, and that's why Friday's jobs market number a really big problem. Not just because it was really strong. I hope it was really strong. I hope that's what's happening for the American people. But we know
불안한데?
by seasonal factors.
약간
We know
편한
wages were up
마음으로
because
있다가
hours worked
식사하려고
down.
했는데
We're still going to have to disaggregate that. It was not a clean signal, up or down, and that makes visibility
계속
really, really
떨어지겠죠?
difficult in this environment. It is not the time to have high conviction views at all. Not for strategists like myself, not for the Fed.
You open the door just a little bit. I'm going to ram it open and walk straight through it. Let's talk about it. How believable was that unbelievable data on Friday for you and the team?
So we have a rule on our team, one data point does not a trend make, and we're also big believers in having dashboards of indicators. John, you've probably seen these. Bloomberg has a lot of great ones on the terminal as well. The big problem with Friday's number is that it was relatively inconsistent with a lot of other job market data. So for example, hiring is actually down in the JOLT survey. That survey is also distorted. What about the employment cost index, which is a boring index markets don't usually respond to, but we know the Fed cares about deeply? That says wages are actually decelerating in a really healthy manner. So when we put together this mosaic of jobs data, it's not entirely consistent with Friday's report. And yet, 2023, I got burned by talking through all the reasons that a lot of the strong data was distorted. So you have to find some form of balance. I think dismissing a number outright because we know there's seasonality, you don't have to throw the entire thing out. You have to look for the trend within it. Right now, though, the Fed is going to look at that and say, March is out. I don't think they're going to have enough good data or data supportive of cuts until later this year.
Francis, the lack of conviction there is something that's been a theme. And honestly, what you just said is something that was reflected in a lot of notes. How much has your conviction level gone down where you start questioning whether the models are accurate? Lori Calvasino is saying her conviction level is at a 60% sort of rate for everything that she says. What about for you?
지금 좀 불안한데?
I actually would say that your base cases are actually, for our team, carrying more like 30 to 40% probability.
600이면
How can you have a less than 50% probability for a base case? And it's because we see such a wide
벌써 500인데? 좋은데? 놓쳐버렸네. 근데 지금 좀 불안하긴 하는데
than we've had in past years.
그냥
It's not a very high
기다릴까요?
probability, but it takes away from the base case. In this particular situation, though, where we feel a little bit more confident is that if the U.S. does enter a so-called technical recession, it will probably come out faster because the Fed has pulled off of those additional rate hikes. And even though we're debating, is it March, May, June, or July? for most institutional investors that we deal with, and even for retail investors, that's semantics. What matters is there won't be any more rate hikes, and the direction of rates will be lower.
오늘 그냥 젖으로
This
가보자.
month is going to be a very, very tactical trade for those with tactical, dynamic portfolios. The key message is that rate hikes are done. That we have extraordinary conviction in. So if you start with those big themes, yes, we have high conviction in those. Growth is slowing, inflation has peaked, interest rates are going down. High conviction on those haven't changed. Some of the technical details around it, low conviction. The data is just not doing what it used to do, Lisa, and we have to admit that.
Francis, you're one of the best. It's great to hear from you. Francis Donald there.
올라가면 안 되는데?
Thank you very much. What Francis said there might sound a bit controversial, so let's frame it. I don't think it is that controversial. The data's been in conflict now for quite a while. And I get when you get a blowout report like the one you get on Friday, it sounds controversial to say, it's almost unbelievable. Maybe it is.
그치.
And what we've seen in other data points over the last few months in the labour market has pointed into different directions as well. Let's take ISM manufacturing too. Take manufacturing, that picked up all of a sudden. Where did that come from? After being in contraction for 2 years or something.
I mean, stripping aside some of the other indicators, a lot of people are saying the seasonals get messy. A lot of people are saying that there are a lot of reasons to question whether this is a valid representation of a labor market really heating up. That said, a lot of people having the same questions she did. When you discount something outright, you can kind of get into trouble.
That report on Friday, I think, will spook a lot of people who were looking just for things to carry on decelerating on the payrolls market, on the payroll side of things and the headline number. Let's get you an update on stories elsewhere this morning. Let's get you a recap. Here's your Bloomberg brief. Here's your Hira Hackers.
Hi, John. Former President Donald Trump said he plans to impose a flat tariff of more than 60% on Chinese goods if elected. The comments signal an increasingly hawkish tone against the top supplier of goods to the U.S. Trump rejected criticism that actions would start a trade war. The U.S. has been China's biggest export market for more than 20 years, including over $500 billion in exports in 2022. McDonald's fourth quarter sales missed investor estimates as growth slowed, hurt in part by the war in the Middle East. Same-store sales rose 3.4% in the period, marking the slowest rate since 2020. Revenue also fell short. McDonald's became a target for boycotts after the war broke out over its perceived stance on the conflict, as well as its status as one of the most recognized American brands. Lionel Messi disappointed Hong Kong fans
잠깐만, 왜 이렇게 올라가?
on the bench the entire time
왜 이렇게 올라가?
during Inter Miami's 4-1 win over a Hong Kong team.
역시 오늘 땀 부분이 600이 안 될 것 같고, 좀 애매하네. 어머.
Due to a hamstring strain. The Hong Kong government said it was, quote, extremely disappointed with the organizer of the match.
지금 나갈까요?
I was disappointed too.
왠지
I guess
나가야
there
될
was a
것 같은데?
promise that he was going to play, but if he's injured, he's injured.
He's injured.
So, you know, what are you going to do?
Tickets are pretty expensive, and you show up to see Messi. I don't know. I want to see Messi play.
If you go to the circus and the animals aren't there, you should get a refund, right?
Okay, is that really how we're going to describe this? I'm offended.
That's what AC Milan fans did back in 2012.
Okay, well then have him
when
do
they sold Ibrahimovic and Thiago Silva to Paris Saint-Germain, and the season tickets
일단 조금 더 보고
I believe the fan group
왠지
said
빠져야 될 것 같은데.
that you shouldn't pay to attend the circus if the animals aren't attending. Something like that.
Isn't that kind of offensive?
I mean, sure.
네, 빠질게요.
Fans aren't there, you know. If the lions aren't there, you know, you're kind of disappointed.
I hear you. You can do a
갑자기 불안한디?
Alright, told to move on, so let's move on. Up next, Red Sea tensions weighing on the energy industry.
We are adapting to the circumstances, and we are really focused on keeping our
일단
our people safe and
다시
protecting our assets.
타이밍을 기다려보고 그때 다시 들어갈게요.
Regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around
그래도
with
수익은
do something ourselves.
18만 원이면 오늘 좀 나쁘지 않은데? 오늘 수익은 여기서 사실 그만해도 되는데 근데 뭐 좀 느낌이 나쁘지 않은 것 같고 좀 욕심을 부려도 괜찮을 수도 아니면 조금 있다가 타이밍이 안 나오면 제가 좀 식사하고 다시 올 때 다시 좀 해봐야 되지 않을까 싶어요.
I think the opportunity for the NBA with the local teams would be to own all that themselves.
Welcome to the world of decentralized finance.
자주 나갔던 것 같은데?
Breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people,
There's no question this industry is composed of some bad actors and some good actors.
the transactions,
Volumes have surpassed $24 billion per day.
and the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
DOJ or other authorities.
Could face bigger challenges next.
Was going to keep Green World Cup. This is
As the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
Live from New York City, we're down 0.25% on the S&P 500. Crude, unchanged. Unchanged at 72.28. Under surveillance this morning, Red Sea tensions weighing on the energy industry.
We are adapting to those circumstances, and we are really focused on keeping our mariners, our people safe, and protecting our assets, and doing everything from going around the Cape to swaps. But what we are trying to really focus on is making sure we honor our commitments to our customers through this difficult period.
It's the latest this morning. Oil surging over the weekend after US and UK forces launched attacks against Iranian-backed Houthis. Prices turning lower after Fed Chair Powell reiterated the March rate cut is unlikely. Nadia Martin-Wiggin, director at Svelland Capital, joins us now for more. Nadia, let's get into it. Why crude is unchanged on the session? 72.32 WTI. Early this morning, it was lower on Brent and WTI. Why isn't this tension over the last 3 months plus driving and resulting in higher prices?
So, thank you. So, although the market is looking more dangerous in terms of physical flows, what we saw last week is that when this ceasefire was potentially announced in Gaza, the market just traded down and it hasn't recovered. And the market view had been that geopolitical pressure and difficulties in the Middle East weren't priced in, but then we had the sell-off and we haven't recovered as geopolitical tensions go higher. So I would say in the crude market, now we see that there's no geopolitical tension priced in, but the market is scared because what if we get a ceasefire instead of continued escalating tensions? So it's a wait and see situation.
Nadia, which is it though? Is it priced in or is it not priced in? If you do have geopolitical risk priced in, what would the price be if there were not that geopolitical hangover, as Anne-Marie has been talking about all morning, which is a correct question? And on the flip side, where would prices go should things ratchet up?
So I would say in the product side, when we look specifically at gas oil, heating oil, those cracks are really strong, right? And I would say that's where we have the geopolitical risk priced in. And that is because it's difficult to use the Red Sea right now. And normally it's refined products in the distillate space that are flowing from the Middle Eastern refineries up to Europe at a time when we're experiencing refinery maintenance across the Atlantic basin. So we can't have the US and Europe just produce more distillate. So that part is priced in. On the crude side, I would argue it's not priced in at all because we've traded down to a very comfortable level. And what is interesting is I would say in terms of the timing, a couple weeks ago, it looked like we were really having strengthening refining margins, concerns about the Middle East. Crude was looking like it was ready to stage a rally. And then on the WTI side, we couldn't break above, 77.40 and stay up there. We couldn't do the lower 80s for Brent either. And that's where we had this stalling and then this trade down.
Nadia, I want to ask about two stories coming out of Saudi Aramco. One, that they're abandoning their plan to go after 13 million barrels a day of capacity, and also also that Aramco may be reviving the share sale. Is it your sense that Saudi Arabia at this moment is just trying to go after funds?
I think it's actually two different questions because it's a little bit strange timing. Banks are putting out that by stepping back on this major investment plan, Aramco could be saving, for example, $5 billion in capex. As an estimate, maybe that is a serious number, maybe not. It's very strange to issue more shares in a company when you don't know the capex expectations, which of course would be announced at the end of March when they do their earnings, right? So it's a little bit strange in terms of the timing. On the other hand, the 13 million barrels per day, in our view, is a non-story right now. We see that Saudi Arabia is planning to transition and use less crude burn, the seasonal side in August. That is almost 1 million barrels per day, around 900,000 barrels per day of internal demand that they use for crude. And instead, they could make that available for export. So that could be a 1 million barrel per day trade-off. In addition, we see that the U.S. supply chain is growing from strength to strength, and expectations are already starting to go higher in terms of what the U.S. shale space and the U.S. in general can produce this year. So the EIA has been talking about flat production over the entire course of the year, but we see upside to that level, driven first of all by the Permian, by what Exxon and Chevron were communicating in their earnings calls now, and also we see some additional production coming from the Gulf of Mexico, which has been historically actually very difficult for agencies to forecast accurately.
Nadia, we've got to leave it there. Nadia Martin-Wiggin there as Felon Capital. Thank you. Crude this morning, 72.37, 72.36, basically unchanged. If you go back to the day before the terrorist attacks on Israel, we're down by 12.56% since then on crude, which is just amazing over the last 4 months.
It doesn't make sense. There's more hostilities, and yet the price continues to go lower, which I keep asking, if there wasn't any hostilities, would we be that much lower in crude prices? But just think about it. The world is flush right now with crude. The United States, Russia, Iran. Saudi Arabia is pumping 9 million barrels a day. They have capacity to go to 12. It's a big cushion.
Remember we used to talk about China, the slowdown there, as one of the reasons?
Sure.
That too.
Talk about narrative roulette. Yeah, exactly. I mean,
that continues, okay?
I know.
Counting it down to the opening bout, 34 minutes away. Equities are negative by 0.3%. Coming up tomorrow, Larry Adam, Raymond James, Dan Morris, BNP Paribas, Deborah Cunningham, Federated Hermes, and Eli Lilly CFO, Anat Ashkenazi. From New York City, this is Bloomberg.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything.
타이밍이 괜찮았는데 일단 좀 불안하게 해도 일단 제가 밥 먹고 다시 올게요. 그때 다시 타이밍 잡자. 여러분 다들 화이팅!
We don't talk about Disney. We don't talk about Paramount. We don't talk about Sony. He goes, you know who we talk about? I go, who? You. I said, really? He goes, yeah, you. I go, why? He goes, we are giant battleships, and you're like a little speedboat. And if there's gold on the beach, you run rings around us, get to the beach, take the gold, and by the time we turn our battleship around, you've already taken the gold. I go, that's right. I'm always going to be that entrepreneur. I started my company from my dining room table 30 years ago. 30 years ago. And I started by calling every television station, asking them to carry my once-a-week show. On average, they all said no 50 times, and I worked through about 50,000 no's to get 150 yeses. That guy that was at that dining room table trying to pay his phone bill is that same guy today, 30 years later. That fire is still in my belly. I still run scared, and I'm still running after that vision of building the world's biggest media company.
Have you thought thought maybe I should go do something else. I can't do anything better than I'm already doing. I already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money, we made our shareholders a lot of money. More importantly, we've grown the business and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
From New York City, for our viewers worldwide, I'm Manus Cranny, in for Jonathan Farrow. So as the bond bears are reawakened, when will it really challenge the equity market narrative? The countdown to the open, it begins right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Coming up on the show, Fed Chair Powell reiterates his cautious stance on rate cuts. The White House promises more strikes in the Middle East. And President Biden taking aim at Donald Trump in Nevada. We begin with the big issue. Fading hopes for that pivot to March rate cuts.
I think it's not likely that this committee will reach that level of confidence in time for the March meeting, which is in 7 weeks. Almost all of the 19 participants who sit around this table believe that it will be appropriate in their most likely case for us to cut the federal funds rate this year. We just want to see more good data along those lines. It doesn't need to be better than what we've seen or even as good. It just needs to be good. And so we do expect to see that.
Needs to be good, but not better. Mike McKee listened to the 60-minute interview. He brought us, of course, the jobs report and the upsum. So what's your take on Powell's latest remarks? Mike, good morning.
Good morning. I think Powell is just trying to reassure the American public that the Fed's on the job and that the economy is in good shape and that they are still watching for inflation and will act if necessary, but also could cut rates. Now, we get a lot of Fed speak this week, which could back up the chair. We start today with Austin Goolsbee right here on Bloomberg Television. And then on Tuesday and Wednesday, we have 4 Fed bank officials speaking each day. This afternoon, we get the senior loan officer survey from the banks. That might play into this whole NYCB question about regional banks. And then we move to the economic data, and it's a light week, very light week. Just ISM services today, basically jobless claims. And then a lot of people are going to be watching the CPI revisions. This is something we'll ask Austin Goolsbee about, but last year they revised the CPI and revised away some progress on inflation. A lot of people think that was a one-off. We'll find out Friday if indeed it was. So the question then becomes, where do the markets go from here? Well, they finally seem to have believed the chairman. They've pretty much priced out March. And they've also brought down the odds of a May rate cut, although it is still in there. The question is, do they do May or do they wait until June? And if so, then how many do they do the rest of the year? Jay Powell, to finish it up, says that they're not going to let politics interfere. So they could be cutting rates again at the September meeting. Although that's still so far away, we can't even guess as to how close the markets are to being right.
Okay, Mike, thank you. As you say, the market is still presuming somewhere between 5 and 6 rate cuts. We'll squeeze them in before that election, will they? Don't miss Mike's interview with the Chicago Fed President, Austin Goolsbee. That conversation, 10 a.m. Eastern Time. What is the framework? What is the additional confidence the Fed wants before
they can cut. Let's continue the conversation. Cameron Dawson of New Edge Wealth, Morgan Stanley's Michael Kushma join me now. So here we are. The short end of the bond market has jackknifed. It has reappraised, and listen to 60 Minutes in the jobs report. The equity market is stoic. So let me bring it to you first of all, Cameron. The stoicism of the equity market, are we in for a challenge to that, given the backup in yield?
Yeah, that's the big push-pull, because better economic data does help the earnings picture for equities. At least it makes it more likely that we can achieve what's already priced in of 10% for this year, 11% for next year for the S&P 500 earnings. But to your point, it raises the question on valuation, because valuations have expanded by about 20% since the October low, really pricing in this idea of an easier, more friendly Fed. So if the Fed doesn't deliver on those rate cuts, do we start to see downward pressure on valuations, which stand at 20.7 times forward, which is very elevated from a historical basis. So good for earnings from better data, possibly bad for valuations, which is that push-pull for equities.
Yeah, and the number of people that have lined up on this show to tell me that rate cuts, 5 rate cuts from the Fed, you don't actually need those to deliver the upswing in equities. Good morning, Michael. You must be salivating. 20 extra basis points for you, riching the world up for you in the space of 24 hours. Good news for you, back up in yields?
Well, it's good news for investors, worldwide, because yields had fallen quite dramatically in Q4 last year, well in advance, as we've seen, before the Fed had even begun to cut rates, even discuss cut rates significantly. So I think that what Chairman Powell's doing is trying to walk back the market from being so optimistic that the economy is generating sufficiently low growth / low inflation to justify the 5-6 rate cuts this year. And he was quite adamant, 3 rate cuts are still on the agenda.
A quick response from both of you on this. The Fed must take this as a win, the backup in yields. Cameron.
Yeah, I think it is a reflection that the market is listening to the Fed after not necessarily listening to the Fed over the last couple of months. So I do think that the backup in yields is probably a good thing. I mean, Kashkari just put out an essay this morning talking about how tight are we really, and given the fact that yields have fallen, have maybe ease some of the pressure of the tightness on the economic data. So I think that the backup in yields is probably welcome.
Is that a conundrum for you, Kashkari, backing up, sort of raising the game on where the neutral rate might be, Cameron? Sorry, Michael.
Yeah,
Excuse me, Michael. Sorry, Cameron.
I think that's exactly right. I think for long-term bond yields, it's less about whether the Fed cuts in March, May, June. It's the cumulative amount we're going to get over the next 2 years. And that gets back to where that terminal rate is. And this is where the market is somewhat more pessimistic than the Fed. The Fed's talking about a 2.5% long-term Fed funds rate, which would justify lower bond yields over time. The market is actually thinking, 3.5 is where we stop.
Cameron, I always feel guilty when I get it the wrong way around, so let me give you this one. What kills Goldilocks? What interrupts Goldilocks skip through the woods?
I think it's earnings. And if earnings continue to be revised lower, one of the interesting things from this earnings season is that you've seen the S&P 500 earnings estimates kind of get cut a little bit, but a lot more for the average stock. So if you look at the equal weighted S&P 500, what you're seeing is earnings have come down by 6-7% for 2024 estimates. If that continues, it raises the question of this diffusion mechanism of a better economy. How does it translate to better earnings? If you continue to see earnings estimates get cut, that puts valuations even higher than where they stand today, and that could be the hurdle that the economy or the market trips over.
So, Michael, let me take this back to you. Steve Major has a wonderful piece out this morning called Opportunity Knocks. Now, this is a game show that we all watched in the UK when we were young. That was a long time ago for me. It's a talent show, Opportunity Knocks. Winners will be decided by the public vote rather than a panel of expert judges. It's similar to the bond market. And essentially what Major is saying is that this backup in yield is something to be tempted into relative to T-bills, which, of course, Cameron, will be the cash side of the equation where the equity markets are resting at the moment. But, Michael, to you, first of all, do you see this backup in yields as validating treasuries to bills?
I think that's true. One of the big negatives we've seen about the long-term interest rates, well below 4.5% or below 4% certainly, is that the opportunity cost versus shorter maturity assets, whether it's Treasury bills or other short duration asset-backed securities which yield premiums over T-bills, that was a pretty high opportunity cost unless we were getting closer to the Fed, a meaningful Fed rate cutting cycle, meaning short rates will remain elevated relative to long-term rates. But from a longer-term perspective, there's no doubt buying 5-year bonds, 7-year bonds, 10-year bonds, these are the best yields we've had in decades in terms of both nominal yields and real yields. So from that perspective, if you're willing to accept, I'm going to make 5%, on a 5-year corporate bond and 7-year corporate bond, that looks pretty good from a long-term perspective. Our view has been to be a little bit more cautious, simply that we could do better. The opportunity cost of staying in buying longer maturity bonds was a little bit high to pay before we got closer to the Fed rate cutting cycle, and we've been more sympathetic to the Fed's point of view than the market's point of view.
Okay, I'm just going to interrupt the conversation. We have breaking news coming through from Snap. They are going to cut 10% of the global workforce. The reason why I'm interested in programming to do this is a tech company on the real zeitgeist edge of tech in terms of the community that it serves. 10% of its global workforce is to go. They say a pre-tax charge of 55, double nickel to 75 million bucks. The global headcount will be cut by about 10%. You know, this is adding to the various technology cuts that have come through, Cameron. Let me just talk you through into this in the growth to value tech. Megatech did their job cuts last year. They are continuing. They were rewarded for those efficiencies. This is another example on the equity side of more pain to come in terms of job cuts.
Yeah, and the interesting thing about those tech job cuts is that it appears as if people who were laid off were able to get work rather quickly, as we never saw a very weak non-farm payrolls print, for example, or initial jobless claims never spiked up to a significant level, which just suggests that there is still demand for those kind of workers outside of tech or at different companies. It's a good question. We have seen challenger job cuts announcements tick up rather significantly to start the year, not consistent with recessionary levels yet, but it is important to watch if some of the weakness around the edges of the job market become more pernicious and actually point to a weaker job market ahead. Okay. Again, not enough data to say it's going to happen, but it's something important to watch.
Such a rich word, pernicious. I love it. Cameron, thank you very much. Cameron Dawson, Michael Kushma, stay with me. Absorb those job cuts and where we go next with the Fed. Let's go under the hood. The opening bell is just 30 minutes away. Abigail Doolittle is side by side with me. What have we got?
Well, right here in the pre-market, Manus, we are, of course, looking at a small decline for the U.S. futures. One stock weighing, Boeing, yet another setback for their production. They found more mistakes in their 737 production. Holes drilled in the fuselage. This was from a supplier, Aerospirit Systems, and it could delay the production, or the delivery, I should say, of up to 50 of those 737 MAX. Caterpillar, on the other hand, up 4.6%. They beat adjusted earnings by about 11%, driven by their energy and transport segments. They missed the revenue estimates, but investors seem to be looking past that. Net, the quarter and the outlook better than feared. And then Estee Lauder soaring up 17%, a 60% earnings beat. Revenues were better. They announced a restructuring that includes a 5% workforce cut. This stock, though, Manus, into today, down 65% from the 2022 peak. Investors clearly want this company to do something to right the ship.
Abby, thank you very much. Abigail Doolittle there. Coming up on the show, the U.S. vows more strikes in the Middle East.
So the president has been very clear from the beginning, which is that when American forces are attacked, we will respond. It began with the strikes on Friday night, but that is not the end of it.
Meanwhile, the Senate reaches a deal on Ukraine aid and the U.S. border. That conversation next on Bloomberg.
the younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why, part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
This is Bloomberg.
So the president has been very clear from the beginning, which is that when American forces are attacked, we will respond. It began with the strikes on Friday night, but that is not the end of it. The president is determined to respond forcefully to attacks on our people. The president also is not looking for a wider war in the Middle East.
Geopolitical tensions are simmering in the Middle East. In the U.S., senators are reaching a bipartisan spending deal to impose new immigration restrictions. That unlocks billions of dollars in Ukraine aid, with a vote coming Wednesday. President Biden indicates his support for the compromise, writing in a statement, "If you believe, as I do, that we must secure the border now, doing nothing is not an option." Amory Horden has been parsing the weekend's press and moves. Amory, good to see you this morning. Let's start with the Middle East. It's not so much what the U.S. wants. I mean, they may say that they do not want to, they may be sustained in the campaign, but it's not open-ended. But it is about lighting the torch paper of the response mechanism.
Well, look, you see what the administration is doing is they're walking a very fine line. And I would go back to some of Jake Sullivan's comments over the weekend where he said this: what happened on Friday was the beginning. And these are those 85 targets they hit in Iraq and Syria, not the end of our response, and that there will be more steps, some seen, some perhaps unseen, all in an effort to send a very clear message. And we will respond in a sustained way. And then in the same breath, he said, I would not describe it as some open-ended military campaign. This is what is so fragile right now. The administration needs to respond. They want to deter or degrade Iranian proxy capabilities. They need to respond to those 3 U.S. service members that were killed in Jordan. At the same time, they want to keep a lid on the escalation in the Middle East.
Well, Iraq's response, this is an aggressive strike that will put the security in Iraq and the region on the brink of an abyss. One can say that's a natural response mechanism from the country that has been targeted. That's Bassem al-Awadi. But it just goes to show where we are. On the brink of an abyss is from the Iraqis. Finally, Ukraine aid. I mean, we got it last week from the Europeans into Ukraine. This, we understand, this week, a pivotal week in terms of a vote in the Senate on Ukraine aid. Extrapolate for me.
Well, it's not just Ukraine aid. The top line on the supplemental figure coming out of the Senate, we finally got the text last night after months of negotiation, is $118 billion. So yes, a chunk of that's going to be to Ukraine, but also $20 billion for the U.S. southern border, and then also aid to Israel as well. The issue is Speaker Mike Johnson, in the other side of Congress, Manis, says it's dead on arrival. A lot of politics at play, given the fact that you basically have the former President Donald Trump breathing down these congressmen and women on the Republican side's neck, not wanting an immigration deal because they want to campaign on that to beat Biden in November.
Okay, a very, very febrile situation, as you said, bearing down on the Congress. Amory Horden, thank you very much for being with me. Let's turn to politics now. Of trade. The former President Donald Trump speaking on Fox News on Sunday, threatening China with higher tariffs.
Now the Washington Post is saying that you're talking about 60% tariffs on Chinese goods. Is that in the cards?
No, I would say maybe it's going to be more than that.
It'll be more than that. Cameron Dawson, Michael Kushma back with me. Michael, this is the very essence of angst, isn't it? We don't know who's going to be in the White House, but this is on the campaign trail. This is higher tariffs. This is potentially adding to the inflation angst at the back end of this year and into next year.
I think that's true. You know, policymakers on both sides of the political spectrum have been pro-fiscal expansion. No one's a big deficit fighter at the moment. Maybe down the road, the pressure from the markets will be sufficiently high to deal with that. And I think that the tariff situation is as we've seen in the past, could be inflationary for the U.S. economy. Divert production to less productive areas, more costly areas, and be overall, problematic for policymaking.
Cameron, tell me this: is it too early? Is it too early for people to countenance how to shape a portfolio in the trajectory of a Trump administration? I mean, there's a long way to run, isn't there? There's like 9 months of this.
Yes, certainly. And we do know that there will be some correlation to Trump versus Biden baskets, depending on what the probability is of who gets elected. So probably too soon to completely price it in. And on the tariff front, we do think watching durable goods prices will be important, because that's been a key source of the disinflation and now deflation over the last year in durable goods. So could you see higher tariffs start to feed into those goods that come from overseas and actually kind of exacerbate the issues with inflation again for the Fed, and kind of get in their way of being able to cut interest rates as much as the bond market expects?
Well, let's just square it away. Michael, what do you want to hear from Goolsbee in just under 45 minutes? If you were sitting one-to-one with him, what would you ask?
I'd like to know about the terminal rate. Do they still believe that the U.S. economy is going back to its pre-pandemic levels, which was that secular stagnation kind of world, zero real rates as the equilibrium, or if we move to a new world, post-pandemic world, which is different from the 2010-2019 period, something like the mid-1990s, early 2000s, where real rates are higher, trend growth might be higher, et cetera.
To close off with you, Cameron, I mean, we're going to go through this challenge to the equity markets of spiking short-end yields, but looking at what Goldman Sachs are talking about, the Magnificent Seven, their fate depends on the ability to deliver growth. Do you see the propensity for the Mag 7, or do I come down to Mag 4, Alphabet, Microsoft, Alphabet, and NVIDIA, to deliver the kicker of growth relative? Does the basket bifurcate, I suppose?
Most certainly. We do think it will bifurcate this year, and it all comes down to earnings growth. You contrast a name like Apple, which has seen its earnings revisions be effectively flat over the last year, but its valuation go up by 40%, with a name like Meta, which has seen its earnings estimates double over the last year. And of course, it's had valuation expansion as well. So the winners this year will be those that have upside to current earnings estimates, can deliver on those earnings, while the laggards will be those that aren't seeing any change to earnings estimates or even have downside to those estimates.
It was pretty stunning. I mean, mega Meta on Friday, just under $200 billion. It blasted everybody else out of the water. How do they deliver against that value uplift on Friday, Cameron?
Yeah, I think it does create a high bar, and it's probably going to be a sideways stock from here over the very short term. Still very much in an uptrend, but the point is you've already reset expectations. You go to over a year ago and you had expectations that were so very low at the same time as you had a pretty easy bar to jump over from things like cost cuts. So likely the pace of returns will slow from here. It's not to say that they're not executing, but you've already priced in a lot.
Michael, just to close it off, do I embrace my inner bull on credit and just sort of say, look, this economy is strong, it lives long, it lasts, it's a no-landing scenario, dig in, buy credit?
I think you want to stay slightly overweight credit, yes. That the economic situation is Goldilocks for credit right now, and there's lots of historical episodes where credit spreads stayed very tight for extended periods of time because the fundamentals stayed strong. Now, if the fundamentals deteriorate, inflation stalls out, it's a different ballgame.
Okay, you're right. Let's see what Goolsbee's got to say in just under 40 minutes. Cameron Dawson, Michael Cushman, my guest this morning, setting the agenda on Monday morning for risk. Your morning calls, and a little bit later on, we'll get Citigroup's Stuart Kaiser joining me around the opening bell. Why he's still positive, embracing his inner bull for equity risk, right here on Bloomberg.
there is no digital without chips. And I emphasize that because everybody speaks about the digitalization of the world. And I would even go a step further. There is no Green Deal without chips. So yes, it's a bit like the new oil for the world. And given some of these geopolitical tensions, especially between the US and China, it's become a necessity, I believe, to be more resilient against these geopolitical tensions. And while finding it out the hard way through the past 2 years during the pandemic, and what I mean with the hard way is that we've all seen how key industries in Europe and the US, especially in the industrial, medical, and automotive sectors, have suffered from a shortage of semiconductors.
So the equity bulls are slightly unsettled, but don't be beguiled because below the line you've got NVIDIA picking up over 3%. This is the year where you're going to see a bifurcation between Magnificent Seven. They will break apart. Equity's just a little bit challenged as you see yields pop to the upside this Monday morning. Time for your morning calls in terms of what the scribes of Wall Street are laying out for your risk agenda. JP Morgan downgrades Mattel to neutral, expecting limited upside with consumers facing mounting headwinds. Next up, MoffettNathanson downgrading Take-Two to neutral, pointing to a lack of positive catalysts ahead of Thursday's earnings. And finally, Citigroup upgrades Citizens Financial to a buy, seeing an attractive entry point following the recent declines. Coming up, joining me to discuss risk this Monday morning to set your agenda, it is Stuart Kaiser on the probability of, you got it, soft landing. That's what you really want to hear on the back of last week's data. Join me in just a moment with Stuart.
How are you feeling right now about the state of the industry and what it's going to look like in the next couple of years?
The big picture is it has never been more, I would say, volatile. I mean, it has, but you know, it continues to be volatile. But like you said, we did see real signs of life this summer. So generally speaking, box office is down globally around 20% to 2019, so pre-pandemic levels. But this summer, it was 5% down. Right, so it would suggest that even though there were winners and losers of this summer, and obviously we had the two big juggernauts with Barbie and Oppenheimer, you know, movie-going begets movie-going, right? So when there's a season filled with, you know, good movies that people want to see, you know, I was made to feel pretty optimistic about what we saw in the summer.
What happened was you were offered a money-losing women's basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah, you know, you got to be smart about this.
your kids, start them early, learning all about finance at the NICE. Maybe they'll learn what challenges equity market risk at the moment. NVIDIA is rising, yields are rising, so the fundamentals of that equity bull market may well be challenged as you see short rates up by over 20 basis points. There is the opening bell. We're going to have a touch lower on these equity markets for this week. Let's hear what Goolsby's got to say in 30 minutes to Mike McKee. That's the state of play on the equities. One stock to watch at the open is Caterpillar. The shares are flirting with a new record high after topping out for the fourth quarter earnings estimates. Abigail Doolittle is with me on CAT.
And in fact, Menace, I think that they are at a record high, the highest since this company went public back in 1980. It was a very solid quarter that they put up. It was the energy and transport segments that drove a big profit beat. They put up $5.23 in profits, adjusted earnings, 11% better than expected. Overall revenues, though, slid. So this beat that we're looking at now up 6%. Let's see what that is the best day since. That really is driven, again, by the energy and transport. The outlook for 2024, good. Importantly, inventories are shrinking of their machines at dealerships. That said, there is a Baird analyst out there with an underperform rating saying that the flattest sales outlook would support the idea that a slowdown is increasingly apparent. Now, the stock just moments ago had been up about 2%. Now it's up 5.8%, the best day of the year, maybe having to do with the fact that a headline coming out of their call, the CEO saying that they have started to see supply chain constraints ease. The stock into today up on the year, up more than 25% over the last year. Investors seem to like what they are seeing out of Caterpillar.
Abby, thank you very much. And we're also keeping an eye tracking Boeing pretty much day by day. The shares are under pressure after the company find yet another issue with the 737 MAX jet. Ed Ludlow is with me from San Francisco. What's the problem now?
The problem now is misdrilled holes in 50 undelivered 737 MAX jets. And this is based on Bloomberg reporting on a memo from Stan Deal, Boeing's commercial chief, in which he explained this issue originated with a contractor or a supplier. And in the memo, Stan Deal did not name the supplier, but in this case, Spirit Aerosystems, which is down 3.6%, more than the decline we see in Boeing, came forward and said that it was aware of this issue with the fuselage and faulty rivet holes. But in the context of Boeing, you're completely right. We're down 2.8% on the stock. The stock down, I think, now more than 20% year to date. And this is just the latest issue, with Boeing underscoring that this misdrilled hole issue, the riveting story, Manus, relates to 50 undelivered 737 MAX jets, which seems important to me.
Pretty concerning that in the production system, the very thing that the CEO is trying to take a hold of. But then, of course, deeper investigation delivers the reality here. More work for Calhoun to do. Thank you very much. Let's get back to the earnings slate. We've got Estee Lauder shares racing ahead. Now, this is after unveiling a restructuring plan. They're cutting as much as 5% of the workforce. Katie Greifeld is with me now. So this is more about the promises of a new Estee Lauder to come.
Exactly. Shareholders looking forward right now rather than backwards at the earnings. This is all about the restructuring plan, like you mentioned. Let's get into the details there. The beauty company said it would cut 3 to 5% of its workforce. The idea, the goal here is that it wants to make Estee Lauder a leaner and more profitable company so that it's more able to respond more quickly to things such as social media trends. We're talking about TikTok, Manus, and the like. So as a result, it expects between $500 million and $700 million before taxes in restructuring charges. But looking forward, Estee Lauder expects that the job cuts and other details of that plan will drive incremental operating profit of $1.1 billion to $1.4 billion. Now, remember, late last year, you had S&P Global Ratings say that Estee Lauder's costs had increased to between 55% and 60% of revenue. So clearly, shareholders are really cheering these cost-cutting plans. The share is currently up 16.5%. That is the biggest one-day advance since 2011, Manus.
Katie, thank you very much. Katie Greifeld on the Estee Lauder results. Stick with the cost cuts and the controls. Snap, as we broke to you a little bit earlier, is becoming just the latest tech company to announce job cuts, reducing the global workforce by 10%. Simone, the impact, good morning.
Yeah, Manus, well, its workforce at the end of September was 5,400 people globally. So if it still employs about that number of people, this would amount to 540 cuts. The company saying in a statement just this morning, just a few minutes ago, that these pre-tax charges associated with these cuts will include $55 to $75 million of severance and related cuts, also $45 to $55 million in future cash expenditures. However, most of these are going to be booked in the first quarter, it says. These cuts, however, they may take some time to come through, could extend into the second quarter as the company deals with local laws. Snap saying these cuts are being made to, quote, best position our business to execute on our highest priorities. It's been facing that deceleration in ad revenue, as have many of its tech peers, and therefore cutting jobs and products that are no longer a priority. Look, just back in September, the company got rid of its augmented reality division that was marketing services for businesses. We're expecting earnings after the market tomorrow. We're looking at shares now down about a percentage point. So lots for the market to think about as it looks ahead to those financial results tomorrow, Manus.
Simone, thank you very much. Simone Foxman there. With Citi are weighing in on the markets. This is the agenda. We stay positive on equity risk after a busy week on a simple plot. A soft landing is more likely after strong labour data, and an FOMC still has a cutting bias. Stuart Kaiser is with me. They may have a cutting bias, Stuart, but he went on CBS, Powell went on CBS yesterday to really speak to the real economy. It's not coming as quickly as you thought, but for all the data still says to me, embrace your inner bull. Do not be frightened of this equity market. You concur?
Yeah, hey, man. So that's generally our view, is that the hard economic data continues to print really well. You know, our focus is much more on the labor and services side of the economy, which remain really strong. And I think we got more confirmation of that, on Friday and, over the last kind of couple weeks with retail sales as well. So I think you just have to argue the underlying macro backdrop is positive for stocks, and that's where we want to be. I think, a key takeaway from the FOMC was that the inflation data they've seen over the last 6 months, they believe justifies cuts if they continue to see more evidence of that. So, they're clearly on a cutting bias regardless of the strength of growth that's coming through the system.
What injures equities? 3 cuts, not 6?
What injures equities?
Yeah.
Honestly, I'm not too worried about the number of cuts, to be honest with you. I think if we get any cuts, I think if we get cuts this year with an economy that looks like it looks like, then that's okay for equities. I think we've talked about this in the past. Yeah. 2023 was a great test case for this, right? Where you had 100 basis points of cuts priced. Those cuts weren't realized. Equities did fine because it comes on the back of strong economic data. So as long as the economy holds in, I'm not, too concerned about the cuts. It seems like the cuts aren't being priced out. They're being pushed out, which, is incrementally positive as well.
That's a nice differential, pushed rather than priced. Talk to me about the flow. You've analysed $500 billion worth of buy flows and how that breaks down between futures and vol along with CTA. What did you learn at the end of that analytic, and what should I take away from it?
Look, I mean, I think the takeaway is you've had a tremendous amount of buying in S&P 500. I think that's partly responsible for what we've seen this year, which is the index rallying, but below the surface, some kind of risk-off dynamic. So you're just getting a lot of demand, at the index level. I would say, our conversations with clients imply probably positioning kind of a 7 out of 10 here, which would be very consistent with the amount of buying we've seen. So I think the risk, if there is one here, is that, equities are pretty fully owned right now. And who could be the incremental buyer of stock. So that would be, I think, the big takeaway is not too surprising to see the degree of buying because we've seen the rally. But, where is that sort of next incremental buyer going to come from? And I think that's what, some investors that are a little cautious here are asking that question.
Yeah, and I mean, I think this is the narrative, isn't it? How much of the money market funds comes to not the rescue, but to the addition of the liquidity boost to the equity portion of the pie. When you look at it's incremental this morning. Estee Lauder cuts jobs. Snap has just announced another 10% of job cuts in the tech sector. For technology, and I suppose let's start with the Mag 7. For Mag 7 to continue to deliver such huge upside. Look at Meta on Friday, up 20% in one day, under $200 billion. Can Mag 7 really deliver at that level again? Can you have a duplicate 24 to 2023 within Mag 7?
Our view is no, that you're going to need some broadening out in participation of the markets, and it's very much an earnings story. One of the reasons we think Mag 7 was such the big leadership last year is that was a narrow part of the global equity universe that was providing earnings and earnings estimates revisions. We think this year that broadens out a bit. You have more stocks and more sectors contributing to earnings growth. And for that reason, the Mag 7 sort of becomes a little less important from an earnings perspective, which means hopefully it can become a little less important from a price perspective. The challenge here, though, is you have, the S&P tech sector is 20% of EPS, but 30% of market cap. Right, so there is a trade-off here that it is important from earnings, but it's almost more important from a valuation perspective. So we do think it's a little bit higher bar this year for Mag 7, and we are of the view that you're going to see broader participation in earnings and thus broader participation in market performance.
Constantly, we're trying to look for tail risks. Leave geopolitics aside for one moment and supply chain. One of the narratives that came through this morning with Katrina Dudley, who's with me on Bloomberg Brief, was this narrative that wages rising at 0.6% in the data on Friday is perhaps one of the bigger challenges and under-discussed challenges to sustaining margins at the level that we've seen in some of the stock narrative. Is that a tail risk, Stuart, for you? Is that worth talking about in your view?
Yeah, I think it's very worth talking about. If you think of the last year, you basically had companies who were able to protect margins at a time when they were also to take price, from the inflation. And this year, if you do get inflation slowing down and they're not able to push the price line, but they've increased wages, which are kind of sticky, on the bottom line, then does that mean you sort of get margin compression in a way that we didn't see last year? So it's a topic, investors are definitely kind of asking that question. We and the street, I still think, have double-digit EPS growth. So I think if we can realize that type of EPS growth, this won't be as big an issue. But if we do see margins starting to compress this year in a way they didn't last year, definitely a risk to the market. I'm not sure I call it a tail risk. I think it's more likely than a tail risk, but probably less impactful than a tail risk, if that makes sense. I think it could be a real headwind, though, if we see that play out.
Listen, I think there's a bunch of other things can be more material tail risk. I love the question you've got in the sheet, which is the pop quiz. Do you want to own equities more or less than this time last week? But of course, the risk is that there could be murder on the dance floor. I don't quite know what delivers Sophie Ellis-Bextor in the equity narrative, murder on the dance floor. But is this a bit? Is this a, you got to say it's so consensus, it's so stretched, or that's how it feels. Concentration risk, so long of equity, so long of Mag 7, so long of these markets. So what is it that makes you want to own equities more than it did a week ago?
I think for us, you had three big events this week. And if you were positive and optimistic like we are, you'd say, well, earnings, the price response was a little mixed, but we actually saw EPS revised higher. So clearly the underlying fundamental remained strong. The Fed tried to, play both sides of the fence in their messaging, but in the end, they're telling you they want to be cutting. And, the jobs data on Friday was exceptionally strong. You've printed on a revised basis 325K of jobs the last 2 months. You had very strong retail sales. I think, to your point, the wages is the biggest risk. But, this was a big test for markets, I think. And, there's obviously some blemishes here and there, but big picture, EPS remains strong. The Fed wants to cut, and the economy is chugging along. So in that sense, we still want to be long. And, as you know, if you have a big event and you get past that event without disruption, that removes a risk from the system, and we think that's going to get markets higher.
Listen, that jobs report on Friday, it might have reawakened the vigilantes in the bond market, but it has not, disemboweled the bulls in the equity market. They're stronger. Equity traders are a little bit stronger than those bond traders. Stuart, thank you very much. Now you can go and have a dust up on the trading floor at Citi. That is Citi's Stuart Kaiser with his very latest analysis coming up on the show. And the voters, guess what? They head to the polls in Nevada as the race for the White House heads to the West Coast.
You're the reason that Donald Trump is a former president. And you're the reason he'll make Donald Trump a loser again.
We'll have all the details on what to expect from tomorrow's vote. That's next on Bloomberg.
Nobody brings you top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
They'd made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this and has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg. Context changes everything.
I know one of the reasons you're here in Marrakesh and in Africa because you see the enormous potential this continent has as a source of renewable power for electrolysis, right? That's the process by which hydrogen is extracted from water. Tell us about Africa's potential.
Africa's potential is the best in the world, and it's Africa's shot now. It's Africa's turn. What will stop Africa rightfully taking its turn will be lack of progress on technology. Companies and governments around the world choose Fortescue because we are the world leaders in technology, world leaders in next era electrolyzer design, cables, solar, all the tech which is moving our world on from having to rely on dinosaur era fossil deposits of oil, coal and gas to simply today's era of machines which make machines to harness all that beautiful renewable energy and give all the mobile energy, all the fixed energy this world could ever need by many times. Those countries who resist that are denying Africa their opportunity. And I'm saying, stop it. Let's get in behind Africa.
From the bottom of my heart, thank you, thank you, thank you. You all are the reason why I'm President of the United States of America. You're the reason. You're the reason Kamala Harris is historic vice president. And you're the reason that Donald Trump is a former president. And you're the reason he'll make Donald Trump a loser again.
President Joe Biden on the campaign trail in Nevada this weekend. That's ahead of the Democratic primary on Tuesday. Now, the vote comes after Biden clinched the South Carolina primary. That was Saturday. Meanwhile, his Republican rivals, Donald Trump, Nikki Haley, will also face the votes in Nevada this week. This as Trump ramps up his plans for tariffs on China if he returns to the White House. Anne-Marie Jourdain rejoins me now. So, Anne-Marie, this is a weekend of rhetoric, interviews, and going back to some of the old playbooks of 16 and 20.
Right. When it comes to the former president, he gave this interview and he was asked about reporting in the Washington Post about if he would put a blanket 60% tariff on imports coming from China. This is also on top of the 10% tariff wall his campaign seems to be discussing, ring-guarding really the United States of all global imports into America. And he said, actually, it might be more than 60% when you look at those Chinese tariffs. This is something that they're discussing. We need to remember Trump likes to use tariffs and talk about them also as points of leverage, but this is something he talked about, and he actually did when he was president when it came to tariffs on China. But remember, Biden also kept that tariffs in place. But going forward this week, besides the policy, the politics will be in focus because we have a primary in Nevada. That is why President Biden was there. He's really trying to bolster support ahead of the general election in November. In Nevada, when it comes to Hispanic and Black voters, he wants to make sure that they show up and vote for him. He won Nevada in 2020, but our polling right now has Trump winning 48% to 40% in a hypothetical matchup in November.
Explain to me, as somebody that has arrived here, I'm not a voter, but the country goes to the polls. Everybody tells me it's the gas prices. Everybody tells me it's the economy, dummy. And yet we are, on a daily basis, focused on foreign policy. We are focused on on strikes in Iraq, retaliatory strikes there. We are focused on the Red Sea. And not really, you know, Friday was a very tough day, great numbers, really, really good numbers. So does foreign policy really materially impact voting in this country when you go to the polls?
Historically, Americans go out and vote for how they are doing economically, how they are feeling at the grocery store. As you mentioned, gasoline prices. But what could happen is if you have an escalation in the Red Sea that impacts crude prices, Manus, that could trickle down to gas prices.
Yeah, and we've looked at that. That's down 6% over the past 5 trading sessions. There's no war premium in that price at the moment, or escalation risk. True escalation risk, I should say. I should qualify that. Anne-Marie, thank you very much for being with me this morning. Anne-Marie Horden setting the agenda of politics on the Open this morning. Data has just crossed the terminal. Mike McKee is with me. These are the PMIs. What have we got? They look strong.
They're strong, but a little bit less strong than they were last month. The S&P Global Services PMI comes in at 52.5 from 52.9. That's a little below expectations for an unchanged number. And the global composite for the U.S. comes in at 52 even, down from 52.3. These are kind of rounding errors, not a major change. Still suggests that the economy is in reasonably good shape. Top of the hour, we get the ISM Services Index. We'll get a lot more attention than the S&P Global ones, and we'll be watching for that. We'll have that for you here on Bloomberg.
Quality of data, the lowest prices charged since May 2020. That's going to be a bit of cheer in the overall bond narrative. Mike, thank you very much. Mike McKee, those bond markets are on fire this morning. Yields are popping higher. We've got sector price action for you. Abigail Doolittle is with me. I wonder where you're going to come down, whether it's Estee Lauder or tech. Take it away.
Well, Menace, I'm going to come down on there are more sectors lower today than higher. Therefore, we have this small decline for the S&P 500. We have about 8 sectors lower, 3 higher. Starting off with those to the upside. Healthcare up about 0.8%. Tech and staples there also. Materials is down 2.2%. And when I dig into that sector, only 2 stocks are higher, whereas we have 1 stock, air products and chemicals in particular, down about 16%. We may dig into that later in the day. As for the last 5 days, this was surprising to me given Meta's big day on Friday. The 2 best sectors, or the best sector over the last 5 days, staples, that defensive sector, up 1.6%, and then communication services, barely higher, up 0.6%. And then you can see materials and real estate. Well, those are 2 of the down sectors over the last 5 days, Manus.
Yeah, that Meta move on Friday was just nothing short of spectacular and record-breaking. Abigail Doolittle side by side with me every day on the sector moves. Coming up, market moving agenda for you. It is just smorgasbord of Fed speak. This is Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Powell went on 60 Minutes and reaffirmed to the American nation, now is not the time to cut rates. In the space of 2 trading sessions, you put on nearly 22 basis points at the very short end of the curve. This is about a repricing across the curve in terms of the narrative when and how much you might get. Now, at some juncture, this rip higher in yields is going to translate in a challenge into the equity markets. Right now, it's not exactly ripping equity markets lower. You're off 26 pips. This Russell, which is the belly of America, the breadth of America, is more under pressure. NASDAQ is down, snap-cut jobs. Estee Lauder promises jam tomorrow in terms of what they're doing on cost. Your trading diary looks a little bit like this for the week. It is shy. Chicago Fed President Austin Goolsbee joins the Bloomberg team at the top of the hour in less than 4 minutes. Here, the Atlanta Fed President Raphael Bostic later in the day. We flick over to Tuesday, and if you haven't had enough Fed speak at that juncture, we've got more. Mestic, Kashkari, Collins, Harker, a quartet. And then, of course, it is UBS's numbers. What will the strategy and the earnings targets be from Sergio Motti at UBS? We get Yellen on Thursday. The Treasury Secretary testifies to the Senate, and that takes you through to Friday to the CPI revisions. What will they be? Will they be that dramatic? What's going to move the needle in terms of banking? It's the Armati interview. Can he outshine Andrea Orchel? Good morning.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, good Monday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. You're listening to Bloomberg Intelligence. Alex Steele and Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube, so you can head over to youtube.com and get your look there. Coming up, we're going to take a look at some of the earnings coming up, some big earnings. But first, we're going to speak with Chicago Fed President Austin Goolsbee. He sits down in just moments with Bloomberg's Michael McKee, and we'll bring that to you in just moments. But first, let's kick this thing off with Mr. John Tucker.
All right, and we're brought to you by Interactive Brokers. IBKR's redesigned Fundamentals Explorer provides comprehensive worldwide fundamentals data to clients at no cost. Take your research to the next level. Visit IBKR.com. Just in, the ISM Services Index coming in hotter than expected. That's the biggest part of the economy, 53.4. Maybe more importantly, the Services Paid Index way above expectations. S&P 500 15 points lower. That's down 0.3%, 49.43. The Dow down 231 points. That's down 0.6%. The Nasdaq 100 45 points lower. That is down 0.25%. Two-year yield 9 basis points higher. That's at 446. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate it. Alex Steele, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio. Big ISM numbers, right? The services sector, I know that's important for our economy, but boy, as John is just reporting some big numbers there.
So let me get this straight. The data is hot and inflation is still sticky. That doesn't feel like an economy that needs cuts at all imminently. Sort of doubling down on what Powell said over 60 Minutes, and Kashkari said as well about we can wait. They're going to have to.
I think so. I think that's the kind of the market's telling you here. Looking at the 10-year Treasury, let's look at the 2-year up 9 basis points, 4.45%. The 10-year up 11 basis points, 4.13%. So I think that's the takeaway. So this is a great time to hear from a Fed president. Huh?
Yeah, and you really see the S&P rolling over also. We're now down by 0.3%. So a little gap down now at this point on that data. So good news, AKA bad news. Are we back into that scenario now where high yields do wind up impacting stocks? Friday, we didn't have that. Are we in that place right now?
Yep, I think so. Right now, let's go and listen to Chicago Fed President Austin Goolsbee. He is sitting down and speaking with our very own Bloomberg's Michael McKee. We're going to bring that to you right now.
And good morning to all of our Bloomberg television and radio audience around the world. I'm Michael McKee. Joining me now, Austin Goolsbee. He is the president of the Chicago Federal Reserve Bank, and we can get his reaction to an awful lot of news in the last 72 to 48 hours. First, let's dive right into it with last night's appearance. Chair Powell suggested again that March would be too early to cut rates. You wouldn't have enough data to justify that at the time. Do you agree with him?
Well, Michael, you know my thing is I never like tying our hands ahead of meetings when you got weeks of data coming through. It feels like the economy's been quite strong on the growth front. You got big jobs numbers, you got big GDP numbers, better than expected. But at the same time, we've had inflation better than expected, too. If you look over the last 7 months, we've had 7 months of really quite good inflation reports, right around or even below the Fed's target. So if we just keep getting more data like what we have gotten, we're well on the, I believe that we should well be on the path to normalization.
Well, I understand you don't want to tie yourself down, but is there really much of a chance of a March move? The markets think now 18%, and some people think that's even high.
Well, look, Michael, as I say, all we need to do is keep getting information like what we've been getting for the last 7 months, where inflation on a flow basis is absolutely under control and is in the range of our Fed target. And if we keep getting strong quantity numbers, that is to say jobs numbers, GDP numbers, growth numbers, while inflation goes down, in the conventional view, that's not really supposed to happen. So that we'd have to be entertaining the possibility that we're entering a period like the mid to late 90s, where you had productivity growth faster than expected, faster than trend, and that opens up some new possibilities.
Scott Pelley of CBS last night said that Powell suggested that rate cuts would likely be a quarter, maybe a half of a percentage point at a time. That doesn't appear in the transcript. Was a half percentage point cut discussed at the meeting?
As you know, we don't report on what's discussed at the meeting until the transcript comes out. Our standard way to think of it from the FOMC is somewhat like what's in the summary of economic projections, the SEP, which comes out every quarter. And the last time that came out in December, you saw that the median member of the FOMC thought there would be 3 rate cuts, i.e. 75 basis points for the year 2024.
Is there a situation other than perhaps a recession or some sort of market failure where you would consider a 50 basis point cut?
Well, look, I just think you get the data and you respond to the data in its totality. So I don't think it makes sense to speculate about hypotheticals of what would happen to make the rate cuts be different than what they have been in the past.
3% growth, 3.7% unemployment, 2.9% PCE inflation. The Fed discussing rate cuts. Is this a soft landing? Can you declare victory?
I mean, 2023, by the measures of the dual mandate, which is to say maximize employment and stabilize prices, that was a pretty good year for 2023, one of the better dual mandate years that we've seen in some time. You never want to declare victory. The central banker's job is to remain paranoid about everything because there are external shocks. There are a whole lot of things that can go wrong. But we definitely made progress on the side of the mandate where we had been failing. You know, the inflation rate was way higher than where we wanted it to be. And as I say, for the last 7 months, we've been at or below the 2% annualized rate. So we just need more months like that.
That's in the PCE index, but CPI, especially core CPI, the Cleveland and Dallas Fed's trimmed means, the Atlanta Fed's sticky wage price index have all been running faster and hotter than PCE. Is there an underlying inflation issue that maybe your measure is not picking up?
No, I don't think so. If we get down into the weeds, the different measures of inflation measure different things. And so categories like health insurance are better tracked in the PCE measure of inflation than they are in the CPI. And the PCE measure allows consumers to adjust to the prices and change their mix of what they're buying. That's why the Fed has chosen the PCE as where they want to get to 2%. The only thing I would like to emphasize is the Fed's goal is not 2% inflation on a Cleveland trimmed mean CPI or something like that. They make clear PCE is the measure that we're trying to hit 2%, and in CPI equivalent, it's going to be a little bit higher as a run rate on that measure.
Now that you've had time to think about it, what do you make of the acceleration in hiring over the past 2 months? Optimists say it shows the economy is very strong and maybe the Fed doesn't have pressure to cut rates. And pessimists say can't be right. Seasonal adjustment factors have fudged the numbers.
Well, it is a very important category. They did not fudge the numbers. That's crazy. But the thing that I want to emphasize, when you see big prints like the ones that we saw on Friday with big positive jobs numbers, there is a tendency from pre-COVID times to say, ooh, that must mean the economy is overheating. And I just want to make clear, at periods of positive supply shocks or improving productivity that's better than you expected, you cannot look at the quantities and determine whether the economy is overheated, because the same thing that's inflating the quantities is also bringing down the inflation. So it affords new possibilities for monetary policy that are more positive than in a normal demand-driven frame. And we saw that in the mid to late 90s. And so we just got to be mindful in seeing these big, strong jobs numbers and big GDP numbers that they do not have to mean overheating in the traditional sense if the supply side is moving around.
The yield curve, and you could pick any of them, still inverted, started flattening, but then has now started inverting more again. Does that tell you anything about the economy? Supposedly, it signals a recession within 6 to 12 months, but it's been 14 months now, and so far, no recession.
Yeah, look, the thing about the inverted yield curve is a great predictor of recession when recessions are caused by the normal demand, flows of aggregate demand. But all bets are off when the supply side starts going bonkers. And we've seen that going through COVID. And now as we unwind those deteriorated supply chain, we're getting labor force participation back up to healthy levels. You can get these inverted yield curves, I think, just from the anticipation of what folks think the Fed is going to do. If the Fed is cutting rates not because of demand shocks, which is what happens in the normal times, then the inverted yield curve doesn't need to be an indicator of recession. I realize there were too many no's in that sentence. I don't think that the inverted yield curve, as a rule of thumb, is really as applicable as a recession predictor. Well, you certainly saw that in 2023. Yeah. Everyone was saying that it was very likely to be a recession, and it was nothing even remotely like a recession.
NYCB Bank, New York Community Bank, revived fears of regional bank issues last week. What are bankers in your district telling you about their situation? Is NYCB a one-off, or is it a canary?
Well, I was paid close attention to that, of course, because the Chicago Feds has the largest number of banks and financial institutions that we supervise, I believe, of all the Fed districts. The thing is, in this case, the bank had bought the assets of Signature, and that moved them up into a higher category where there's a little more scrutiny and some higher capital requirements. So thus far, that doesn't really seem like it's a commercial real estate blowing up or something like that. But of course, we're monitoring. As I say, this job of central banker is to monitor everything that could go wrong and to prepare yourself for it.
Well, one more question about preparing yourself. What are the bankers telling you about lending at this point with real rates going up, et cetera? Are they tightening credit? Are they tightening credit standards, making fewer loans, making more loans? We get the senior loan officer survey this week. What are we going to see?
Yeah, the Beige Book comes out every FOMC meeting where we talk to contacts, we talk to each of our reserve banks, talk to our own board of directors, as well as people out in the community. Over the last year and a half, you've seen a decidedly tighter credit market, for sure. Mostly, I think, just because the rates are higher. We had a fear in the spring last year with the collapse of Silicon Valley Bank and a few others that it would lead to a credit crunch. We mostly haven't seen more credit tightening than what you would expect just from the monetary policy and the rates, I would characterize. And that still feels like more of the same. And now you've had the long rates, which the Fed does not directly control. They've been on a journey. You know, they were up, then they're down, and we've fluctuated back and forth a little. Feels like credit remains tight, and especially at the lower part of the credit spectrum on both consumers, small business, and higher rate credits. They're getting a squeeze, and we hear that from our bankers as well as from the businesses themselves.
Austin Goolsbee, thank you very much for joining us. We would have called, at our age, of course, the journey of the 10-year an e-ticket ride at Disney World. But they don't charge that way anymore. Thanks for joining us today.
They don't. It's been a long time. Great to see you again, Michael.
All right, that was Chicago Fed President Austin Goolsbee speaking with Bloomberg's Michael McKee. I think the message, once again, consistent with what we heard from Fed Chairman Jay Powell last night on 60 Minutes. And then, of course, at the various comments from the other, most of the presidents. The economic data is saying they don't have to be in any rush to cut rates.
Not there yet.
Not there yet.
Not there yet, not there yet, not there yet.
And then the ISM Services number comes out today. The ISM Services PMI increased 2.9 points in January to 53.4, well ahead of expectations of 52. Gauge of prices paid surged on almost 1-year high. So it's pretty solid results on the back of this great GDP print we had last week and inflation data coming down. If you're the Fed, I think they've been pretty clear here.
Yeah.
They're just going to sit.
But then here's my question. Does it wind up pushing off cuts, though, even more? We're now market's now pricing in 4 cuts this year as for WIRP on your terminal. Do we price hikes out more, a less aggressive cutting cycle, and then does that need to be fed through to asset classes? And what does that wind up looking like?
Yeah, that's a great question. I think the market's probably going to be trying to figure that out over the next several weeks. But again, as you mentioned, the WIRP function, we were at one point just recently last week, 6.
7 or 8?
Yeah.
6. Okay, 6 or 7.
Well, 6 this year, and then spilling to early next year.
Yeah.
So that's pulled back quite a bit. But I know you tuned in to see Taylor Swift last night. John Tucker did, but he had to watch.
I was
Chairman
waiting.
Jay Powell
I was
first
waiting
on
for
60
her
Minutes.
endorsement.
Yes, exactly.
I didn't see it. Do you guys see it?
Yeah.
You watched the Grammys?
Yeah.
I most certainly did not.
Sure, I did.
Okay.
But then my bedtime's early bedtime.
Your early bedtime.
Well, I mean, it's just Taylor Swift. She won, I don't know what record of the year, I don't know whatever, but she won a bunch of awards.
Yeah.
So, but it was pretty good. I don't know hardly
She looked
anybody.
very, very surprised, which I
Right.
I have
Well,
to
yeah, there are a
question.
lot of really talented artists out there.
Yeah.
So, I mean, fair enough.
Yeah, but I was just shocked to see Jay Powell on 60 Minutes. Like, really, you're going to use one of your slots on the Fed chairman when there's so much going on in the world, and we hear from these people? And like, does
I guess
anybody
that's
watching
true.
60 Minutes really care what the Fed chairman's saying, other than
Well,
us?
I don't know. I think that's kind of the point. Like, who are they trying to reach? Like, my mom?
Yeah, I don't-
Kaylee Lines, who loves 60 Minutes, by the way. So
Right,
there's
oh,
that.
yeah,
I mean,
well,
is that really where you're going, and
Yeah, huge-
why?
Huge fan of
What's-
60 Minutes.
yeah.
So, but anyway, so we had that, and they were very cautious there. S&P 500 were off 0.6%. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. So the biggest part of the U.S. economy showing strength, the ISM Services Index beating estimates, and at the same time, the prices paid index that rose above expectations. So that's pushed yields higher. Stocks are lower. After the recent data and Friday's bang-up jobs report, Katrina Dudley at Franklin Templeton sees continued reason for optimism.
The American economy is doing well. We've been talking about Powell and about the Fed and ECB. They deserve that pat on the back because they have been successful. They've done what we wanted them to do, which is control inflation and keep people employed.
Right now, 9 of the 11 major industry groups in the S&P 500 lower. The biggest drag that's coming from materials, and that's where you're going to find shares of Air Products right now. That's down about 16%. They delivered guidance that was worse than feared. The leading stock in the index that belongs to Estee Lauder, 14% higher after announcing a restructuring that includes job cuts. The S&P 500, 33 points lower, and that's down 0.7%, 49.24 in the index. The Dow down 386 points. That's a decline of 1% right now. The Nasdaq 100, 120 points lower, and that's down 0.7%. The 2-year yield, 9 basis points higher, 445 there. The 10-year up 13 basis points. That's at 415. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
All right. Thank you so much, John Tucker. This is Bloomberg Intelligence. Alex Steele, Paul Sweeney. We are live from our Interactive Broker Studio here in New York City headquarters. You can also find us live on YouTube. We're going to tap all of our Bloomberg Intelligence analysts through all the hot topics and stocks throughout the next couple hours. They cover 2,000 companies in 130 industries worldwide. It's a lot.
Yeah,
they do a lot of work there. That business. So, that was Paul, by the way, for those of us who don't know. So Caterpillar, let's go to one of them now. Caterpillar is up by 1.3% after reporting earnings that beat analyst estimates. Now, the stock was up more, about 5% earlier, but then the whole market's rolling over, so you can't blame it for also losing some of its flair.
High, though. Stock's at an all-time high.
So really good, and I love Caterpillar, not only for the oil, mining, and gas component, but it digs and does things, and that's a really good read for what the economy is actually doing. So let's get more with Chris Cellino. He's Bloomberg Intelligence Senior U.S. Machinery Analyst joining us. All right, what is your takeaway?
Yeah, I mean, it was a real solid print, despite the fact that we continue to see these really cautionary signs out there of slowing demand. 4Q results, broadly exceeded not only our expectations, but I think CAT's internal expectations as well. Pricing continues to surprise to the upside. The margin performance was quite good, particularly in their energy and transportation business. Retail sales to end users continued to hold up reasonably well. Orders came in better than we anticipated, and the cash generation of the business, remains very strong. So there's a lot of positives to take away from the report. And I think this probably dispels some of those, concerns over a more pronounced or near-term cyclical downturn, at least for the time being, as it appears, 2024 is really shaping up to be a little bit maybe more resilient than we had anticipated going into the print. That being said, we still think there remains risk, and it's mostly to the downside moving forward here. And we're really kind of cautious on the sustainability of this performance, especially as the macro backdrop begins to soften.
So what's the company saying about their outlook? And I guess my question, A, what's the company saying? And B, what's their lead time on, how far out can they see in terms of their orders and things like that?
Yeah, so they're looking at 2024 as kind of being more of a flattish type top line environment. Caterpillar is notorious for not giving much on the guidance, but they're kind of suggesting that top line will be relatively flattish. Volumes will be down next year, so this is going to be more of a pricing story, and particularly in the first half of the year as we get some of those carryover pricing benefits. I suspect margins will come under some pressure, and we could see some modest contraction on the earnings line as well. In terms of the backlog and the visibility, it's above average. The backlog continues to be, remarkably strong. I think it was down 10%, but that's against a tough comp year over year. But you have roughly $27.5 billion in the backlog. I think one of the surprises of this report to us was implied orders only came down about 4%. So we saw the decline in the order rate moderate. So I think that's another positive sign that, we're not looking at this type of draconian type scenario for 2024.
So explain this one to me. What about the China factor? Because Air Products, as John Tucker was talking about, their chemicals business in China did terribly, and that's why the stock is down so much. I appreciate they're different industries, but still, CAT is very levered to China also. What did we learn about that?
Nothing incremental, right? So Caterpillar, China for Caterpillars, historically it's been kind of in that 5 to 10% of revenues. 2023, this past year, we were below 5%. They're telling us that they don't anticipate much change in 2024. But if you're a cat bull, I think that's one of the catalysts that you could potentially look at, is that if or when we do get this China recovery, that would certainly bode well for cat.
Hey, Chris, I know, investors in these types of stocks, these industrial stocks, they're used to cycles, and they're probably saying, but God, we have to have a down cycle coming up here, yet the stocks are making all-time high here. But there's a lot of infrastructure work out there, stimulus coming out of the U.S. government, out of the pandemic. Isn't this going to make this cycle different, like it's going to be longer up for these companies?
Yeah, I mean, we hear that this cycle is different almost all the time, right? I'm a little bit more in the skeptic camp. Listen, North America was tremendous this past quarter and this year. I think it was the only region with positive growth on the top line. We saw 11% growth here in North America. A lot of that is largely driven by non-residential and infrastructure-related spending. So it's certainly been a tailwind, and I do suspect that still has some longevity to it here over the next few years. But there's a number of cyclical factors, to your point, at play here. And historically, this stock, when the backlog starts to come down, when orders inflect, that's not an encouraging sign for future performance.
But we also have lots of stuff like the IRA, we have the semiconductor bill, we have the Industrial Act sort of reshoring, all that stuff. We have learned from industrials that getting benefits from those pieces of legislation takes a lot longer than the market was expecting. Like just in the CHIPS Act, maybe we're seeing some stuff happening, and even that's getting pushed out, like we saw with Intel. What is Caterpillar saying about that visibility?
Yeah, so I think longer term, there is certainly an opportunity, particularly what they've kind of deemed this energy transition to, alternative fuels or electrification. There is going to be demand for mined commodities, and they anticipate that this shift will increase their addressable market. So no doubt, we do think there is a longer-term opportunity here. We think it's probably still many years out before we start seeing, more tangible financial impact from some of these. Infrastructure bill is the more near-term impact that we've seen in the results this far. So we think that's probably still a little bit longer down the road, and somewhat difficult to quantify at this juncture.
So, Chris, you follow all these big industrial companies in addition to CAT. I mean, Oshkosh, Cummins, Volvo, Packard. What are those big companies that are so skewed and so exposed to kind of the industrial side of the economy? What are they kind of telling you these days?
Yeah, so if you think about all the machinery verticals, we were essentially at peak cycle in 2023. Almost all those markets, we expect volumes to be down in 24, some holding up better than others. But I think one of the things that we continue to hear is that this downturn looks a little bit more modest and short-lived than what we have seen historically. I might say the one caveat to that being on the ag side, as we continue to see crop prices and farmer incomes under pressure. But at least at this point, we see on the commercial vehicle side being a little bit more modest. And even on construction equipment, there's a number of offsets to the more traditional cyclical headwinds. So again, not looking at this as some kind of a steep or severe downturn. It just seems to be much more modest than what we've become accustomed to.
So Paul was just talking about, real quick, the record high for the stock. Attractively valued? Is that the right, how much more upside based on all of this?
Yeah, so I mean, if you think about, I think they trade roughly, 15, 16 times this year's earnings. Historically, this is a stock that's traded between 10 to 12 times peak earnings. Trough, you're north of 20 times. So it's just off peak levels. So, it seems somewhat reasonable to us relative to historical valuations.
All right, Chris, thanks so much for joining us. Appreciate that. Chris Ciolino covering all the industrial stuff for Bloomberg Intelligence, along with Karen Ubelhart. So they cover all that stuff. They got it wired.
They're huge. Yeah. I love me industrials.
Yeah.
I think they're that's where you're going to go to figure out the economy, especially for the chemicals. I was mentioning Air Products because they're like an earlier cycle kind of play. So if they're struggling, then you can realize where at areas they're struggling, that growth is going to struggle too. I think it's really important.
Yeah, I mean, you look at CAT. When I think of CAT, I think of construction.
Yep.
And when I think of Deere, I think of the farmer.
Yep.
How's the farmer doing? The farmer had some really, really good years, and when they have money in the pocket, they spend it.
Yes.
Buying tractors and stuff.
Yes, which hence for Caterpillar. Although apparently the cattle, did you know this, that there's a big cattle problem in the U.S.?
I didn't know that.
That's why beef is really struggling. Like if you look at Tyson, there's just not that much cows.
Aren't they making more cows?
No, there's not that much. There's a drought of cows.
Why is there a drought of cows?
Yeah.
Because there's a drought.
There's a drought, so there's feed and there's the cost of, I get it all kind of
in some sections of
and
the
also
country.
takes longer than replanting corn or something.
How long does it take?
I don't
to
know.
make a cow?
I don't know. John Tucker?
We
This
had
feels
a
like I should
cow
know.
on the farm.
Of course you
and,
did.
See, he knows this. I
was
knew.
not a cow fan. Not very smart, filthy animals,
But if you're a rancher,
but they taste good.
Very good. All right, S&P off 0.6%. Right now, let's head down to Washington, D.C. We get world and national news with Amy Morris.
All right, thank you, Paul. The Senate has finally taken the wraps off its bipartisan deal, tying billions of dollars in Ukraine aid to tough border policies. Both Senate leaders Chuck Schumer and Mitch McConnell support the $118 billion compromise. It still, though, faces a tough road in the House, as we learned from Bloomberg's Laura Davison in Washington.
You've already seen conservative Republicans, particularly in the House, say, look, we're not going to vote for this deal. They're egged on by President Trump, says that they should reject any deal that's less than perfect, holding out for a perfect deal. So this is where you really see election year politics playing into legislating on Capitol Hill.
Bloomberg's Laura Davison reports House Speaker Mike Johnson denies the former president is calling the shots on the issue, telling NBC's Meet the Press, quote, I call the shots. Iranian-backed Houthis vowed to respond to U.S. and British-led airstrikes after dozens of targets of the Yemen-based rebel group were struck over the weekend. An agreement to pause the Israel-Hamas war and free civilian hostages captured by Hamas now is not imminent. That, according to U.S. National Security Advisor Jake Sullivan. More on that situation from Bloomberg Opinion's Mark Champion.
Well, there are talks, going on, as we know, and they're going to be really difficult. At the moment, what the Israelis and the Americans are saying is that the ball is in Hamas's court, that the Israelis have made a proposal. It's now up to Hamas to respond.
Bloomberg Opinion's Mark Champion. The Supreme Court will hear arguments this week on Thursday about whether former President Donald Trump should be removed from Colorado's primary ballot. It is a case which will have implications for other similar efforts around the country. The argument is to keep Trump off the ballot is that he violated the Constitution by committing insurrection on January 6, 2021. Global news, 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
insights, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. In this Bloomberg Business Flash, we have yields. They are higher. Stocks are lower. Fed swaps almost wiping out the odds of a March interest rate move. And the chances of a May cut, they've also been reduced. The Institute for Supply Management's overall gauge of services, remember, that's the biggest part of the economy, increased the most in a year. And then the group's metric of prices paid for materials, that jumped the most since 2012. Meantime, you just heard from Lori Calvasina at RBC Capital Markets. She is not ruling out a pullback.
Anytime you start thinking about pullbacks in the U.S. equity market, kind of a garden variety, something that's typical and nothing to get too concerned about, would be anywhere from, say, 5% to 10%. And that's, really kind of looking at an outlier.
10 of the 11 major industry groups in the S&P 500, they're lower right now. Healthcare, the only group that's higher. And Caterpillar, the best performing stock right now in the Dow Jones Industrial Average. S&P 500, 33 points lower. That is down 0.7%. 49.24 on the index after Friday's record close. The Dow Jones Industrial Average down 359 points. That is a decline of 0.9% right now. The NASDAQ 100, 155 points lower, and that is down 0.9%. Two-year yield is 10 basis points higher. The 10-year is up 14 basis points. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Alex.
It's an ugly equity tape. This is what we're looking at. And if you report earnings that aren't great and you kind of roll over into this tape, not good. Just look at McDonald's, down by almost 4% around the lows of the session. Alex Steele, Paul Sweeney here at the Interactive Broker Studio right here in New York City, and live on YouTube, where we bring you all the best from Bloomberg Intelligence, where they cover 2,000 companies and 130 industries. So let's get to it. Michael Halen, Bloomberg Intelligence Senior Restaurant and Foods Service Analyst, joins us now. Michael, McDonald's down the most since 2022. What do you think of the quarter? What was the big takeaway?
Yeah, it was a weaker quarter than most expected, for sure. Sales growth was kind of weak. They cited the impact from the Israel-Hamas war, and obviously that hurt results in the Middle East, but also in Muslim countries like Malaysia and Indonesia, and then also countries like France that have a large Muslim population. It may have impacted sales here in the U.S. a bit as well. There were some calls to boycott the brand right after the start of the Israel-Hamas war. Those kind of went away in December and January, however. So there could have been a mild impact in the United States as well. And then in terms of key takeaways from the call, they don't expect their developmental markets where the Middle East is located to improve really until the war ends. And they cited some consumer weakness in the United States, which they have before, right? But it seems like it may be spreading in terms of, just low income consumer weakness. It sounds like their customers right now are managing their guest checks.
Hey, Mike, I'm just looking at the PGEO function on the Bloomberg Terminal, and I see that roughly 60% of the revenue comes from franchise-operated stores and about 40% from company-operated stores. How did they make that decision about when they go to a particular location, whether to franchise or own it?
I think a big part of it is return on investment, right? So if the returns on the investment are very strong, they typically want to hold on to those stores or develop stores. They'll do some store development in the United States and in their more established markets, but it's going to be a small percentage of what they're doing going forward. Most of their growth is going to be done by their strong franchise partners, particularly in China and some of these other very fast growing markets.
Talk about the input part of the situation in terms of their costs, in terms of their labor and all that kind of good stuff.
Yeah, so inflation is easing for them this year. but it's still probably higher than normal.
Cows.
They're looking at
It's cows, man.
Yep.
Cows.
That's part of it. For sure, beef and dairy costs are expected to be higher this year. So, but they're looking at low single-digit commodity inflation in the United States and abroad. Abroad had, Europe had very high inflation last year, and that's going to settle down a bit. Labor inflation is going to continue to be, higher. And a big part of that here is, in the U.S., they're California, April 1st puts in the $20 minimum wage for fast food workers. And so that's going to impact some of their stores, primarily their franchisees, however. So they're still seeing, higher inflation than, we had in the 2010s for sure.
Hey, Mike, I look at this stock and, I need to pay a 22, 23 times earnings for this stock. What am I really getting? Is it something more than GDP top line growth? What's really the call behind this kind of stock?
Yeah, well, with their global growth, they're going to probably grow higher, quicker than GDP. What you're buying with a franchise business is, pretty stable and predictable earnings growth, free cash flow growth. There's not a lot of operating leverage in the model, and so they're asset light, and so they can lever the business up and return cash to shareholders pretty aggressively. So it's definitely an attractive model, especially one with the strong top line growth like McDonald's has, and they're also, most investors consider them slightly insulated against a recession and slower economic times, and a big part of that is the value that they offer.
Mm-hmm.
During the Great Recession, they outperformed the quick service industry pretty significantly, acquired a lot of market share during that time. And so investors feel there's some safety investing in McDonald's versus some of the other restaurant chains out there.
But Mike, that confuses me with what you said about customers watching their checks and their items and what they're buying. Because you would think if things are hard and people are struggling that you would get more value and people would go to McDonald's. But you were mentioning how, in general, people are watching their money more, so they're not. How does that kind of square?
Yeah, so what we've seen is a lot of traffic deterioration over the last couple of years because price increases have been so aggressive and people's spending is being pinched, right? But the thing about quick service, they're in the lower end of the market, right? And so they'll see during an economic slowdown, they'll see higher and middle income consumers kind of fall into their bucket. They'll spend less at higher cost full service occasions, and they'll visit McDonald's more often, whereas a lot of the low income consumers will kind of fall out of that bucket and decide to opt for the grocery store more often. So they'll lose some traffic on the low end, but they'll probably gain some with some of the middle and upper income consumers.
So Mike, who's really their competition these days? When I was a kid, it was Burger King and Wendy's, but now there's so much more out there. How do you kind of slice it?
Yeah, it's the restaurant business, man. It's so fragmented. There's competition everywhere, man. To your point, convenience stores, grocery stores, food trucks, you name it. Still, primarily, their biggest competition are the fast food restaurants that are located closest to them. So it depends on the market. California, Jack in the Box is number 2. On the East Coast, Burger King is number 2 in most markets, I'd say, in the United States. Wendy's obviously is a big competitor of theirs, but also, places like Chipotle and Shake Shack, are also all competing for restaurant dollars with McDonald's. But, we don't look too closely at market share in this business because it is so fragmented. And, I don't really like total addressable market in restaurants because nobody's going to eat at McDonald's 3 times a day, 7 days a week, so.
Wasn't there a movie on that? Was there a documentary that doing that?
There was. Yeah, yes, there was.
All right, hey, Mike, we got to leave it there. Mike, thanks a lot. Mike Halen, Bloomberg Intelligence Senior Restaurant and Food Service Analyst joining us. So I had Smash Burger for the first time a couple weeks ago.
Good?
Yeah.
Yeah.
But honestly, I can't tell the difference between all these different fast food. It's all the same, right? They're all like burgers, shakes, and salads.
Yeah, but
fries.
There's different tastes and stuff like that. We'll have this conversation until the cows come home, literally.
Literally, the cow. Yeah. That one cow that John Tucker
French
hated.
fries, I'm still putting the best French fry at McDonald's.
Mm-hmm.
I'll die on that hill.
We named it Moo Moo. So you could have been eating.
Did you
my
name that as a
moo-moo.
child? I can see little John Tucker.
Yeah.
Little Johnny Tucker.
His
The
pet
farms of
cow
New Jersey.
that
I can
Alex then ate.
S&P 500 off 0.7%. This is Bloomberg.
Now, your company news headlines on Bloomberg Radio.
And I'm John Tucker with a look at some of the companies that are making news today. And let's start with Boeing, another manufacturing slip-up. Boeing has found mistakes with rivet holes in the fuselage of 50 undelivered 737s. Now, the extra time required for inspections and repair work could mean delays. Their supplier, Spirit Aerosystems, is believed responsible for all this. Now, there have been a string of manufacturing lapses at Boeing, including that near-catastrophic panel blowout last month. The Federal Aviation Administration has stepped up scrutiny of Boeing and has also capped 737 production until the quality improves. And Bellwether Caterpillar, one of the world's largest manufacturers of heavy machinery, batting away concerns of a global economic slowdown. They reported higher fourth quarter sales in the energy and transportation businesses. That helped them post a profit that topped analysts' expectations. Snap reducing its workforce by about 10% worldwide. So they're joining the chorus of tech companies that have announced fresh rounds of cuts since the start of the year. Well, Snap has been working to offset a deceleration in ad revenue, coping with the slump by cutting jobs and culling projects that are no longer seen as a priority. And then you have those videos of disastrous layoffs accumulating on TikTok. They're prompting companies to seek help in delivering the bad news. More people are sharing intimate details and recordings from workplace conversations that used to transpire behind closed doors. TikToks about getting laid off are now routinely dissected in public, from CEOs' mea culpa memos to awkwardly timed announcements. So you can see that on TikTok, I guess. You got to be kind when you lay people off.
John Tucker, thank
you. This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, looking at these markets here, the S&P 500 is off about 0.7%. The Dow's off 1%, and NASDAQ is off 0.8%. Yields moving higher here sharply. The 10-year Treasury is up 14 basis points. Let's call it 4.16% here. WTI crude oil off about 1%, $71.60 a barrel. Gold, $20,016. That's off about 1%. And Bitcoin, it's down just slightly, 42,600 for the cryptocurrency. Right now, let's head down to Washington, D.C. We'll get world and national news with Amy Morris.
All right, thank you, Paul. The White House says more strikes are coming against Iranian forces and proxies after a barrage of attacks over the weekend. National Security Advisor Jake Sullivan says the U.S. response to the deaths of 3 American soldiers is not an open-ended conflict. Norman Rule is with the Center for Strategic and International Studies.
The strategy appears to be we respond to the actions and the capacity of our adversaries. So in essence, what you're going to see is a heavy intelligence-driven program. Now, the proxies are going to hold back in the near term other than symbolic attacks because they don't really know what the U.S. is going to do.
You can get that full conversation on the Surveillance podcast. Former President Donald Trump says he might impose a new tariff on Chinese goods if elected. Bloomberg's Brian Curtis has that story.
Trump told the Washington Post he might impose a 60% tariff on Chinese imports. He told Fox News Sunday Morning Futures it could be even more.
I'm not looking to hurt China. I want to get along with China. I think it's great, but they've really taken advantage of our country, and we turned it around.
The comments add to a long list of concerns for investors of Chinese assets. Goldman Sachs has said that a Trump re-election is among the most frequently asked questions. Trump also weighed in on Nippon Steel's move on U.S. Steel.
U.S. Steel. You know what a name that is? That's the most important name. 50 years ago, there was no company like U.S. Steel. Now that Japan is buying it. I don't think I'd let that deal go through, by the way.
Donald Trump on Fox. In Hong Kong, I'm Brian Curtis, Bloomberg Radio.
Women artists were the big winners at the 66th Annual Grammy Awards last night. Miley Cyrus won her first 2 Grammys for Record of the Year and Best Pop Solo Performance. Taylor Swift also took home 2 awards for her Midnights album. And Joni Mitchell made her debut performance on the Grammy stage at 80 years old. Joni Mitchell also won Best Folk Album for her live album, Joni Mitchell at Newport. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. This is Bloomberg. Paul and Alex.
All right, Amy Morris, thank you so much. We appreciate it. Alex, my youngest of 4 is a freshman in college. He did not take the ACT or the SAT because the schools didn't require it, and his older siblings, all who had to take it, were very upset. They're like, hey, how come he doesn't have to take it? We had to deal with the stress. Well, that's because a lot of schools back in the last several years have saying we don't have to do it. Now, maybe a little bit of a switch back. Dartmouth College said it would require standardized testing again for applicants to the Ivy League college, the second elite U.S. university to reverse a trend about assessments that were halted during the pandemic. The school said the resumption is backed by evidence that it can help attract more diverse candidates at a time when colleges are trying to assess admissions after the Supreme Court last June said they can't consider race as a factor. While most elite schools haven't decided about a permanent return to testing, the Massachusetts Institute of Technology announced 2 years ago that it would reinstate the mandate.
I have a couple of feelings about this.
Yep.
One, my best friend's husband tutors for SATs, so I'm really happy for him
this is
because
good.
he was really having to try and revamp his business, and that was pretty tricky. On the other hand, I still don't really get how this is a sign of intelligence, but maybe that's just if you have 10,000 applicants, you got to find some way to weed through. I don't know. My daughter's in 4th grade, so we haven't gotten to like that testing part. They're state testing, but that's where we're at right now.
Yeah, it was. I tell you, as a parent who didn't have to deal with like managing it and the stress,
so much nicer, right?
So much better, But again, I won't see how it goes. But the move reignites the debate over whether testing helps or hurts low-income students. Testing had been criticized for favoring wealthy students who can pay
for the tutor,
test
like
prep
my best friend's
tutors.
husband.
Exactly.
Yeah,
Applications soared when colleges dropped the test during the pandemic, which had closed test centers. So we'll see how that plays out. But Dartmouth there and MIT. A couple pretty good schools as far as I know. So we'll have more coming up. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, more stuff coming. Anthony Nieves, chair of the ISM Services Business Community on ISM Services data out today. Pretty darn strong. Plus, Ben Glicklich, CEO of Element Solutions, to discuss the latest on the tech sector, including semiconductor demand. And then we're going to talk some luxury with only the very best voice out there on luxury. Deb Aiken, she's a Bloomberg Intelligence senior analyst, covers the global luxury products. I mean, some of the swag she brings home from some of these analyst meetings is pretty sweet.
We're in the wrong gig. I'm in the wrong gig.
I know, exactly. All right, let's kick this whole hour off with Mr. John Tucker.
All right, let's start off with stocks and bonds, both lower in price after that hotter than estimated economic data. Service sector, that's the biggest part of the U.S. economy, expanding in January by the most in 4 months. The metric of prices paid for materials, that also jumped, showing that costs are rising at a faster pace right now. As we look at the more policy-reactive two-year yield, that's 11 basis points higher. That's at 447 right now. Meantime, the recent rally probably going to broaden out to less expensive stocks. At least that's according to Ed Yardeni of the Yardeni Group.
I think there's lots of reasons to believe that the economy is doing quite well. I think the Fed has clearly signaled they're done raising interest rates, and they at some point may be lowering interest rates. And so and of course they're extremely cheap.
And in the S&P 500 right now, the leader in terms of index points, Estee Lauder, that is up 13%. They're restructuring, cutting jobs, and Air Products, that's the laggard right now after their disappointing results. That stock down close to 16%. Overall, S&P 500, 35 points lower. That's down 0.7%, 49.23 on the index. The Dow Jones Industrial Average, 409 points lower. The NASDAQ 100, 139 points lower, and that's down to 0.8%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Brokers studio. We're also streaming live on YouTube, so you can head over to youtube.com and search. What do we mean? Search Bloomberg Radio, Bloomberg Podcast, all that kind of fun stuff. That's where you will find us. So Alex and I were talking earlier this morning at around 10 a.m. Wall Street time. ISM released some really good services data. So let's get right to that with Anthony Nieves. He's the chair of the ISM Services Business Committee. He joins us via Zoom. So Anthony, again, the ISM Services Index came in at 53.4. That's the headline. Consensus was 52, and the last period is 50.6. Big jump there. Can you walk us through that?
Certainly. When you look at the composite index, it was driven by new orders increasing 2.2 percentage points from the 52.8 to 55.0, and employment rebounded nicely. We contracted last month in December, was attributed to the pullback. The pullback was attributed to the fact that the cycle time of hiring with the holidays and vacations and whatnot, and that rebounded nicely to 50.5, up significantly 6.7 percentage points.
Hey, Anthony, great to see you. We love this data. I love the instant analysis from it. It wasn't like all sunshine and rainbows, though. Walk us through sort of what areas of services did well, what area of services may be still contracting.
That's a great question. And you look at the composite index, and also prices were increasing 7.3 percentage points, 56.7 up to 64. Food prices still remain very strong. That, I feel, has impacted the Fed looking at interest rate cuts. Our respondents are telling us that they'd love to see continued cuts in the interest rates. But the bright side of that, there's capital spending, new projects are being released. When you look at the top 5 industries that contribute to GDP overall, real estate rental and leasing is still contracting. The increase is coming from professional, scientific, technical services, as well as healthcare, social assistance, very strong this month.
So, I mean, the services is 70% of our economy. I mean, I can't see a GDP contraction scenario coming out of, we get data like this. I mean, are you guys at the ISM, what's your economic call here?
When we look at this monthly report coupled with the semi-annual forecast, what our respondents indicated to us that the first half, especially in services, wasn't going to be that robust, but the second half was going to be better. I feel we're slightly ahead of the trend. And to your point about, GDP growth, I think, what was it, 3.3% last year? When we look at the composite index this month, annualized, it's at 1.5. And if we see the second half, as they indicated to us, being stronger, we'll have this incremental growth continue. It'll be a good story for the services sector.
So when we come to the prices paid, though, I mean, it's pretty staggering. Jumped the most since 2012. Was this a supply story or a demand story? Because we have seen a lot of supply chain snarls, et cetera.
Well, we definitely see that it's a demand issue, especially with new orders. Even though it looks like, at 55, it's middling as far as the growth, 2.2 percentage points up in the 52.8. But definitely it has some constraint on transportation, and that was indicated to us by our respondents. They said that there's challenges with the Suez Canal, with the conflict over in the Red Sea, as well as the Panama Canal. We're seeing the capacity has reduced to less than half of what it was based on the issues with being able to fill up the locks with the water shortage over there.
Interesting.
All right, so what are you looking for going forward here, just to kind of get a sense of the consumer? Is it the labor market? Is that the primary driver here, or what else kind of, from your perspective, influences the consumer?
Well, the labor market and employment, you look at it at 50.5, that's a really interesting story there. It continues the same trend and pattern that we've seen. Certain industries, they're still going through job cuts, whereas others are finding competitiveness in the marketplace and trying to recruit and hire applicable workers. But overall, it's really coming down to where is it driven from, and right now, it seems to be those 2 industries that I mentioned previously, professional, scientific, technical services, as well as the healthcare and social assistance.
All right, before we let you go, Anthony, before we let you go, is this an economy that has the risk of actually running hotter if you're just looking at the responding data here?
Not really, because looking at it at the 53.4, it's not in any risk of overheating at this point.
Hey, Anthony, really great to get your perspective. Thank you so much. Interested, Goldilocks. I mean, at the end of the day, prices pay a little bit, but this is definitely a Goldilocks story. Anthony Nieves, he joins us, chair of the ISM Services Business Committee. It's really nice to get the details of the big data points. It is moving markets. We're off the lows of the session, but we're still down by 0.6% on the S&P.
Absolutely. So we go to the sources when we can. Let's switch gears here. Let's talk about a real company out there, Element Solutions. Ben Glicklich joins us. He's the CEO of Element Solutions. He joins us live here in our Bloomberg Interactive Broker studio. We appreciate it. You're based down in Fort Lauderdale?
Yeah, Miami.
Nice.
Why are you here?
Yeah, why?
Be in Miami.
Well, because is it going crazy down there? What is it? I mean, is it just nuts with all these people coming down?
There's a ton of energy. It's a great place to live and work. For better or worse, I'm on the road 3 weeks out of the month because the business is very global.
Just for background, Paul wants to be there. He wants to move to Florida. He wants to do the show from there.
Exactly. All right, talk to us about Element Solutions. I know you guys are in. Just tell us about your company, what you do, and then we'll go from there.
Great. So Element Solutions is a provider of chemical technology that enables high-performance applications. So our materials and process solutions are used in manufacturing high-value products, from semiconductors to smartphones to high-performance automobiles.
So your customers are technology companies primarily?
So our customers are technology supply chains. We're selling to printed circuit board manufacturers, semiconductor manufacturers. It's a very fragmented below the original equipment manufacturers that make the smartphones in the cars. So we're a critical enabler of their technologies, but we're not selling directly to them.
So you're not making like plastic for the end user kind of thing either, because usually like what I love about chemicals is that really closed early cycle read on the global economy, right? Like what Air Products is doing when Relationship telling me about China. That's not you guys.
So we're selling critical components that enable performance of high value products. So we do have a read on what the next generation smartphone is going to look like. We have a read on trends in automotive and other electronics end markets.
How did you find yourself to this business?
It's a fantastic business.
I'll take your word for it, but I mean, it's not something that I would have thought about just off. You have to have been dropped in there somehow.
So better lucky than good, I would say.
Okay.
I partnered with our chairman, Sir Martin Franklin, who's been very successful building multiple different businesses. And together, through acquisitions, we built this portfolio of market-leading chemical technologies.
When I think chemical company, I don't think South Beach.
It's true.
I think like Cleveland. So, what are you doing in South Beach? Not that, or Miami. No reason not to be there. Everybody else is.
So we are there because it's as good of a place as any, and our business is very dispersed. We have 160 locations in over 30 countries, more than 60 manufacturing sites. And so my job is to make sure that our folks are working on the right things with the right incentives. And so I'm traveling as chief cheerleader to visit our people all over the world most of my time, and coming home to Florida isn't such a bad thing.
That's not a bad thing. It's a publicly traded company. ESI is the ticker. For those playing at home, it's up, I guess it's got a market cap of about $5.25 billion on a trailing 12-month basis, up about 2%, year-to-date off about 6%. What's the message you bring to your shareholders? You're in New York. I'm sure you're seeing some shareholders as well. What's the message for your company?
So this business has come off of a difficult demand environment in 2023. Electronics markets drew down significantly. The global industrial economy stuttered a little bit. And as we enter 2024, we managed 23 well, preserved profits, made some great capital allocation decisions to position the business well for growth, and our end markets are getting better. Semiconductor markets are improving, electronics markets are improving, and so we're well positioned for several years here of above cycle average growth.
Huh. Is that an inventory thing, or is it an end user demand thing? Are we just restocking inventory at this point?
It's an end user demand thing. We did have a drawdown of channel inventories post-COVID. There was a bullwhip effect. Electronics were overbought by the supply chain in 2021 into 2022. There was a big inventory clearance in 2023, and now we're starting to see semiconductor production increase. We're starting to see new smartphone models gaining traction. Our story is not just one of units. It's content per unit. And so the more technically challenging, the more robust the application, the more value for a company like ours. And so we're going to grow over and above units through the cycle. And unit growth is poised to recover nicely here.
So I'm just looking at the FA function on the Bloomberg Terminal Financial Analysis. It looks like the street's got kind of mid-single digit kind of revenue growth over the next several years, mid-teens EPS growth. So some operating leverage in your business model. Is that what you're telling investors to buy, or did you also say, hey, this is also a fragmented business, and if we see things out there to buy to maybe goose our growth rate, we'll do that? How do you think about that?
So the answer is yes.
Okay.
In the first instance, the business is asset light. It generates incredibly strong cash flows. So our moat isn't in manufacturing process. It's in technology and people. And so we don't have to invest a lot of capital in order to drive the business's growth. And then we're able to find very interesting things to do with that strong cash flow. So we've been very acquisitive in our history, and we doubled our adjusted earnings per share in our first 3 years as a public company. We set a goal to do that in 5 years. We set another goal to double it again in 5 years, and we're in the middle of that process right now. The goal is to compound EPS in the teens.
So what about the input side? Like, it sounds like you're trying to run pretty lean, but we still definitely see inflation kind of all around. Any kind of manufacturing is going to get hit by that, and I appreciate that you're sort of on a different scale. But what do you see?
So we've had inflation over the past several years. It started to stem. Big inflation in logistics.
Drop or just stop?
A little bit of both. So logistics have plateaued. They're starting to come in a little bit, but with some of the disruptions in global supply chains, we're starting to see a bit of pressure there. Raw material price inflation has slowed down. We're starting actually to see some deflation. As a company, we're able to take price from customers when our costs increase, and typically able to hold that. And so margins have gotten better in the back half of 2023, and we expect that to continue in 2024.
So you recently acquired a company a new copper science company. What is that?
So this is a really exciting opportunity. There aren't big step change breakthroughs in material science in our markets. What used to work typically works with small modifications.
Okay.
We acquired a business called Cuprion that has a product called active copper, which is nano particulate copper, that is a new mechanism to enable next generation electronics. If you think about your smartphone, its computing power is getting greater through smaller lines on the circuit board and smaller holes connecting the layers of the circuit board. And conventional material science struggles to deal with those technical challenges. Cuprion is a solution for that. So it's got huge potential. We've got great customer engagement. It's a very, very exciting story, not just for our company, but for our customers.
On a broader sense, the smartphone trough, like the electronics trough, you were mentioning sort of we had a lot of buying and then that came down during the pandemic now, and then we're sort of, have we troughed? Are we going to see a meaningful acceleration over the next, say, 18 months?
So
basically, is Paul going to buy a new phone? That's, what do you have a 12? Is this?
I'm 11.
You're 11?
It's fine.
See, okay, so speak to me about Paul.
Yeah, there's the smartphone market, we called a bottom in broader electronics in the second quarter, and we saw a recovery in the back half. The slope of that recovery is uncertain, but the long-term legs of increased technical requirements for electronics are very, very long-running. And the smartphone replacement cycle has extended, and smartphone saturation of the market is getting there. We troughed from a units perspective in 2023. We'll see unit growth in 2024. We expect that. But we're starting to gear up for the next thing. The next thing is enabled by AI, right? So more computing power proliferating around the edge of the network has very, very high technical demands. And we're not capacitated by the number of people on Earth when it comes to AI, right? The number of smartphones is kind of driven by the number of people walking around. AI, industrial automation is not capped by that. And as we get autonomous factories and autonomous cars, there's just more and more application space for high performance electronics, which is great for our company.
30 seconds. Who do you compete with?
We've got great competitors, but diverse competitors. We're the only company in our market that can speak to the breadth of electronics applications that we have in our portfolio. So we compete a bit with DuPont. We compete with a company called Atotech that's part of MKS Group. We've got local competitors in markets like Japan and China. It's a competitive market, but our ability to provide value to customers through materials compatibility and a broad product offering is unrivaled.
See, I was trying to figure out how he got to where he is. Now I figured it out.
And?
Investment banking to private equity. Then he says, screw this. I'm going to go and do it myself. And he went to like a real industry and get a real job that makes stuff. I've seen that route before. A lot of successful
real industries
folks
that make
have done
stuff is really fun.
Yeah,
that's
you figure
really
like,
cool.
I'm not just going to bank these people. I'm going to go do it. Ben Glicklich, CEO of Element Solutions. Appreciate you coming in here into our studio. It's a fascinating company. Never would have thought about it. I learned something new today. Element Solutions, you need all the chemical stuff for the tech and the chips and all that kind of stuff.
Things.
And there are people that do that for a living. That's good stuff. We appreciate it. S&P 500 off 0.5%. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Stocks retreating from Friday's all-time highs. Yields also surging as we get a raft of earnings as well. America's service sector expanding at the fastest pace in 4 months in January, so that rebounded from a lackluster showing at the end of last year. However, a gauge of the cost of materials, that flashed a warning as war in the Mideast affects shipping costs. And then you have the earnings picture. Here's the scorecard. 238 companies in the S&P 500 have reported so far this season. 59% delivered positive earnings growth. About 60% delivered positive sales growth. And Bloomberg Intelligence, this is Gina Martin Adams and Wendy Song, they write on the Bloomberg today that the S&P 500 is on track to crush fourth quarter earnings per share estimates. Right now, the S&P 500, 28 points lower. That's down 0.6%. We're at 49.29 on the index. The Dow Jones Industrial Average, 379 points lower, down about 1%. The NASDAQ 100, 114 points lower, and that's down 0.7%. The two-year yield, that is 10 basis points higher after that data at 4.47. 10-year, that's up 14 basis points. That's at 4.16 right now. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. So you can just head over to youtube.com, search Bloomberg Radio. Estee Lauder, the stock's up 13% today. That's the short-term pop on, I guess, some cost cuts. We'll get to that with our next guest. Down 42% on a trailing 12-month basis. That's the longer-term story I want to dig into as well. And we can do it all with one Deborah Aiken. She is the senior luxury analyst for Bloomberg Intelligence. She joins us from London via Zoom. You want to talk luxury, you want to talk high street shopping, you talk to Deb Aiken. So, Deb, let's start with Estee Lauder today. Good day for the company. Stock's up 13% today. What's driving the stock today?
Absolutely. It's all about, well, let's say having really impacted negatively with several earnings downgrades and misses over the last 6-7 quarters. The company positively surprised. It met its organic sales decline of 8%, not a growth, and its EPS came in slightly better, so down 20%. But the big thing is the restructure program. So it already has a restructure program in play. That didn't seem to be deep enough, wide enough, and have enough detail to it. And now they've raised 500 to 700 million of cost on a deeper restructure program to bring up to 1.4 billion through 25 and 26, mostly 25 or majority 25 weighted, so with the expectation. So that's kind of like 400 million extra on what they were expecting before, Deb, in terms of operating profitability.
What was the problem that they had to fix by doing that? Like, why is it so hard to be Estee Lauder? I thought everyone would pay $1 million for perfect skin, not talking my book or anything.
Right, the big thing over the last couple of years that we've seen, we've always known that Estee Lauder, a very premium product, and it did so well for so many years, but it had very high exposure in Asia. So we ended up a couple of years ago with a stuffed retail, duty-free travel retail area across China and some parts of Asia, which were exacerbated by South Korea also, and the issues there with the Daegu shopper. And what we found, and we'd always been saying, you know, their supply side, the way that they organize themselves, the logistics, they didn't have the hubs in place in Asia to do as much as they were doing. So they were caught short or caught overstuffed. So they had far too much in trade, and that has taken a long time to temper down and start to normalize, and we should return overall to growth this next quarter.
And Deb, let's stay with the China story, because I know from talking to you over the years and reading your research, the China consumer is just critical for luxury shopping. Can you give us a sense? Because I don't, when I walk down Madison Avenue or Fifth Avenue, I see all the European tourists back. They're back in, you know, in size. Not so much with the Chinese. What's going on there?
the big thing, very late in getting visas through, the reopening of, as we thought from the beginning of last year, reopening of travel, but the view is that travel internationally won't come back until the second half of the year. And we are starting to hear some of those luxury companies saying we're seeing more Chinese, more Asian customers in our stores. Back home, there's a lot more spending, flights are fuller. The surveys that we're doing are saying that they will travel, but a lot of that travel so far has been across Asia.
But what's interesting is that not all are created equal. I feel like you can cherry pick a couple of luxury stocks that have been somewhat immune. And I'm just wondering what those are. And I still like, and in the skincare world too, like what is that immune skincare high-end product that doesn't matter? We're all buying it anyway.
I think that, there's some huge numbers in terms of some of the brands within the Estée Lauder portfolio doing extremely well. Lots of the brands up double digit, but it's that trade that draws down. When you look at the Europe number for Estée Lauder, that's where they stock travel retail. That's where it sits in its P&L, and it's down minus 14. But actually, Europe underlying is flat, and it's the same for the North American market. Within that, there are brands like The Ordinary and La Mer, and several of the higher end brands doing very, very well, up double digit. And it's the same across. If I think about the way that actually luxury, and L'Oreal aside, L'Oreal is doing phenomenally well with a high base of its product in what it classes as L'Oreal Luxe. But let's go to some of the luxury companies and the way that LVMH and others are building sizable scale in perfume and cosmetics. That's for growth of 6 to 8% per year and very strong margin. So there are a lot of brands out there doing very, very well. But in particular, what has happened is, and stock picking, cherry picking, it's about the brands who've had the portfolio that hasn't had so much Asia travel retail, or where it's really been able to manage that. Because even if I think about LVMH, within its selective retailing, it housed DFS, duty-free stores, and Sephora. And at one point last year, they were both down, and they've now fully recovered. We're starting to see for the US some robust numbers coming through, even from that aspirational end, across luxury, across brands. It's getting a little better, but it's going to take time.
And that's John Tucker with the aspirational spending.
Do you invest in your face?
Other than maximum
What
strength,
does that mean?
Can't you tell?
I shave?
No. I invest in my face.
Maximum strength, sunblock is basically the only thing for this Irish American.
Okay, but that's a really good thing.
Yep.
I mean, you're doing something.
Sure.
I was just thinking that the only thing that I will not buy on sale is my skincare. Because it never goes on sale. If you find something that works for you, you're
stick with it.
A certain aged woman who does media and on TV.
Oh,
I will pay for it. I'm not wrong, Deb, right?
The other thing that you do is you actually, without realizing, you trade up. And right now at the moment, there are some youngsters who are under 20 who are already moving into anti-age, and the market is trying to stop that.
True.
So as you get older, you're trading up. My story, which I think I relayed to Paul a while back, was late in the autumn. I was in England, in Cambridge, and there were 3 Chinese consumers who couldn't get product from La Prairie, very high-end skincare product, which is under the house of Beiersdorf, its biggest brand being Nivea. And they were there spending over £3,000 on a little gift package of La Prairie, very high-end eye product. That was way out of my price range. And
Paul's like, what are these names? Are these real companies? What is this?
I just use Irish Spring and a washcloth. That does it for me.
We can tell.
Unbelievable. Hurts my soul. Invest in your face. This is the strong takeaway from that.
Hey, Deb, how are the luxury stock? What's kind of the luxury call here? I look at the FA function for Estée Lauder, and it looks like for the fiscal 2025, the June of 25 year, the street's looking for a big pickup in revenue and profitability for Estée Lauder. What's behind that?
That's all about that inventory. And to put that inventory in Asia into context, it's dragged down skincare in this quarter, organic sales minus 10%. It's dragged down Europe to minus 14, where underlying Europe was flat because it stores that travel retail. So it's about that inventory normalizing, and they're saying that has happened right now at the end of 2Q. So we head into 3Q with normalized level. And so therefore, if that is the case and it's better managed, we should start to see double-digit growth coming from there. And if we were looking underlying without that area, then we saw mid-single digit growth. So that's what that's about. And then also on top of this new restructuring program, and with some of those benefits to come through 25, we've been playing around on MODL on the calculator. And what we see there is around an expectation of 12 to 13% uplift to that 2025 operating profit to hopefully come through on consensus.
Hey, Deb, really appreciate it. Thank you so, so much. Deborah Aiken, Bloomberg Intelligence, senior industry analyst. So just really is the question at the end of the day. When is China wind up coming back and traveling? And we're back to that trade, which was the trade last year at this exact same time. And do we buy it this time? Do you think it's real?
I don't know. I think so. Now they're back to, we heard from the Macau and Singapore gaming companies that Chinese travelers are there. Okay, let's go a little bit further now, see if they can get the visas and the flights to come to Europe and to come to the U.S. Because, again, Fifth Avenue, you talk to merchants on Fifth Avenue and Madison Avenue, and they're waiting for that. They thought it would be a this year. I mean, a 23 event, it was not. So, but they're
I can just see Paul strolling down Fifth Avenue, going into stores Anthropology, being like, "Hey, how's it going?"
I was into my mega store getting some work done on my watch, and I did ask that question, and I typed to Deb Aiken right away. I say, "Here's some feedback from the store on Fifth Avenue, starting to come back a little bit." Over the last 3 or 4 months.
That's
so, but they're not taking over the city
in the same
some
way.
of the traffic they did in some of these luxury shopping areas. All right, right now let's head down to Washington D.C. World and National News with Amy Morris.
All right, thank you, Paul. The Senate has unveiled its long-awaited deal tying tougher immigration policies to aid for Ukraine. House Speaker Mike Johnson has called the bill dead on arrival even before the text was released. Terry Haynes is founder of Pangea Policy and says the bill is not dead.
What they're saying is it's dead on arrival because they prefer their own bill. The momentum here is much towards political and substantive, is much towards a strong bill. Certainly Biden wants that. Certainly Republicans want it.
Terry Haynes of Pangea Policy, a guest on Bloomberg Surveillance. The bill comes with a price tag of about $118 billion, providing aid to Israel and Ukraine and other foreign policy priorities. Roughly $20 billion would be earmarked to securing the border. The first procedural votes are set for Wednesday. Iranian-backed Houthis vowed to respond to U.S. and British-led airstrikes after dozens of targets of the Yemen-based rebel group were struck over the weekend. We talked about it with Mark Champion of Bloomberg Opinion, and we learned more about the risks that the U.S. may be drawn into a regional conflict.
For now, it's very clear that the U.S. does not want to escalate, and the Iranians know it. The Iranians also have made it clear they're not in for a war. That's not what they're looking for right now. For the moment, neither of the major players wants to see this escalate, so they'll do what they can to prevent it from doing so.
The U.S. and its allies targeted Houthi sites at 13 locations in Yemen, part of an effort to end the militant group's attacks on commercial ships in the Red Sea. The Supreme Court will hear arguments this week about whether former President Trump should be removed from Colorado's primary ballot. The argument to keep him off the ballot is that he violated the Constitution by committing insurrection on January 6th, 2021. They are expected to hear that case on Thursday. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. This is Bloomberg.
Sports, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
John Tucker in the Bloomberg News with this Bloomberg Business Flash. Well, after Friday's record close, the major stock averages today, they're selling off. In the S&P 500, you have 10 of the 11 major industry groups lower. Biggest drag is from materials, and that's where you should find shares of Air Products. They delivered guidance that was worse than feared, and that stock right now is down, 13.8%. And the leading stock in the index right now in terms of index points, that's Estee Lauder. That is up 14% right now. They announced a restructuring that also includes job cuts, so that's a cost-cutting move. Yields are higher. And meantime, Sally Krawcheck of Ellevest says, you know what? It's hard not to be bullish over the long term.
Well, when we do our asset allocation, we look at long-term returns that we're expecting, and they're terrific, right? The equity markets, if you go back to the early 1900s, tend to go up about 10% a year. You know, balanced portfolio 6%. It compounds.
S&P 500 right now, 28 points lower. That's down 0.6%. 4930 on the index. The Dow Jones Industrial Average down 373 points. That's a decline of just about 1%. The NASDAQ 104 points lower. That is down 0.6%. Two-year yield 9 basis points higher. That is the highest level of the year, 446 right now. The 10-year is up 14 basis points. That is at 416. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
I'm Alex Steele, along with Paul Sweeney. We are live here from the Interactive Brokers studio at our headquarters in New York. Definitely also find us on YouTube, Bloomberg YouTube/radio, something like that. That sounds like we should probably get that. A URL there. Okay. We also are looking at Bloomberg Intelligence. All our analysts covering 2,000 industries and 2,000 companies and 130 industries all across the world. Okay, so you had John Tucker talking about what's happening with the stock market and the bond market. A big reason for this is the ISM Services Index, really solid. Prices paid, really solid. Employment, higher. New orders, higher. So let's get the breakdown here on what this all means. Danielle DiMartino Booth is CEO and Chief Strategist of QI Research. Danielle, what do you make of this economy? I mean, it's really hard to see any kind of slowing. It's really hard to see sort of where that's going to come from. What's your take?
Well, I think of all of the indicators that we've seen in the last few days, the where it's going to come from part is the most apparent at this juncture. You know, one of the things that we noticed when the ISM Services report came out in December was that the employment component had dropped to 43 and change. We went, oh my gosh, that's absolutely the worst we've ever seen. Of course, this morning it rebounded back above the 50 line that separates expansion and contraction. All good and well, you say, right? Well, you look under the hood, ISM Services covers 18 industries. In November, there were 10 that had rising employment. In December, there were 7 of those 18 with rising employment in 7 sectors. In January, there were 3. And so I think we have to be very careful with the data about getting too excited about any one headline. You know, one of the things that came out on Friday in the employment report was that the headline employment had increased by 325,000. You peel the onion back a layer and you find out then since the month of February, we haven't had a single full-time job created in the United States. In fact, it's been negative 97,000 since then. So the reason I think markets are a little bit schizophrenic is because you have to keep looking left and right or you're going to get run over.
Yeah, one of the many reasons I like having Danielle on the show, because I like to just take the headline number and run with it. She doesn't do that. She doesn't allow me to do that. She says I got to peel back layers and onions and things like that. So Danielle, I think if I kind of read your very good social media profile, you're not in the soft landing camp, are you? What's your call here? I sense you're more cautious and you think the market should be more cautious.
Yeah, I do think the market should be more cautious. We have We have several signposts that show that October is probably when the National Bureau of Economic Research is going to go back and backdate the recession. We actually have one of their main indicators that they follow, which is income ex transfers, ex government transfers, adjusted for inflation. That's negative. If you look at industrial production, one of the huge arbiters of recession for the NBER, it also is negative. And in fact, we're starting to see problematic inventory build in autos. We had auto sales come in at 15.0 million seasonally adjusted annualized rate. They were expected to come in at 15.7. That was a quiet report that kind of went by the wayside last Thursday. So there are so many revisions going on. Goldman Sachs did a huge report at the end of the year that said every single month of retail sales in 2023 had been revised downwards, and that retail sales were flat on the year. I think we're having such an issue with statisticians in Washington, D.C., because so many of their seasonal analysis modeling is based off of and includes the pre-pandemic era. Mm-hmm. So by the time the dust settles, they're like, oh, wait, now that we've got everything in, or maybe we've got the smallest sample size in the history of, say, the non-farm payroll survey, once we get all of the data in hand, we were incorrect. We're going to go back and revise that down.
So I can
that's
imagine
a lot of the issues.
Danielle, this makes your job difficult, our job difficult, and the Fed's job even more difficult. So we're now looking at a little over 4 cuts priced in for this year. What do you think is legit, particularly with all this uncertainty and revisions that you're talking about, and when would it start?
Well, had it not been for the very strong tone that Chair Jay Powell voiced on 60 Minutes last night, I would be more in the camp of saying if they do start to cut rates, they will do so at every meeting beginning in May. So May, June, July, and September. But Chair Powell seems so adamant in communicating that he will be the apolitical Fed chair. He will be nonpartisan. He will not be viewed as being political in an election year. It's a toss-up, 50-50, whether or not the Fed historically has cut rates or raised rates, taken any action in the FOMC that immediately precedes the election. That would be the September the 18th FOMC. I wouldn't be surprised to see 3 rate cuts, May, June, and July, and then a pause.
Interesting. So from your perspective, Danielle, the data you look at, which is not necessarily the data that lay people like me look at, which is basically how much does it cost to fill up my car with gas, is inflation whipped in this country or no?
You know, it's interesting you asked that question because recently, Truflation, TRU-flation, which a bunch of bond traders introduced to me, they actually gave me the raw data. We ran a quick correlation. It's got a 0.97 correlation with headline inflation, the headline CPI. 2 times ago, Truflation topped down underneath the Fed's 2% target. I said, whoa, what happened there? And it was mostly led by hotels, and it was one sector. Last week, it dropped down to 1.4. 1.4%.
Yep.
And so I reached out to the founders of Truflation. I said, what gives? What was that huge swing factor? Did I miss it? Did I fill up at the gas tank for a lot less? And they said, no, Danielle, 10 out of 12 categories had appreciably large declines, meaning the disinflation that was a one-off here or there has become extremely widespread. If you've got 10 out of your 12 major categories, more than 300 million real-time prices feed this monster model per day with, again, a 97% correlation with headline CPI. I think that Powell's bigger impediment going into the second half of 2024 might be larger rate cuts than he anticipates or would like. If inflation's coming down as quickly as it is.
All right, Danielle, thank you so much for joining us. We always appreciate getting your input. Danielle DiMartino Booth, she's the CEO and Chief Strategist at QI Research, joining us via Zoom from Big D, Dallas, Texas. She was on the Fed, Dallas Fed down there years past, so great perspective there. We appreciate chatting with her. S&P 500, it's off about 0.5%. The Dow's off about 0.9%. NASDAQ also off about 0.5%. Yields are higher. 10-year Treasury up 14 basis points, 4.16 on your 10-year Treasury. WTI crude oil off just slightly, just above $72 per barrel. More coming up. This is Bloomberg.
Now, your company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom. We'll look at some of the companies we're following. Tesla shares, they're down. German newspaper reporting the German IT giant SAP, they make all that software, they're removing the electric vehicle maker from the list of its car suppliers. SAP currently has a total of it's a big fleet, 29,000 cars in its fleet, but the story doesn't specify just how many of those are Teslas. They say Tesla's price list fluctuations make planning more difficult and pose higher risk for their fleet. Coinbase Global, that also is slipping, the largest intraday drop in more than a month. Mizuho analyst writes that the Bitcoin exchange-traded funds may actually be a double whammy for the company, as it sees outflows and lower spot volumes. The hope for Coinbase this year was that the Bitcoin ETFs would actually bring more money in spot trading to the company, but Mizuho estimates outflows from ETFs that Coinbase is the custodian of have exceeded inflow by more than $1 billion. And we've been talking about Estee Lauder. They're cutting as many as 3,000 positions. This is all part of a restructuring plan to put one of the world's largest beauty companies back on track. Those shares have been jumping. In fact, in terms of index points, the leader in the S&P 500 right now. The revamp plan aimed at making the owner of the Ordinary and Clinique brands a leaner and more profitable company so it can respond more quickly to beauty trends. Yes, that is a thing, fueled by social media and invest more in its brands. Plummeting sales, in particular at duty-free shops in airports and elsewhere in Asia, have also dragged down sales and profits at Estee Lauder. And that's your company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, looking at these markets here, the S&P 500 off 0.5%. The Dow Jones Industrials off about 0.9%, and NASDAQ also off about 0.5%. The Russell, the small cappers, taking it on the chin, off 1.8%. So they had been outperforming, but here on this down day, they are underperforming for sure. Yields higher. Let's quote the 2-year Treasury. It's up about 10 basis points, 4.46% on your 10-year Treasury. All right, now let's head down to Washington, D.C. to get World and National News with Amy Mars.
All right, thank you, Paul. The Hollywood Hills and the Santa Monica Mountains face life-threatening landslides and flash flooding as the second of back-to-back atmospheric rivers is churning slowly through California, flooding roadways and knocking out power to hundreds of thousands of people. We get the latest now. Bloomberg meteorologist Rob Carolan.
Storm system off the coast of the western United States continues to bring significant rains. Looks like another 2 to 4 inches falls from San Diego towards Los Angeles and Anaheim today, while in the mountains to the north and east of San Diego and Los Angeles, we could see another 5 inches of precipitation in liquid form. Looks like some of the mountains in California will see anywhere from 2 to 3 feet of snow.
Bloomberg meteorologist Rob Carolan. California Governor Gavin Newsom has declared a state of emergency now in 8 counties. Sweden's bid to join NATO remains on hold. Members of Hungarian Prime Minister Viktor Orban's party boycotted a session aimed at ratifying Sweden's accession. Bloomberg News Hungary Bureau Chief Zoltán Simon.
He doesn't want to seem to be negotiating with Orban or to be blackmailed on the issue of Sweden's accession to NATO, which basically every other member thinks is crucial for the alliance to bolster its capability to defend NATO's eastern and northern borders.
Bloomberg Zoltán Simon in Budapest. Women artists were the big winners at the 66th Annual Grammy Awards last night. Miley Cyrus won her first 2 Grammys for Record of the Year and Best Pop Solo Performance. Taylor Swift took home 2 awards thanks to her Midnights album. Tracy Chapman made a rare appearance to sing her 1988 hit Fast Car with country music star Luke Combs. I remember when you were a child, Luke Combs' cover of Fast Car raced to the top of the country music charts last year and was nominated for a Grammy at this year's ceremony. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Paul and Alex.
All right, Amy Morris, thank you so much. We appreciate it. Amy was just reporting on that storm in Southern California. Just incredible, some of the pictures you see. And, you know, when I think of California, and I owned a home out there for many, many years, it was just drought forever. But I mean, now it's like the opposite happening over there. They just can't, the ground can't take the water here.
Well, this is what's so interesting too, is that just because you need water doesn't mean you need a deluge like this.
Yes,
and that
exactly.
extreme weather events will get much more extreme, and then how you wind up managing it. And the funny thing is, if you wind up sort of addressing that and building for big floods, then the next crisis in 50 years might be something totally different that then you're not prepped for.
No, and it's interesting, you know, I know you spend a lot of time in Southern California, but I'm just amazed that they
do.
put houses.
Do I?
Do you?
No.
I'm sure you travel. Oh, so
No.
that's me. I haven't been out to Hollywood for 30 years. But I'm just amazed. It doesn't matter how steep the hill is. We're putting not just a house, a monster house there, expensive house. And I'm like, the people, boy, you're really tempting fate. It's like, you know, people, you know, building a house right on the beach, you know. And
Well, let me ask you this question. We don't have a lot of time, but let me ask it anyway. Why do people still live in California?
Great weather.
But aside from that, like, taxes are high, your energy infrastructure stinks, your gasoline price is bananas, and then you have these weird mudslides, water stuff.
Here's the answer when I told my 13-year-old son. We started the day skiing in Lake Tahoe, world-class skiing conditions. We drove down and we met his brothers and sisters and the rest of the family on the beach in Carmel, California, same day. He skied Lake Tahoe and he got a sunset at Carmel Beach on the same day. Only in California can you do that. That's kind of, as I said to my son, he was 13 at the time, this is why the people risk mudslides.
This is
and
why you
fires.
pay $5 a gallon for gas.
They pay $5 a gallon so we can have
for that moment.
So you can have that experience. So I hope our good friends out in California are doing okay with this weather. Seeing some amazing video out of Santa Barbara, places like that usually are used to very nice weather. All right, Sound On with Joe Matthew. He is down in Washington, D.C. He's got all the DC talk. Sound On starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The border deal is out, and the U.S. launches more strikes. Welcome to the fastest show in politics with two major stories coming out of Washington today. We have both covered for you here with details on the border bill and the latest on U.S. retaliation against Iranian proxies. We'll be joined momentarily by Bloomberg national security expert Ian Marlowe, and a conversation ahead with Maya McGinnis from the Committee for a Responsible Federal Budget. Analysis from our signature panel. They're both with us. Rick Davis, Jeannie Shanzano, Bloomberg Politics contributors with insights straight ahead, all after we get a look at Wall Street. Let's bring you up to date on trading right now with Charlie Pellet in New York. Hey, Charlie.
Hi, thank you very much, Joe Matthew. We have got the Dow, the S&P, NASDAQ very much in the red to kick off the new trading week. Was a winning week last week, but right now we are looking at a loss of 22 points in the S&P 500 index, down 0.5%. The Dow lower by 363 points, drop there of 0.9%. NASDAQ down 68, decline of 0.4%. Traders are sending both stocks and bonds lower following stronger than estimated economic data and signals that the Federal Reserve is not ready to call victory over inflation just yet. The 10-year on this Monday, 4.16%, with a 2-year right now, 4.46%. Austin Goolsbee is president of the Federal Reserve Bank of Chicago. And this morning on Bloomberg Radio, our Michael McKee asked him about a March rate cut.
I never like tying our hands ahead of meetings when you got weeks of data coming through. It feels like the economy's been quite strong on the growth front. You got big jobs numbers, you got big GDP numbers, better than expected. But at the same time, we've had inflation better than expected too.
And speaking of the economy, Caterpillar shares, they're up now by 1.6% this morning. Caterpillar batted away concerns of a global economic slowdown with higher fourth quarter sales in its energy and transportation businesses, helping the global machinery maker post profit that topped analysts' expectations. Spot gold down $17 the ounce, now at 2022, a drop now of 0.8%, and crude oil up 0.3%, 72.46 a barrel. So again, recapping, stocks are lower with the S&P down 22 now, down 0.5%. 10-year yield 4.15%. I'm Charlie Pellet. That, Joe Matthew, is a Bloomberg Business Flash.
We thank you, as always, Charlie Pellet in bipartisan purple. You'd know that if you were with us on YouTube. Go there now, search Bloomberg Global News. You can always find us, of course, on the radio and on the satellite. I'm Joe Matthew in Washington. Hope you had a great weekend. We thank you for joining here on the Monday edition of Balance of Power, as we begin today with news of a third day of strikes, number 3, against Iranian-backed militias. After the United States led strikes beginning on Friday, we were with you on Balance of Power when that news broke the end of last week. They essentially have not stopped since. The U.S. leading strikes Saturday against Houthi targets in northern Yemen. Of course, on Friday, more than 85 targets in Syria and Iraq. And that's where we start our conversation with Ian Marlowe, Bloomberg senior reporter, with us here on this Monday as the U.S. pledges continued airstrikes, but nothing directly against Iran. Ian, there's a lot I'd like to ask you about here, including Antony Blinken's trip back into the region. But what are we hearing from national security circles here? How long might these strikes last?
Yeah, at the moment, everyone is sort of promising a sort of sustained or multi-tiered campaign of strikes across a variety of targets. They're clearly trying to send a message here to Iran, hitting their groups in Iraq and Syria and also in Yemen. They're trying to navigate this sort of tricky situation where they're trying to push back against this attack that killed 3 U.S. troops about a week ago in Jordan, and also responding simultaneously to sort of ongoing attacks from the Houthis in Yemen on commercial shipping, and trying to do so while not going overboard and prompting an Iranian response that sort of leads to just a sort of total spiraling out of control in the Middle East. So it's something that is a tricky thing to navigate, but the U.S. is sort of signaling now that these are going to go on for some time. And they're also saying, obviously, they're not going to telegraph anything in advance. So everyone is just sort of waiting to see how long this U.S. response goes, because it's already been much bigger than anything we've seen since October 7th, when obviously the region sort of plunged into a new war.
That is for sure. And seeing the strikes in Yemen added to Iraq and Syria over the weekend, Ian, prompting threats from Houthi rebels that they will respond. Is the U.S. expecting some sort of response here to the retaliation?
Yeah, I mean, I think they definitely are. I think they baked that in. The Houthis from the beginning of the U.S. strikes on Yemen a couple weeks ago have been sort of pledging every single time their facilities get hit. They say, we're going to continue. We're going to keep fighting back, in the name of the Palestinians, which is what they say. I think the problem for the U.S. there is that people have said there's not so much to hit in Yemen. This is a group that withstood years of bombardment from Saudi Arabia during that war, and a lot of this stuff is sort of mobile. So over the weekend, we saw the U.S. hit sort of weapons depots, underground supplies, things that were aimed at degrading capability. And administration sources were telling Bloomberg reporters over the weekend that they're actually fairly optimistic that they are degrading the capabilities of the Houthis to launch more attacks, and also trying to stop Iran from resupplying them with some of the advanced weapons that they're sending at these commercial ships too.
That's what I wanted to ask you about, Ian, in our remaining moment here. I don't know how the Houthis have anything left after the series of attacks that we've conducted here. It's got to be approaching a dozen, including last weekend, in this sort of back and forth that we've been seeing. But to what extent is the United States concerned? If we're going to focus on Iranian-backed proxies, how concerned are we that Iran will not be resupplying these proxies for the next fight?
I think that's a perfect question. I mean, I think the U.S. is not intending to change Iran's mind totally with these strikes. What they're trying to do is to deter the sort of cadence of resupply and the strikes that these groups are able to commit. I think there's a genuine sense in the administration that they don't think Iran wants a broader war. But there's also a realization that not all of the proxy groups are equal to some degree. So while Hezbollah in Lebanon is sort of being kept on the back burner and sort of protected in case Iran wants to do something more serious with Israel, the Houthis are sort of allowed to go a little bit wilder to some degree and absorb the U.S. response. There's a general sense in the sort of community of former officials that Iran doesn't care that much about the Houthis in terms of what they can withstand from the U.S. So they're much more cautious and protective of Hezbollah because it's a sort of larger and better trained militia.
Thank you, Ian. Great reporting. Bloomberg senior reporter Ian Marlowe with us here on Balance of Power as we turn from one top story to the next. The weekend of strikes also took place alongside a deal actually being struck on the border, and the text has been released. The headline on the terminal now: senators reach deal on Ukraine aid, U.S. border, but hurdles remain. And that's for sure. You've got the Speaker of the House still calling this DOA in the House of Representatives. Even conservatives and progressives in the Senate are making us wonder if this can pass the chamber in which it was born. This is, of course, the deal that we have been talking about here for weeks, if not months. The final price tag on this. We finally have the text here after talking about this for so long. $118 billion. That is more than first estimated and more than was requested by the White House in its supplemental ask. It cuts the number of migrants eligible for asylum. It changes the way claims are processed, and everyone's finding something to hate here. That's where we start our conversation with Maya McGinnis. Always fascinating to talk to Maya with the Committee for a Responsible Federal Budget, where she is president. It's interesting here, Maya, to learn that we can, in fact, reach compromise on something. Whether it gets passed is another matter. But is any of this paid for?
Well, we are right now in a moment of lots of emergency or supplemental spending, which basically means nobody bothers to pay for it. And there's a good argument that when you're talking about emergencies, it's not something that needs to be offset because it's unexpected. It's a one-time thing. You jump in, you find the money later, you deal with that later. But obviously, the border is an emergency in terms of how big of a problem it is, but it is not something we haven't known about. So there's a lot of emergency spending right now on the agenda: border, Ukraine, Israel, all sorts of different things that they are contemplating. None of these things would be offset. They would add to the national debt. And I would say that at a time when the debt is as bad as it is, even legitimate emergencies, we should try to offset those costs over a reasonable amount of time, because debt is debt. And we've got to deal with the emergencies that are piling up in the world right now, but we also have to deal with the emergency of the national debt. And you do that by paying for things.
Because it is its own emergency. Maya McGinnis, debt is debt. You're right about that. Now I see Speaker Johnson, who doesn't like this bill and says it won't even get a vote. Steve Scalise said that. He is planning a vote this week, Maya, on a $17 billion standalone Israeli aid package. Remembering he did this at one point, and there were offsets that were coming out of enhanced funding for the IRS. It appears there are none here. The Freedom Caucus is unhappy about it. So is that little honeymoon over? Now the Speaker of the House is putting bills on the floor that aren't paid for?
Well, this was a complicated one. So when they came out and said they were going to pay for the Israeli funding, that was really a great sign of understanding there are very important things we have to do. Important things are worth paying for. There's an important caveat on this one, though, which is repealing the money for the IRS doesn't actually save money. It makes the deficit larger, because all of the experts who have evaluated this say that additional dollar for the IRS actually generates more than that in terms of closing the tax gap, or the amount of taxes that are owed by corporations, small businesses, the well-off, that aren't paid. This is probably the only program that you will ever hear me say actually could pay for itself. So when you repeal IRS funding, that would be scored as making the deficit worse. So I loved the principle of let's pay for it. The one policy they picked to do so, I don't think really was the right one. But your question is more about politically, what does this mean? I think we're in a different situation with the Speaker. I think he has more leeway. I think that the members of his conference may disagree on specifics, but they understand how difficult this is, and they don't want to go through another exercise of kicking out the Speaker. So I think he's communicating with them and trying to figure out what to do. But this is really about House versus Senate, and showing who's going to have the upper hand and creating what the agenda is for what emergency supplementals move forward and what the format of those bills are.
We're going to have a lot more on the contents of this border deal and break it down coming up with our panel a little bit later on this hour. But when I look around at what's happening here, Maya, and you're looking at the same calendar I am, there's going to be discord, apparently a lot of hand-wringing and gnashing of teeth over this. But we have less than a month to figure out how to keep the government from shutting down in March. And there are a couple of other issues that need to be handled as well, whether it's FAA or FISA. We've got this tax deal that was passed last week that may not see the light of day. I guess I'm wondering if you worry that this border debate with Ukraine and Israel attached bogs us down on a level where we can't get anything else done. Are we going to shut down in less than a month?
Well, listen, I worry about everything. There's lots to worry about, but I think there's actually capacity to deal with emergency supplementals, the border, tax deals, and funding of government if we work efficiently on these things. The problem is that there is a very small group of people who are really rolling up their sleeves and working on each of these issues, and then a lot of members in the House and the Senate kind of sitting on the sidelines waiting to see what happens. So we can work in this very differently. The process is not conducive to getting things done. But to go to your first point, which is so important, we are 1/3 of the way through the fiscal year. We have not passed a budget. We have not funded the government. And from everything I can see, we are doing very little to move those appropriations bills forward. I was really impressed when the Republicans were saying, we don't want another omnibus. That's where you hide all sorts of unpaid for legislation.
Sure.
They wanted to go through the actual act of budgeting. And I think calling for that's very important. But I just haven't seen any signs that as we are only 4 weeks away from that deadline, there's any progress being made on coming up with those appropriations bills, and importantly, working out the differences between the House and the Senate, because the conversations I'm having right now, tensions between those bodies are also running very high.
Which makes me wonder, I have to ask you, at some point here, Maya, is it more likely that Joe Biden's State of the Union will be postponed because of a shutdown or canceled, or is it more likely that he'll give that speech, but Mike Johnson will not be sitting behind him?
Oh boy, that's a good one. Well, first off, each of the past could have been shut down moments. I didn't think we were going to shut down. And I was pretty confident. I'm not quite as confident this time. I don't think we're going to shut down. I don't think it's in anybody's interest. And it's a very important political year where I think people are understanding that. But there's a risk this time that there wasn't last time, because I don't think there'll be further continuing resolutions. And there is a lot of resistance to one big, fun, and contentious State of the Union. But I think it will go ahead as planned on the date.
And that, I think, we'll just go ahead and call progress if that happens. Maya McGinnis, I have to ask you about a big story here. You better believe it. I want to throw a big log on the fire while I have you in a couple of minutes that we have left. And the commentary that I saw you writing at the Post and Courier, Social Security is in trouble, is the headline. Most candidates won't admit it. This is for sure, Maya. We've been talking about this a lot in our campaign coverage. In fact, an interview that I had with Nikki Haley ended up being part of a Trump ad because she dared to answer a question about raising the age for eligibility for Social Security. Your point in this column is well taken, considering the fact that no one will touch this. It's still in Al Gore's lockbox somewhere. Will we be able to have this conversation after the presidential campaign?
Yeah, that's what I'm really worried about. And I've been actually quite impressed with all of the coverage that you all are putting out there, because this is this issue that is so political and gets politicized and demagogued, and people just are outright not telling the truth. It's very difficult in a campaign cycle for the policies to get coverage. And I have to say that I have thought Nikki Haley has talked about this issue. She's talked about some of the things that she would do that would actually close the solvency gap. And while you've had a lot of other candidates, including both President Trump and President Biden, talking about what they won't do, the bottom line is Social Security and Medicare have trust funds that are going to become insolvent. Nobody likes it. Everybody who paid into the program does not appreciate the fact that these are structurally imbalanced, but there are lots of reasons for why. And the end result is we're going to have to make some changes. There are ways we can do this that will protect people who depend on the program, that make a lot of changes that start in the longer run so people have time to plan, younger people, not current retirees. But the more they demagogue, the candidates who do demagogue, the more they do, the more difficult it's going to be to fix this program after the campaign. And I'm so worried about that, because there's no...
Come back and talk to this when we can talk about solutions, Maya McGinnis. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. 1221 on Wall Street. We are looking at a down Monday with the Dow, the S&P, NASDAQ 100 Index, Russell 2000 all trading in the red. Traders are sending both stocks and bonds lower following stronger than estimated economic data and signals that the Fed is not ready to call victory over inflation just yet. S&P now down 20, drop there of 0.4%. Dow Industrials down 332, a decline of 0.9%. NASDAQ down 50, a drop of 0.3%. 10-year 4.15%, the 2-year 4.45%. Spot gold down $17 the ounce to $20.22. That is a drop now of 0.9%. West Texas Intermediate crude oil up 0.7%, $72.80 a barrel. Bitcoin down 0.3%, 42,637 on Bitcoin. McDonald's shares are down 4.4%. McDonald's sales missed investor expectations in the fourth quarter as growth decelerated, hurt in part by the conflict in the Middle East. Among McDonald's competitors, Wendy's down now by 1.1%. QSR, Restaurant Brands International, a parent of Burger King, down now by 2.1%. Recapping, stocks are lower. The S&P down 20, down 0.4. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
Charlie Pellet, thank you and welcome to the Monday edition of Balance of Power. I'm Joe Matthew in Washington with a deal at hand. We have been waiting since before the holidays for this. This was the deal that was going to change our lives, unlock funding for Ukraine, Israel, Taiwan. Democrats and Republicans together, cats and dogs living together. But it's not feeling like that today. You might have seen Kirsten Sinema doing Sunday morning television, trying to express the virtues of this bill, the hard work done with James Lankford, Chris Murphy. We're not sure this is even going to pass the Senate now, never mind the House. So that's where we start our conversation with Jack Fitzpatrick. Our friend from Bloomberg Government is with us here. We should take, Jack, great to see you, take a moment to talk about what is actually in the bill, because it's been all leaks and hearsay until now. People are lifting stuff off Facebook, much to Jim Lankford's disappointment here. But some important stuff. We've got $14 billion for Israel, as we expected, $60 billion for Ukraine. Indo-Pac gets almost $5 billion. There's money for humanitarian aid for civilians in Gaza. And then, of course, you've got the money for the border here. This is a deal that I think a lot of folks who've been watching this, remember 2013, Marco Rubio. So this is a deal that even months ago could not have been envisioned, where they would strike a compromise like this, and they're already ready to throw it away. Is that Trump, or is there more to it?
A lot of it seems to be Trump. I mean, there was a preemptive rejection of this bill that wasn't even a bill yet by House Republicans in particular, who are more aligned with Trump, less willing to separate themselves than Mitch McConnell. Mm-hmm. There could be substantive concerns, certainly. If you are a hardline conservative and you believe that the president has the authority to shut down the border, then seeing the automatic the measures to force his hands if you're getting 5,000 people a day, I'm sure some of the most conservative lawmakers genuinely do not like this bill. Okay. But well before it came out, Trump was against it. House Republican leadership was feeling negative. The hardline conservatives were against it. This, as much as anything, shows Trump's effect and his ability to snap his fingers, and a bill has no support among the most conservative Republicans that gets to House leadership.
Amazing. So the narrative then will be for conservative Republicans, this doesn't go far enough. Not that we bailed on an opportunity to do something we've wanted to do for a generation.
It's simultaneously that it doesn't go far enough, but also now, despite the fact that House Republicans were the ones who said they wanted a bill along these lines, and that was the price you had to pay to get Ukraine aid, now it's also an insistence that this doesn't need to be legislated necessarily. This is in the president's hands, and there are criticisms of the bill, but also a criticism of the idea that it's Congress's job. So that plays into the Speaker of the House himself not proposing an alternate immigration bill. Really, the politics of this are, this is part of the presidential campaign, and it's in the president's hands.
But he passed H.R. 2. It's not like they haven't been in the business of
And yet,
lawmaking around the border.
For a while, you heard, give us all of H.R. 2.
That's right.
Now, much of the conversation in the House revolves around Trump. And, I mean, just
we don't
yesterday,
need a bill after all.
Just yesterday, the Freedom Caucus was saying, among the things they're talking about, we could do Israel aid, but we've got to offset the cost.
Yeah.
There's not an active counter-proposal, despite the H.R. 2 talk that's been going on for a while at this point.
I can't imagine what it's like to be one of these three negotiators here. Jim Lankford especially. Here's your Republican, stuck his neck out to get this done. And he's being embarrassed by his colleagues. The line from Lankford, I'm a little confused at how it could be worse than expected. How does he rationalize the reaction that he's getting here, having been talking with his Republican leadership through this whole process?
Well, there's a big difference, one, between Senate Republican leadership and House Republican leadership, and this is negotiated on the Senate side.
Does he feel abandoned?
I doubt he feels abandoned by Mitch McConnell.
Yeah, right.
He knew for a while that the pressure was building. You could absolutely tell that there was a growing gap between the Senate and the House Republicans. This wasn't a surprise. It's been a forceful pushback from the House, but he has not been abandoned by Mitch McConnell. He hasn't been abandoned necessarily by the Senate. It was a little surprising or notable to see some pushback. Steve Daines opposes it,
yes,
a leadership-aligned senator. John Cornyn, a former Senate Republican whip, says he has concerns in a statement to our colleague Eric Wasson. So it's getting toward leadership. He has not been abandoned by Mitch McConnell, but this is kind of highlighting the ways in which McConnell is not in line with all leadership-aligned Republicans in both chambers.
If Cornyn ends up saying no, is this over in the Senate?
That's a terrible sign for your ability to get 60. There are already some bad signs. It's a tougher hurdle in the Senate than I think we initially thought.
Well, so, my question for you would be about the House, but let's talk about that. What are the odds this gets 60 votes?
Chuck Schumer has said they're going to have the first procedural vote no later than Wednesday. They have teed this up to hold a vote, to have something that they see as a real bipartisan compromise. Again, if you're seeing Cornyn saying he has concerns, Daines saying he is a no, it looks tougher. It used to be, maybe they could get 60 votes in the Senate and the House is looking really rough. Right now, it's a high hurdle to get across the Senate. We haven't heard anything about them canceling plans or giving up yet, but it's a tough vote in the Senate for sure.
The statement from Speaker of the House as we go to the other chamber, I've seen enough. Thought he was about to call a race for the quick political report. I've seen enough. The bill is even worse than we expected, he writes, and won't come close to ending the border catastrophe the president has created. As the lead Democrat negotiator proclaimed under this legislation, quote, the border never closes. He's referring to something Chris Murphy said about this idea that if we reach a certain threshold, whether it's 4,000 or 5,000 crossings a day, that would trigger an automatic, quote unquote, closing of the border. What does that language actually mean?
This almost takes us back, effectively kind of takes us back to the pandemic era restrictions. There's been a lot of, a long legal series of questions about how much the president has in which contexts to restrict people from coming across the border, even if they're claiming asylum, and how quickly you can kick people out if they do arrive here. So it is, in the view of the negotiator, the closest you can come to closing the border. One of the issues that conservatives has is this forces the president's hand if you're averaging 5,000 people coming across the border a day for a week. It gives him the option of doing this if it's at 4,000 a day. If you believe that the president has unlimited agency to close the border without citing a new law, then you believe that this is unnecessary.
Fine.
That's a tough legal question, and
sure
it's not taken as a given.
And we've heard it plenty of times on this broadcast. Just go back to Remain in Mexico, put Title 42 back in, and we live to see another day.
How do you put Title 42 back in? You have to negotiate a Remain in Mexico policy.
Yes.
This is a compromise
Those
that
are
gets
not
toward
just
that.
EOs, though, to your point. You can't just sign that and it happens.
I'm sure there is a lawyer who says that you can, and I believe those are the lawyers that the most conservative lawmakers are talking to, and that has led a number of lawmakers to say it's not Congress's role.
Amazing. All right. Jack is here, so I have to ask about a possible shutdown. We haven't talked about appropriations in a real way yet. Maya McGinnis just told us a little while ago she's getting a little more concerned that we might not meet this deadline on the 1st of March. How about you?
In terms of the timing, they can do it. The appropriators I've talked to, which include most of the subcommittee leaders who are going to have to write the bills, say they have time. There are tough issues. One big stumbling block is they don't have any kind of framework agreement on, are we putting major policy changes off the table? Usually when they strike a deal, they have a handshake deal to say, we're not getting into the Hyde Amendment and abortion restrictions. We're not getting into any big policy questions. They don't have an agreement there, but they still have time. They have numbers. They can negotiate these bills. If the will is there, it is possible for them to get a deal. But Congress has been absolutely crazy for a year or so.
If this doesn't happen, does the State of the Union get postponed?
Not necessarily. I mean, by scheduling
that's a partial
right
shutdown
in the middle
that
of it,
week, right? Yeah.
The
1st and the 8th. The State of the Union would be on the 7th, I believe.
The 7th.
So maybe he threads the needle on that.
If you're the president and you're fighting with Congress that much through a partial shutdown, you may want to give a joint address.
Sure.
They've given joint addresses. They've had State of the Union addresses at some pretty crazy times. It was basically the beginning of the COVID pandemic. It wasn't a pandemic yet. So not necessarily, but the 1st being a deadline, the 7th being the State of the Union, the 8th being a deadline, and the 11th being when the White House wants to send their next budget proposal is a wild, wild march.
Can we add Super Tuesday?
Oh,
is on the 5th that
too.
week. Who's counting? Don't take that week off, Jack. Great conversation. Thanks for bringing us up to date. This is a lot of important stuff that you're not going to hear about in most areas today, because we try to take the deep dive on policy and let you know as much as we can about it. We'll have more straight ahead with our panel, Rick Davis and G.D. Shanzano, after we check world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hey, Nancy.
Thanks, Joe. U.S. officials are pushing for an extended pause in fighting between Israel and Hamas to allow for more hostage releases from Gaza. U.S. Secretary of State Antony Blinken is back in the region, though Biden officials do say the prospects for a deal are not imminent. We get more with Julie Norman, co-director of the Center on U.S. Politics at University College London.
Antony Blinken is back in the region this week, trying to lean into that deal even further and try and get it across the line, even though I would say that there's still a lot of ways to go there. But that really will be, I think, the linchpin in diffusing the rest of the conflicts in the region, is if there can be some kind of ceasefire, temporary or otherwise, in Gaza.
That's Julie Norman with University College of London speaking with Bloomberg. A second atmospheric river in a week is bringing severe flooding to Los Angeles, triggering mudslides in and out of Malibu. Wind gusts in Sierra, California are reaching 60 to 70 miles an hour, knocking down trees and power lines. Hussein Ahmed was in Sacramento when the storm hit.
Out of nowhere, a big gust of wind came at 60 miles an hour. And a tree toppled over, hit my car.
Downtown Los Angeles saw its wettest day in nearly 20 years yesterday. Music's biggest night is in the books. Taylor Swift made Grammy history with her 4th Album of the Year win for Midnights.
All I want to do is keep doing this. So thank you so much for giving me the opportunity to do what I love so much.
Miley Cyrus nabbed her first ever Grammy for Record of the Year. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are looking at a down day on Wall Street, off session lows right now with the S&P down 10 points, a decline of 0.2%. Dow Industrials down 261, drop there of 0.7%. The Nasdaq Composite Index down 14, a decline of 0.1%. 10-year 4.14% with the 2-year that's yielding 4.44%. Gold down $15 the ounce, down 0.8%. And West Texas Intermediate crude 73 even a barrel, up by just about 1%. America's service sector expanded at the fastest pace in 4 months in January, rebounding from lackluster showings at the end of 2023. And with more on the story, here's Bloomberg's Vinny Del Giudice.
New orders led the way. Service industry employment also perked up a bit. However, a gauge of the cost of materials flashed a warning as war in the Middle East affects shipping costs. Carriers are rerouting over longer distances. The service sector data are compiled monthly by the Institute for Supply Management. Vinny Del Giudice, Bloomberg Radio.
Novo Nordisk has agreed to buy 3 manufacturing plants for $11 billion to help it meet surging demand for the obesity drug Wegovy and diabetes shot Ozempic. Novo Holdings also agreed to buy the owner of the assets Catalent in a deal with an enterprise value of $16.5 billion. Novo, the ADR, is up by 3.6%. Catalan now up by about 9.5%. Recapping, stocks are lower. We are off session lows. S&P down 11 now, drop there of 0.2%. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
All right, Charlie, we thank you and welcome to the Monday edition of Balance of Power here on the radio, the satellite, and on YouTube. I'm glad to say Kaylee Lines is back and will join us next hour as we add the audience of Bloomberg TV to the mix here with a lot to discuss today. As I've been telling you, we're following 2 major stories. One is a border deal that we've spent quite a bit of time on here so far this hour. Text did emerge last night from the Senate, where negotiators must be scratching their heads because we're told this thing might not even pass the Senate, never mind the House, where it has been declared DOA. The other story, continued airstrikes, a 3rd day of strikes now against Iranian-backed groups throughout the Middle East. As we add Yemen to the list now, it was Iraq and Syria Saturday and Friday. When it began Sunday, we add Yemen. And there are questions about how long this might last and what impact, if any, that it will have. Remembering the reluctance that the administration has, for many good reasons, to strike Iran directly. Let's assemble our panel. It's been a busy weekend. We have a lot to discuss with Jeannie Shanzano and Rick Davis, Bloomberg Politics contributors. Rick, you've been around this border debate for a long time, and I'm looking forward to your insights. But I'd like to hear from both of you here on the strikes that appear to be continuing and the reluctance to hit Iran directly. Jeannie, is the administration taking the right approach here, because the president's being criticized from the right and the left?
Yeah, he is being criticized. I don't think any of us could argue that the first wave, at least, was very tough. I mean, to hit 85, 86 sites simultaneously is impressive. And so we have to say that that was a show of force. I think where I have some qualms about what is happening is in a different area, and that is in the failure of the president to come out publicly and explain what we are doing. The power of the presidency is limited. The power is the bully pulpit, number one. Richard Neustadt told us that a long time ago. He's got to use that and explain to the American public, not just the investments you're talking about, immigration and Ukraine, all that stuff, but why we have entered a war, why we are hitting back. And to say in the toughest language possible that when you hit U.S. citizens, especially our military folks, we will hit you back tough. So I think that's the part of it that concerns me more than actually the first wave or now the second wave of attacks themselves.
I had a feeling you might say that. Rick, I wonder your thoughts on whether Joe Biden needs to talk to the American people. Wouldn't Friday have been a good time to maybe have an Oval Office address before everybody went home for the weekend, explain what is happening and why?
Yeah, I understand. You know, he was at Dover to receive the remains of fallen service members. And frankly, that's the highest national priority we have for president. But yeah, I don't disagree that there needs to be this administration's more aggressive articulation of the plan. Frankly, he could have done it on Monday. He indicated to the world, including to the Iranians, that he was going to hit these targets. They just didn't know where. But it was plenty of time for them to move strategic individuals out of the way of fire. And that's the part I don't understand. We gave 4 days for the Iranians to react to what they knew was coming. They just didn't know when. So I agree with Jeannie. I mean, 85, different, targets in 11 different locations. That's a great show of force. But the reality is, how many of them were in empty parking lots that had been long since abandoned because we warned them so much in advance. So this is the parts of this whole equation that I don't get. And the sites we're hitting are very similar to the sites we've been hitting for months. These are repeated attacks on these groups that hasn't resulted in a change of behavior on Iran.
You also wonder how quickly Iran might be able to resupply them. Enter Anthony Blinken, Jeannie, the Secretary of State, traveling, and this is the latest trip now, number 5 since October 7th. Saudi Arabia, Egypt, Qatar, Israel, and the West Bank. What's the purpose of the trip, if not just trying to keep everybody on the same page here while we're, I guess, escalating this, if I can use that term? Or is he there to talk about a ceasefire in Gaza?
I think it's all of the above. He is engaged in shuttle diplomacy. I think the president's team, from Anthony Blinken on down on this, have been spectacular. But they have to, again, share what is going on with the American public. I mean, when you ask people, quite frankly, what is the Biden administration interested in vis-a-vis this issue? They talk about de-escalation. And that is an absolutely valid idea. But if we are hit and you're going to hit back, then you need to come out and say that. And, another thing I would wish the administration would do, and this gets back to Anthony Blinken's trips, is they would also talk about the American hostages that are still being held by Hamas. You take 2 weeks to negotiate with Hamas. That doesn't come through. We believe it may not. Hopefully it does. But what are you going to do about that? We hear very little from this administration about those prisoners or hostages rather, and we should hear about them every day and what they are doing to get the Americans over there and, quite frankly, all the hostages back.
Well, it's a great point, Rick. None of this would be happening. We wouldn't be talking about Yemen or Iraq or Syria, at least not to the extent that we are, if it weren't for what's happening in Gaza. Is that Secretary Blinken's top goal, to find another truce, if we can call it that, a pause, to try to get these 100+ people out?
Sure. It's a very traditional ceasefire for hostage deal, and that should be his highest priority. That's his job. He's not the combatant. You have an entire Department of Defense to inflict pain on our enemies. But his job is to make sure that we secure the well-being of our people and those who are other people who have taken it hostage. And the might of the U.S. in its diplomatic capabilities is pretty significant. So he needs to use that might to try and get a deal. And if that deal can last the test of time, in other words, longer than a couple of 3 days, then maybe cooler heads can prevail and we can tone it down in the conflict zone inside of Gaza to the point where we could actually get our people out and stabilize the region a little bit. There's no question that part of what has facilitated these attacks is the ongoing fight in Gaza. And right now, the diplomatic road is the only way that anybody can see that ending in the short term.
We've only got 1 minute left here, Jeannie. Should the president prepare to ask Congress for authorization for continued strikes?
Yeah, I mean, he's going to have to deal with that. I don't think that is imminent right now. But what I do think he should be talking about again is what he is doing and why. And he needs to say it not just once, but repeatedly. What is his plan in the Middle East and why is he hitting back? And to remind the world that when they kill U.S. military folks, he is going to strike back hard. And de-escalation should not be the first word out of everyone's mouth when they talk about his plan.
Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors, in the pocket here this day off the weekend with a lot of news to talk about. We're going to look at the campaign trail ahead with Rick and Jeannie, and we will get their take on this border deal that seems to be getting everybody upset outside of the 3 people who negotiated it. I'm Joe Matthew in Washington. Kaylee Lyons is back today. She'll be here in hour 2 of Balance of Power, so stay right where you are on Bloomberg.